من خبراء ومناقشات حوارية وفرص للتواصل مثل تقنية البلوك تشين والابتكارات في التكنولوجيا المالية والعملات الرقمية والاستدامات في التمويل ودور الذكاء الاصطناعي في هذا القطاع. كما أن هذا الحدث هو فرصة رائعة للتواصل مع المهنيين في هذا المجال، سواء كان هناك لتعلم شيء جديد لتبادل الأفكار أو لتوسيع شبكة العلاقات المهنية. نذكر الجميع بأنه سيتم الحفاظ على التركيز على التعلم والتعاون. لا يسمح بأي نشاط تداول خلال الحدث، والبرنامج يبدأ من الساعة 9 صباحا ويستمر حتى الساعة 6 مساء، مع استراحة غداء من الساعة 12:05 إلى الساعة 1 بعد الظهر. وفي خاتمة اليوم سنحتفل معا في حفل جوائز ويكي الساعة 5:30 مساء. وختاما ندعوكم للانضمام إلينا في حفل ما بعد الحدث في قاعة النجوم بفندق شانغريلا دبي بالساعة 6:30 إلى الساعة 7 مساء. أتمنى لكم مليئا بالإلهام والتعاون. Once again, thank you all for being here. We are excited to get started to make today an unforgettable experience for everyone. Let's dive and enjoy the Wiki Finance Expo 2024. Ladies and gentlemen, we will begin soon. Thank you, and I wish you all a great day.
All right, so we are excited to kick off today's session with the first keynote speech of the day. I hope you guys are all ready. So please join me in welcoming Mr. Braden Perry, Archie Tabor at NFA and Fintra and partner at Kenny Harts Perry, LLC. He will be addressing the important topic of navigating the regulatory landscape, enforcement, and emerging finances. Unfortunately, Mr. Perry is currently engaged in other matters and is unable to join us in person, but he has recorded a kind message video for all of us. So let's watch the video.
Virtually with this crowd, and I'm a government investigative attorney working in a number of different areas, including financial innovation. I also do white-collar criminal defense, defend those who run afoul of the regulations that we see more and more often. Here today to talk a little bit about enforcement and evolving technology. It's one of the areas that I work in most often, along with defending companies and working with the companies to ensure compliance. I'm also at NFA, which is the National Futures Association, and a FINRA arbitrator. Before working at Kenny Harts Perry, I was a senior trial attorney at the Commodity Futures Trading Commission, one of the main regulators that work in this area in the United States. And in my time there, I spent many hours working with the SEC on ways to streamline enforcement. I was there during Dodd-Frank, 2008 financial collapse, and it was the age that the CFTC and the SEC were taking control of all these derivatives, all these new products, all of these things that they had never dealt with before. I worked with a number of people at the SEC, a number of people at other regulators on how best to tackle this new product line and work with those that were in the industry, and never really had any good answers because, as we'll discuss in a little bit, innovation at times, they could be traditional innovation, financial products, all the different things that got the economy in trouble back in 2008. Those evolving things, and in that case it was financial products, moved faster than regulation. That's what we're seeing today. There is so much innovation, so many good products, so many great ideas that people are trying to do that once they see the potential roadblocks ahead, and that's what the regulations at this point in time are. They are roadblocks. They aren't guardrails, they are roadblocks. Once they see these roadblocks, they navigate away from what they were doing and focus solely on trying to comply in a world that's, for lack of a better word, uncertain. So back to where I began. CFTC enforcement. I worked with federal prosecutors, federal regulators, the federal regime on prosecuting and investigating different crimes related to the Commodity Exchange Act. That act is very broad. It covers a number of different products. I mean, you name it, a commodity, likely, the definition of commodity within the Commodity Exchange Act, your product will fall within it. And that means at some point in time, the CFTC has a touch on that product, whether it be their very broad anti-fraud related mandates, or whether it be very technical details on disclosure requirements for products. The CFTC has quite a bit of power when it comes to the regulation of a number of different things, including financial innovative products. The CFTC right now, it's like any other agency. What it does is it obviously has a mandate to protect consumers, to protect the markets, to do the traditional things, but it's also expanding jurisdiction and trying to cover activity that is moving frankly faster than regulations can handle. And so you'll see this, and you've seen it. It hasn't been hidden. There's always been some sort of a divisiveness between the CFTC and SEC on who controls what. The CFTC and the SEC obviously have been engaged for the last, frankly, 10 years on who controls financial technology innovation. Whether it be Bitcoin, whether it be blockchain, whether it be NFTs, whether it be all the related areas, and you can think of many that come into play. Is it a commodity? Is it a investment product? Is it, frankly, the IRS? Is it property? What happens along those lines? Who controls what? That's been a question forever, and I'm not going to answer that here today. I don't think many people can, and that's where I'll keep this whole discussion broad about how best to navigate in the area of uncertainty. When I started Kenyon Perry Law Firm, I started in 2011. Before that, I was a chief compliance officer for a financial firm in the Kansas City area. I managed traditional RIA compliance, broker-dealer. I set up a broker-dealer. I've got securities licenses. So I've worked a lot with both FINRA and the SEC on a number of different things. As I said before that, I was a senior trial attorney for the Commodity Futures Trading Commission, so I worked with the CFTC on a number of things. When I started Kenyon Perry in 2011, it was meant to be a boutique law firm for a small to mid-sized company to come and be able to discuss innovation, to discuss their challenges, to try to get through the regulatory schemes. And so I focused solely on highly regulated companies, whether it be traditional financial companies or in this case, and mostly the folks there today at the WikiEXPO, are innovative financial companies and those that are interested in innovative financial issues. My first case in the area was roughly 10 years ago, and I dealt with a Bitcoin mining manufacturer. They had a small business, a very successful business. They were providing a new product. In this case, they were standalone Bitcoin mining machines. At the time, Bitcoin had been mined from graphic cards, those types of things, and this was a new technology. And they were successful in what they did. They had a client base that was buying at a regular pace. About the time complaints started coming in from consumers, the price of Bitcoin was rising. And those that wanted to get this new technology, there was a delay in manufacturing. They had too many customers. They had all these different issues of a small company becoming much larger much quickly. And they couldn't keep up. They had inquiries from attorney generals. They had inquiries from the FTC. In the end, they were sued by the FTC. And they went through a number of different things, regulatory issues, litigation by customers, all of these things, because the technology that they were building advanced too fast. And the technology behind what they were building also advanced too fast. The Bitcoin prices were rising. They had this great product that would beat the rest of the customers. They had a product that was very successful, but in the end, because their innovation advanced regulation, it became an issue for them. And focusing on a number of clients that have come to me, and they're like, Braden, how can we get through the regulation? This is what we want to do. We want to do X, Y, and Z. We want a dedicated exchange that we can do a number of different, very novel, fun type of issues for people to be able to buy and trade different things. And my answer to them is this is an awesome idea. Unfortunately, in the United States, there's regulatory regimes that are extremely broad that will likely cover this type of product, and you'll have to deal with that. And they're like, what's the cost? I tell them, generally for compliance related to exchange related issues, it's extreme. These are small, innovative companies, entrepreneurs, those that don't have a 7-figure legal budget, that are just trying to get to market in an idea that they have. And it's being stifled at times by an uncertain regulatory regime. It's one of the challenges that technology that disrupts things are facing. So all of these companies, some have been successful I've worked with, some have just thrown up their hands and said, I'm done. I can't spend hundreds of thousands of dollars on compliance-related issues, and have moved on to the next project, maybe outside of the technology space, and that's unfortunate. So, how do you respond? How do you maintain an edge in a regulatory world that is stifling innovation? It's a question that I get asked quite a bit. Unfortunately, when there is innovation exceeding regulation, regulators go back to what I call is regulation by enforcement. It's not my term; it's a term that's out there, and it's something that's very scary to innovators, because you can work through a regulator's structure by being open, being honest, being transparent with that regulator. Here's what I want to do. How can I do it? That's not, unfortunately, the world that we're living in at this point in time. Regulators won't answer questions. They won't approve things. They won't give you a green light. And so you're speeding through a yellow light at this point in time. And you don't know if there's a cop next to you and he doesn't like that you're going through that yellow light. He doesn't like the fact that you may be speeding. He doesn't like the fact that it may turn red. And so he's going to pull you over, and he's going to try to find a way to give you a ticket. And unfortunately, that's what the regulators are doing these days. Regulation by enforcement. There are companies out there, and I've worked with some of them, that have done everything they can to comply, everything they can to be transparent, everything they can to be innovative in a world of uncertainty, in a world of regulation. And you know what sometimes they get? They get a CID, a demand letter, a subpoena for information. Sometimes they just get an enforcement action. It's one of those things that these companies will have to face. I don't want this to be all doom and gloom, because there are some companies that have done this very good. So what do you have to do to be innovative in a regulatory world. I think the main thing that I'd recommend is to be as transparent as possible. Although the regulators may not give you the green light, that transparency in defending any sort of action is key. You don't want to hide the ball. You don't want to try to slide through the regulations. You want to acknowledge them, know that there's a road block ahead of you, and try to get around it in a way that makes sense from the regulatory point of view. Also, engagement. I think that the industry itself needs to engage the regulators more than they have. At times there's kind of a hands-off relationship. That's not going to be the case, because if there is rulemaking and when it comes down, if there isn't industry say-so, it's going to be a stifling rulemaking that likely will curb some of the innovation that I see out there today. So I guess my takeaway points for this discussion, and I wish I could have some question and answer, because I love that. But the takeaway that I think that I have here is, one, transparency, or two, make sure you don't give up on the innovation that you may have, and three, as an industry, work together to hopefully craft and frame what will be future regulations, future rulemaking, and future enforcement to cover the nefarious behavior and to advance innovative behavior. That's something that I love to watch my clients that have great ideas move that forward. And unfortunately, at times it's been very difficult for them, but there's a path forward and there's a way to do it. So hope this has been at least a little bit enlightening, and I hope to see you all at the next event. Thanks again.
Ladies and gentlemen, I hope you guys enjoyed that. We're about to start an engaging panel discussion. Are we ready for that? Are we all awake? Are we all happy to be here at the Wiki Finance Expo? Yeah, I love your energy. Please keep that up. So like I said, we're about to start an engaging panel discussion on a critical topic, ladies and gentlemen. It is new forms of financial crime and cutting-edge practices in anti-money laundering, the dual-wheel drive of regulatory policies and technology. We're thrilled to welcome our distinguished guests and panelists. Najma Noor, journalist at Bean Crypto. Round of applause, ladies and gentlemen. She will be moderating the discussion. We have Naushad Khadoun, lead trainer at FSI Mauritius. Hafid Ajmi, partner in regulatory and financial crime compliance, leader at PwC Middle East. Sebastian Hain, CCO at Mantra. And one more time, ladies and gentlemen, a round of applause for this panel discussion and our panelists.
Thank you. Good morning, everyone. I'd like to extend a warm welcome to all of you for joining us today at WikiEXPO. My name is Najma Noor, and it's an absolute privilege to be here moderating this panel discussion on new forms of financial crimes and cutting-edge practices in anti-money laundering, the all-wheel drive of regulatory policies and technologies. So today we will be diving deep into the emerging risks and the ongoing battle between innovation and regulation in the financial sector, especially as it pertains to cryptocurrencies and decentralized finance. I'm also excited to be joined by an exceptional group of experts who bring unique perspectives on financial crime, anti-money laundering, and how technological innovation are shaping the future of compliance. Our amazing panelists, welcome all of you. And to start, could each of you introduce yourself and give us an overview on your background and your expertise in financial crime prevention?
Thank you very much, Mrs. Najma. Good morning, everyone in the audience. Good morning, dear panelists. My name is Naushad Kidden. I'm from Mauritius, so I have spent 12 plus years working for the financial services regulator in Mauritius, and I also spend a lot of time training compliance officers, compliance professionals in the Mauritius International Financial Center. I have the chance to engage a lot and contribute a lot when it comes to building the compliance culture. And I look forward to interacting with the rest of my panel members and to potentially answering questions from the audience if we have time, don't we? Thank you.
Thank you. Good morning, everyone. My name is Hafed Ajmi. I'm a partner in PwC. I'm leading the regulatory and financial crime space in PwC, and I'm also the leader of the virtual assets compliance, where I'm working with the banks in the Middle East and a financial institution on all the matter related to the financial crime and virtual assets. I have been for the region for quite a long time, since 2011, and before that in North Africa and in Europe. So happy to join on this panel and provide insights on all the matter related to virtual assets.
Thank you, Hafid. Sebastian, please.
Yeah, good morning. My name is Sebastian Heiner. I'm originally from Germany and started my career in TradFi at KPMG and Credit Suisse, working with traditional regulators. And after that went into crypto and fintech, worked for eToro and Ember Group and helped them with their licenses in Europe and in Germany. And yeah, now I'm freshly arrived in Dubai and working for Mantra Finance as a Chief Compliance Officer. Thank you.
Thank you. Ikaro.
Hello, everyone. Good morning. Good morning for my colleagues, panelists. It's a pleasure to be here with you. My name is Ikaro. I'm a lawyer, and I'm providing legal support for financial and crypto companies since 2017. Based here in Dubai, supporting all the regulatory requirements and compliance requirements to finance, crypto, and banking companies.
Thank you, Ikaro. So now we know a bit more about each of you. Let's jump right into the discussion. And our first question will help us to understand the current trends in financial crimes, especially in the realm of digital assets. And it's addressed to Mr. Hafid and Mr. Ikaro. And the question is, what are the emerging trends in financial crimes, particularly those involving digital assets such as cryptocurrencies and decentralized finance? And how do they exploit weaknesses in the global financial system?
Well, I would say that the trend is the same since the beginning of the crypto industry, that is money laundering. Actually, using crypto to money laundering is still the biggest crime. It's not the biggest use, but when we search for crimes happening on the crypto space, money laundering is the biggest one, and then we have scams in, let's say, B2C solutions, on retail solutions, but the money laundering is still the big one. Crypto, I would say that the first time that crypto came to the traditional media was with the Silk Road situation, and it was that platform being used to transact illegal services and illegal stuff being paid with crypto, because this is actually something back that time that the regulators were not aware. It was something very new, and still today AML is something, money laundering is something still happening in crypto, way less than in the beginning because of the knowledge of the regulators and the law enforcement agencies increasing in the space. But I would say that it's still the biggest, if we look for crimes, money laundering is the biggest one. And they rely on lack of knowledge and information asymmetrics. That's the basic. But it's decreasing because the regulators, as we can see, in all crypto events all around the world, the regulators are present. When we went to crypto events like back in 2017, 2018, 2019, we had only crypto degens. But now the regulators are in place, and they know crypto, and they are users. So I think that it's the main reason why the criminal use is reducing, but still based on lack of information and knowledge.
Amazing. Hafid?
Yeah, so look, the financial crime which involving digital or crypto has evolving rapidly now. And criminals are using or are taking advantage of the technological vulnerabilities and the regulatory gaps to use as a means for financial crime, as I said, money laundering. But there are also certain emerging risks that we have seen of use of the crypto. We have seen a lot of fraud online or cyber crimes, fraud, which all that's what's happening. There's digital scams now happening or investment scams which are attracting more now the investors, and criminals are using this to make fraud and to use that to fraudulent activities. All we see, for example, the Bitcoin now is crossing $100,000. And this is an opportunity for any investor to invest on that. But the criminals that are using this now as a means for financial crime. So that's one aspect. The other aspect is market manipulation or the volatility of the prices, which there are techniques like pump and dump schemes, which used by the criminals to change or to inflate the price of the crypto. And that's used also as a mechanism for fraud. On top of that, we have used a lot of data privacy issues when using the data related to customers or any types of other scams that we have seen on the fraud. Now, all of this have been used by the criminals because of the lack of the clarity and the gaps in the regulation, but also because of the technology base where there is an advanced technology which not followed or the regulator has been outpaced by this technology advance. So that has been basically the major gaps, and we have seen a complex financial crime, a complex fraud happening in the region.
Amazing. Thank you, all of you. So now we know a bit more about the trends in financial crime. Let's shift our focus to the role of the regulatory bodies and international collaboration. Noshad and Ekaro again, could you share your insights on how these entities are addressing emerging financial crimes and the challenges they face in balancing innovation with strict AML measures?
Okay, so I'll go first. So I think if there's one thing that's for sure with respect to innovation, and as Hafed correctly mentioned, was there's always a requirement now to innovate, whether you're a legacy player, whether you're an innovative player. If you don't innovate with respect to market demand, with respect to seamless experiences, fast-paced transactions, you'll be left behind. It's a competitive world. Having said that, I think everyone, whether you're a legacy player or an innovative business when it comes to financial services, there's always the intention to come to the market with clean hands. And it's also a question of people trying to abuse of the services of service providers that come to the market with clean hands. But thankfully, I think there's a lot of value when it comes to regulators being somewhat forced to have powers for exchange of information, because it's one of the recommendations, or should I say the international standards created by the Financial Action Task Force. As a regulator, as a country, you need to have the ability to share information internationally. And that, is something I think most, if not all, regulators manage to do. So having said that, I think through the exchange of information, regulators and law enforcement authorities are not left in the dark. And when they have the right information, they are able to really come up and approach financial institutions and hold them to account. I'd say that with the ability to secure evidence and secure information to be able to approach financial institutions or regulated persons that have probably gone wrong when it comes to providing services or happen to be victims themselves of money launderers, the law enforcement agencies are in a better position. But I also think there's a lot of work that regulators and even governments have to do when it comes to financial literacy initiatives, because when consumers of financial services themselves are careful enough, I think they'll be able to take the necessary precautions to make sure sometimes they are not the victims or contributors to whatever may be happening. But let me just mention as well, we have some compliance officers with us, such as Sebastian himself, and Icaro helps a lot of them, and so does Hafed. Compliance officers, their competencies also counts a lot. So I think people are trying to train themselves to help regulators achieve their overall objectives, and which is combating financial crime.
Amazing. Mr. Icaro?
Well, in my opinion, I think that the regulators, they are time by time doing each better, mainly on the exchange of information, as Mr. Naushad mentioned. We saw I'm from Brazil, and in America, in South America and North America, there are already agreements between law enforcement agencies for exchange of information, and this is the first step on an international standard, because it was back a few years ago somehow easy to go and commit a financial crime in one jurisdiction, and then you just move your operation to other jurisdiction, you stay there for 3, 4, 5 years, and then you go to another jurisdiction, because it was hard and difficult for the regulators to exchange information. And this idea is being more, I would say, used between the regulators on an international level. And in the local level, something that is actually happening very fast when we look for crypto crimes is local teams inside of the regulatory bodies and the law enforcement agencies deeply trained on financial crimes. And the interesting part is that they are not only trained on the law, on how to fit this situation under our criminal law in one or other country. They are being deeply trained on the tech itself. So we can see in Europe, in Brazil and United States, and here in the UAE as well, the level of tech knowledge of the law enforcement agencies is something that me personally, I was not expecting to happen so fast when I first joined this industry back in 2017, because it took to me around 3.5 years to actually understand, oh, this is blockchain. This is how it's possible to do. And when you understand how the thing works, you understand what you can do for good and what you can do for not so good. And the law enforcement agencies, they are learning very fast, very fast. And I think that is the biggest highlight that we can present right now.
Very interesting points. Building on the discussion of regulatory efforts, let's turn to the role of technology in fighting against the financial crimes. Sebastian, could you start by sharing your thoughts on the most effective innovations such as AI, blockchain analytics, and machine learning? And Hafid, I also wanted to hear your perspective on that, please.
Yeah, thank you. When thinking about innovation in AML and blockchain, we have seen different layers. Basically, I would categorize it into 3 layers that we've seen so far. The first one is the base layer, which is blockchain analytics, which was invented first, which kind of enabled us to track and trace transactions across blockchains across different entities. And that was the basis that we needed to have to be able to fight AML and also investigate cases. So that was coming up, let's say around 2017, maybe even a bit earlier, in a very basic form. And then And then afterwards, now as we got AI to analyze big data sets, we can actually use AI to look for patterns in these big data sets. Because if we think about it, blockchain is a big database. It's usually a public database. So we can scan through that and apply AI onto that to look for patterns that might lead to money laundering. And once we have defined these patterns and identified them, then we can validate these statements with exchanges or blockchains such as us to validate if these patterns that I detected are actually an indication of money laundering. So AI is very useful for that big data analysis and also more of a post analysis of transactions that already happened, but with that knowledge then we can prevent AML or money laundering in the future. And machine learning is a little bit different in my view, just because it's very good in analyzing patterns as well, but we can use it a bit better to prevent money laundering, especially through adjusting thresholds relatively quickly to emerging trends and patterns that we see on the blockchain. So for example, if we see hacks or scams, as mentioned before, using a certain service, and we can adjust our thresholds and our patterns using machine learning.
Hafid?
Thank you.
With the high volume of data now, which we have seen in the world, technology is a must that should be used to mitigate the risk or to prevent and detect the risk of the financial crime or the complex financial crime. My colleagues here, they have basically reiterated the use of AI. Yes, it's the use of AI or the algorithm of the AI with a high volume of data. It's helping to understand the trend of the data, the historical data, what are the trends, but also it helps to predict what the customer will do or what types of transactions. So it's a predictive analysis, and it will help to understand what are the future trend and basically tune based on that. That's the aspect. But there are also other blockchain tools that they are used in the transaction monitoring, for example, to understand what are the risks in the transaction monitoring, where this transaction monitoring is happening through the blockchain. So your current system of transaction monitoring cannot be used because the limitation of the system. And that's why you have to use basically the blockchain tools available on the market to screen or to monitor the blockchain activities to understand what are the risks there on this. Now, there are also the digital identity, which is used now as a digital to verify the customer and to complete the KYC requirement for compliance and KYC requirement. So that's have been used. There are also other use of technology where they have the behavioral biometrics, which used predominantly for real time and to understand what is the behavior of the customer when he's conducting the transaction. And this behavior is related to the typing speed, for example, or any activities related to the gesture or the mouse change. So that's all the patterns have been now used especially in the digital world, to detect and to prevent the fraud or to prevent the financial crime aspect.
Amazing, thank you very much. So these technologies are fascinating in their potential to fight financial crimes, but let's also turn to talk about the real-world application of these technologies or innovations. Nushad and Sebastian, can you please share examples where regulatory policies and technological solutions have been successfully integrated to combat financial crimes?
I mean, thank you very much, Mrs. Najma. I think one thing for sure that's correctly mentioned by Hafid just now was it's the fact that regulators themselves have equipped themselves with blockchain analytics tools, maybe commercially available, but I think they've made sure to have the right tools in place to be able to follow transactions. So that's one thing for sure. I think transaction monitoring is key. Regulators are not going to be here to conduct the transaction monitoring themselves, but they're going to want to make sure that, first of all, the regulated financial institutions or virtual asset service providers will do it themselves. But secondly, if they need the information to be able to conduct potential inspections, investigations, or enforcement actions, they have direct access to information to be more prompt when it comes to their response. We've noticed quite a few countries when it comes to transaction monitoring as well, at the level of central banks applying a level 2 transaction monitoring. We have the Netherlands as an example, connecting, I think, 5 of the biggest banks. I think this has worked quite well. I think one of the things that regulators have done quite well when it comes to supporting regulatory policy and at the same time changing the way FIs work is really, we look at the example of Singapore that's come up with what they call the Cosmic platform, connecting 9 of the biggest banks. So let's say, for example, Naushad turns up at one of the banks to be able to open a bank account and gets refused. This information is pinged to the rest of the 8 banks connected to the same platform. So when it comes to the onboarding process, or even when it comes to maintaining clients during the client life cycle, you have this information that's shared at horizontal level among financial institutions for all, I would say, major stakeholders within a sector to be able to work together. And I think such technological advancements are necessary, and only technology and modern tools will be able to do that because of the volume of data once again.
Great insights. Sebastian, please.
Yeah, based on my experience, I mean, I can definitely second what Naushad said, but especially in the sense for investigations, I work with the police and regulators, and they're using more and more the blockchain analytics tools because they have to, first of all, but they're also getting better, and it provides them a different angle in tracing financial crime or other crimes online, because a lot of these crimes nowadays have some added factor of blockchain. Maybe the payout of the crime happens in crypto, or there's some other connection to crypto. That's why I feel like it's an essential tool nowadays for every investigator and every regulator. So I definitely think there's going to be an increase in skills that the regulators, the police, the state attorneys are going to acquire, or already have acquired to a certain degree, to be able to use the blockchain to their advantage. So blockchain analytics is one, and then second of all, I think the travel rule is also quite a decent example. It's not rolled out in every jurisdiction just yet, but we've seen it in or being live in countries such as the UAE, Switzerland, Japan, etc. It's now going to be live by the end of the year in the EU, so that's going to be a big thing. And there was a need for new technologies to be supporting that specific regulation, because the current tools that we had before that weren't able to send information from one exchange safely across to another entity. So that was very important to have that innovation to be able to comply with that rule. And I'm also thinking we're going to see way more of that, just because, I mean, what blockchain enables you is real life surveillance and data availability. So you can use it to manage risks like exposures, and we see that from central banks, that they get more interested in how much crypto do the banks have in their portfolio that they have to surveil, and can we find a solution to report that in real time to the central bank.
Amazing. Thank you very much. Hafid, let's delve into how the financial services landscape is evolving with the rise of cryptocurrencies. Could you start by discussing how the industry is adapting and the new risks that are emerging as a result?
Well, the financial sector landscape is facing now a paradigm shift in terms of how the global financial service is conducted. And this is driven by the consumer expectation. So the consumer is expecting more a digital service, a smooth service. By the high competition, a lot of entries into the financial service from unregulated entities providing regulated product. We have seen a lot of fintechs now providing regulated product like payments from the central bank, And also, there are a lot of now soup up which providing financial services. So the traditional way of banking has been facing a lot of shift. And we are talking more now as a banking as a service. You don't need to go to the bank to conduct any activities. You can conduct this from your mobile. And with this change on the digital and the change of technology is coming more expensive risks, as we discussed. So the banks are trying to accommodate all the change of the digital, digitize their service, providing digital services, smooth customer experience. We have seen a lot of banks now, digital banks, 0 branches. All the banks is on the app. There are certain telecom operator providing payment services. The use of the blockchain on the transfers and the use of the virtual assets basically for transfers of the money. We talk about the central bank digital currency, and then the regulator now they're using digital service or virtual assets for the transfers. So that has changed the whole landscape of the financial service across all. Now this change, as we said, it's coming with more and expensive risks, which change the whole risk taxonomy or risk universe with a greater financial crime, with cybersecurity, with fraud, with data privacy, data breaches, or the virtual assets risk, the market manipulation, the liquidity risk, the operational risk. So it's a new area. It's a new area of technology which we are surviving right now, and it's a new risk that the financial institution has to shift that mindset from a traditional banking to the digital way of mitigating the risks.
Fantastic. Sebastian, what are your thoughts on that?
Yes, thank you. I absolutely agree about the liquidity and the operational risks. Because everything that we love about crypto, that it's fast, that it's available 24/7, also has a risk side of things. So in regards to liquidity, the classical bank run that we have seen in the past with some banks will happen in the future. If it happens, probably way, way quicker. So let's say a bank that's connected to crypto has to manage their liquidity very different than a traditional bank, just because you can get money in and out very, very fast. So that's one thing. Then the operational risks are of course interesting, and I think we also have to be a bit careful in crypto when we build services on top of other services and create dependency chains from different services, because nobody or not a lot of people, I think, fully understand what happens, if the markets really crash, and what kind of can cascading down in different services. So that's also something that we're seeing right now. So I think that's very important. But one thing is my most important emerging risk, and for me that's personally still regulatory risk, just because we've seen a lot of progress and innovation of regulators, but some very basic questions are still unanswered to this day. For example, as we see it in the US, which asset is a security and which asset is not a security. It's one of these fundamental questions that hasn't been answered in a lot of countries, not only the US, but also in Europe and also to a degree here in the UAE. So I would encourage all the regulators out there to take that bold step and make a decision on that, because it would help the industry, the TradFi, tremendously. Thank you.
Fantastic. Thank you very much, Sebastian. To wrap up our discussion, let's look ahead to the future. Caro and Mr. Naushad, could you share your thoughts on the advancements in policy or technology that you see essential for transforming anti-money laundering practices? And Naushad, can we start with you, please?
Yes, of course. I think if there's one thing for sure is when it comes to advancement in technology and thinking about, transforming the ML landscape, one thing for sure is, yes, the amount of data that we have is significant. To have any kind of innate expectation that the resources available for AML or compliance requirements would be one-to-one with respect to the compliance and client ratio is just unrealistic, whether you're a country, whether you're a regulator, whether you're a financial institution, is just unrealistic. And that's why I think we need that really dynamic approach when it comes to using data to update our client risk assessments. And when we know the risk attached to our client, we are then able to really focus our energy, our time, our resources to those areas in need. And I think this is how really technology will really transform the way I think compliance functions work and organizations defend themselves better. So that's one thing where I think technology will make a major difference going forward. It's really improving those data flows and making those client risk assessments more dynamic. Secondly, if there's one thing that's really, I think, already been a bit of an improvement is, yes, even basic client verification. Why? Very often, I think legacy businesses have felt that, well, we hate those burdens because we feel we are KYC collectors, and every client hates to be contacted, to be asked for, a proof of address. Well, this is not really the issue now. Where I think technology has really improved processes is it's made it easier for us to verify clients. In fact, we are not KYC collectors. None of us are. We, in fact, just have to verify that our clients truly exist. So I think that's one thing where technology has improved things. We now know that there's a bit of a liveness check within the, electronic verification processes that we have. And I think a lot of improvements have been done down that route, and a lot more can still be done. I think in as much as many of us might be using WhatsApp and Zoom to verify a client's identity, I think we've known enough of cases that have happened in 2024 that we should not be relying on Zoom and WhatsApp for client verification. Because why? Because even the basic features of Zoom and WhatsApp could give me lipstick right now, could give me a thicker eyebrow, could give me a French cut. So it's something to be avoided. And this is how I think where the future is. It's us verifying our client and making sure that this person is still alive. And secondly, transforming maybe people who feel they're burdened by administrative loads of documentation into more dynamic approaches to, verifying client identity and holding people to account as a result of that.
Thank you. Hey, Caro.
Well, in my opinion, I think that the future advancements that we need to have in order to more effectively act against financial crimes and money laundering and scams are an update or an upgrade on the relationship between the law enforcement agencies and private entities, but on a type of private entity that we don't have, at least formally, until nowadays. Because thinking on the financial crime, why do the financial crime happens? Because there is an economic reason and an economic advantage to commit this crime. And to investigate, to go on and to punish, it's very complex. Because people doing those crimes, they are very smart. Sometimes the crime structure is just simple, but the execution is made by very smart people. And it's just impossible for all the governments or for the society to rely only on the government to combat, to act against those crimes. So I think that it will be interesting if we had some level of partnership between governments and law enforcement agencies with private investigation companies. We have private education, private health, private banking, a lot of traditional government services. I think that we are reaching a time that we need to think on private financial investigation agencies, because it's just impossible for the government to be 100% in all the places knowing everything that actually is going on. And if we create this industry, because the financial crimes are, I believe that we can say that it's already an industry. We even have the term, the fraud as a service. So it is an industry. So let's create the investigation as a service where we have private entities fully focused on supporting governments on investigation. And then we think in the future how to make it economic advantage for those companies to exist. But I think that there is this problem. The government, by themselves, they are not able to cover or 100% of what is going on, and I think that is not fair from the community to expect it from the government. So okay, so let's try to fix this problem. There is the fraud as a service. Let's bring the investigation as a service. Maybe it could be a good approach to deal with the problem.
Amazing. Thank you, Caro. Thank you for our amazing panelists and speakers for sharing your insights and expertise with us today. It's clear that as financial crimes continues to evolve, we must stay in the head of the curve with both innovation and regulations. Thank you again for your speeches here, and also we wanted to extend our thanks to the audience for your engagement, and please don't hesitate to reach out with more questions about this topic after this session. Thank you all and have a wonderful day.
Thank you.
Thank you to all our panelists. I'd like to apologize to Mr. Icaro Avelar. I missed your name. Ladies and gentlemen, I would just like to send a shout out to Mr. Icaro Avelar, the Senior Associate at Banks Legal Consultancy. But another round of applause for our panelists, ladies and gentlemen. You're welcome. We're now going to be moving on to the next session, ladies and gentlemen, the future of digital business. Please join me in welcoming to the stage Mr. Gustavo Antonio Montero, the founder and chairman of Carta Capital.
Hello. Thank you very much. This is a kilo of gold. What do you mean 10 minutes left? It's 15 minutes. So this is a kilo of gold. Gold this morning is $2,600 an ounce. This is around $90,000. The person that will ask me the toughest question will take this home today. It's right there. All right. We're going to talk about the future of digital finance, which is a very, very long topic, and I'm going to have to cover it in 10 minutes. I am Gustavo Antonio Montero. Ich bin Schweiz. I'm Swiss. 35 years in the financial world, 10 years in digital assets, ex-bank CEO, board of directors, and I teach at several universities today. But it's always interesting to know what kind of an animal you have talking to you. I'm not only all that. I'm a ski guy for the blind. This down here is the Guinness record we hold in Ski Dubai for 1 hour with 2 blind skiers 3 years ago. They did 25 kilometers and 100 meters. So, having said that, these are all the companies I work for, and you can check all that in my various pages in the internet. Disclaimer, these are my lawyers that asked me to do that. They want me to tell you that I'm not selling you anything today. It's important because this is part of what we live here every day. Thank you, Gordon, for pointing it out. All right. So, the agenda. I'm a professor, so I speak with agendas. The context today, what are we living today? The practical study. I'm going to show you one case study in digital finance, and then hopefully we have time for Q&A. So what's happening? Last week, BlackRock, the biggest asset manager in the world, said that Bitcoin is a global monetary alternative. This is the biggest asset manager in the world saying that. The crypto industry is now over a value of over $3 trillion, 3% of the global economy today, massive. And in the last 14 days, $9 billion have moved into stable coins. So there's something happening here. You all have to listen and be very careful about it because it's going to change the world. These are the world leading companies investing in digital assets, namely crypto. Digital assets is much bigger than that. BlackRock, Vanguard, Fidelity, State, Morgan Stanley, JP Morgan, all these chaps are now investing in this space. The list is much longer, but look at what it says. Can you see what it says down there? You cannot read from there. It says that France GDP in 2023 was $3.7 trillion. Look at the size of BlackRock. At least 2 times France. That's the importance of this. Why are we here? Why are we in Bitcoin? Why are we in digital finance? Because in 1971, Richard Nixon broke the gold standard. In the gold standard, we had $1 for so many grams of gold in Fort Knox. When he broke that, he told every single central bank in the world, print money, print as much as you want, which created a whole mess in which we're in right now. The biggest one I remember of is 2008. Remember when Lehman Brothers went down? Does anybody remember here this? Lehman Brothers, down. That was really the catalyzer of what's happening. When that bank went down, everything changed completely. We knew now that banks can go broke because of the current financial system. But when this was happening, these two guys here at Stanford University were inventing blockchain. They were working on something completely different than what we're using right now, but they were doing it in 1991, and that is why we have the technology today. I had the chance to speak to one of these chaps a few weeks ago at a conference. I'm very proud of that. So, in 2008, huge financial crisis. Does anybody know here who Satoshi Nakamoto is? You. I love that. Some people say it's me. I can confirm it's not me. I'm not Satoshi Nakamoto. I would not be speaking to you here today if I was Satoshi Nakamoto. That guy used blockchain technology to create the first coin. You all know about it. Bitcoin, they're now over 30,000 in the world today. That is what's happening. So the question is, are you late to invest in this industry? Are you too late? Not at all. I think that having the industry value less than 3% of the global GDP of this world puts us more or less here. That's where we are in this industry. So we have about $97 trillion growth that we can do with this industry. Interesting, huh? We have many applications of what we call distributed ledger technology or blockchain, easier for you to remember, in the world. Cross-border payments, securities tokenization, insurance, a lot in the regulatory and compliance. The chaps speaking before me were talking about that. Smart contract lending, trade finance, digital identity, and down there, you see tokenization of assets. That's what we're going to talk about today. So, this context is driving new applications. The context I explained to you before. And some of them is real-world assets tokenization and stablecoins. Those are two areas that are being very strong right now, growing in this industry. What is real-world assets tokenization? For a lawyer, it's just the process of taking something as valuable like a piece of a building, some gold, copper, whatever, and transform it into a token, legally linking the two parameters. And what is a stablecoin is simply a token or a crypto, if you will, that is pegged to an asset. Gold, silver, whatever you want. You have a price that is blocked against an asset. That is what we're going to talk about very quickly today. So, let's look at a real company. And that's why I put the disclaimer. This is our company. We just started this 1 week ago. Actually, we started a year ago, but since 1 week is actually a real situation. It's called USDR Commodities. It's a BVI company that is doing all this process. USDR Commodities purpose and vision. We want to be the most innovative gold mining asset company using blockchain and stablecoin infrastructure. We're linking directly the gold to this, to blockchain. That's why we think we're very innovative in what we're doing. But there are other things that come with it. The problem. Do you use stablecoins? Does anybody here use stablecoins? Have you asked for an audit of the underlying asset? I have. Never had it. Never got an audit of any of the various stablecoins we're using right now. Someone told me that there are. Bring them to me, please. We don't know what's behind these companies. Then, when extracting gold from the ground, there are major environmental issues. We need 100 tons of rocks crashing to take 1 ton of gold out. You can imagine the problem for the environment for that. We use acid and all kinds of other things. Also, transporting gold is a hassle. Have you ever tried to transport 1 kilo of gold from Bolivia to Switzerland or to Dubai? You need an airplane, you need a private airplane, you need a whole bunch of things that are complicated to do. Storing gold is expensive. Banks are charging up to 1% for the gold you store in a vault. Very expensive. And storing gold is risky. Did you hear about Credit Suisse? Do you all know what happened with Credit Suisse here? The second largest bank in my own country, it disappeared. What do you think that happened to the gold that was in the vault of Credit Suisse? I'll tell you the truth, nobody knows. That's the reality. Quite complex as an issue right now. So all these reasons are problems that we're trying to solve at USDR Commodities. The solution is to create a stable coin backed by audited, certified physical gold in top jurisdictions. We have mines in Canada, Australia, Chile, and New Zealand. Only top jurisdictions. The ones where if you buy a gold mine, you know the government is not going to take it away from you. Gold is stored in ground unless investors want it. We're not intending to take the gold off the ground because it's already in a vault. And it's the safest vault you can have, in-ground vault. Why now? Why do we do this? Because as the chaps before said, we are at a paradigm shift in the financial world. The financial system we have, which is broken, totally broken, is being replaced by the new financial system, by the digital financial system. This is going to happen, it's happening quite accelerated, and the fact that Donald Trump was elected in the US, as you all know, is accelerating this dramatically. As a matter of fact, have you heard that Donald Trump wants to have a reserve in cryptocurrencies as part of the US government balance sheet? Have you heard that? That's huge. It's amazing. Then we are very well on our way to crypto mass adoption. You saw all the companies that are buying crypto right now. To me, that is very much on its way. So, do you see it says, you cannot see that. It says there is no way back. Can someone see that? There's no way back, the last sentence? Well, it says there's no way back unless you turn off the internet. That's why the funny face. That's a question that was asked to me last week by one of my students at a university. Professor Montero, can we stop the whole thing with crypto? Yes, very easy. Switch off the internet. Now let me ask you, can you live one day without internet? All of you here. One day, yes. One day, you can live one day, but that's it, all right? So that's why we cannot stop this. The market size, huge. This is Citigroup 2023. You cannot see this because of the chairs, but they did this study on what could be tokenized. We can tokenize pretty much anything we have in the world, and there is, in this graph, you have in excess of $200 trillion worth of a market for companies that are tokenizing assets. The market is actually humongous. Competition for us, for USDR commodities. Yes, every single stable coin in the market is competition. The combined market value of stable coins today is around $130 billion. But they have all kinds of problems. The key problem in red there is that there are no standard audits for underlying assets of stable coins. It's very difficult to get them. I said, if you find them, bring them to me, please. And in blue I put there, but if you want my honest answer about competition, there is no competition. When this industry is only worth 3% of the global GDP, we have 97% to growth. There could be multiple stable coins and there will still be no competition. The USDR business model, what we're doing, we're charging transaction fees, we are charging people that need the gold out of the ground money for futures, lending services. We probably will issue a meme coin. Do you know what a meme coin is? All right. We will probably issue a meme coin against probably $1 billion. We have $16 billion worth of audited ground gold right now signed with USDR community. We're probably going to use $1 billion to create a meme coin in the market, which I'm sure is going to be very successful because the majority of meme coins in the market do not have any backing assets. So, as I said, we have mines in Canada, Chile, and Australia. New Zealand, we also have some, but it's less likely at the moment. The team of this company, 5 top professionals, auditors, bankers, etc., mining engineers, computer science people, all people with gray hair like me. There are no children in the room in my company, all right? It's very, very important. I get every day a 17-year-old kid telling me, give me your money, I'll make you 10,000% a minute. All right? Would you give it to him? I won't. But here, you only have seasoned people. By the way, if you contact me, you can get the full information on the team backing this. So where do we go from here? We have signed with the first gold mine. The BVI company has started the pre-sale just 4 days ago in the BVI, so they're selling their own tokens. We are listing the token, the stable coin, in various major exchanges in 2025. We are onboarding future gold mines, and as I said, the meme coin pool is going to be something everybody likes. Now, the reason why we're issuing a meme coin is because our clients are asking for that. So we have about 80% of the clients that want to buy the stable coin, and 20% that says, we want to catch up the growth of the gold. That gold that I put somewhere today, 2,600 ounces today. So, that's it, done. Questions? The tough question gets this gold here. Any questions? There is a question there. I don't hear. Can you hear me? Yeah, go ahead. Okay, is your USDR is a stable coin or it is a stable coin. Stable coin. So it will not have the kind of fluctuation that other. It will not fluctuate at all. It is. Microphone. No, use the microphone, please. Yeah, I'm sorry. Yeah. Sorry. It's a stable coin. That's the answer. USDR is a stable coin. Do you get any returns if you hold it?
Do you get any returns if you hold it like short term, long term?
Well, it depends what you mean by that, all right?
I mean some kind of a profit, because if there is not going to be much fluctuation.
I show you the business model. So we're charging per transaction, all right? But we're also off-taking ground from the gold, from the people that want the gold. So we have, for instance, one party that has asked us right now to take the equivalent of $100 million worth of gold from that mine, all right? They want the gold. They want it physically. For us, it's not a problem. That mine was exploited in the past. It's just for us to get a junior Canadian company and take the gold out. Yes. Any other questions? God, you didn't like what I said.
Your meme token is already launched, or?
Okay, the token is minted. It's on pre-sale right now in the BVI. It will be launched Q1 of this coming year in various exchanges.
So we can buy that now?
But you need to buy from the BVI company. We're not selling anything in Dubai. I can give you the information without any problems. Thank you. She wants me to cut it. One last question. Yes, there is one there.
Very nice presentation. Thank you so much. I'm just want to point out the slides about the team that you said it's all grown person like you is a gray hair.
Yeah.
But the point is that why don't you use the youth, which are so useful right now with these good technologies?
Of course we use them. We hire them to do our technology. I'm saying the governance. The governance of a company is the most important thing of a company. By the way, you win the gold. That's
really?
a good question, yeah.
That's real gold.
Come up.
Wow, that's nice.
That was a very, very good question. Bravo.
Thank you.
It's effectively, that question is key, and I'll finish with it. I know that you want me to finish. This is not only valid for my company. This is valid for any company in the world. Do not invest 1 cent of your money in a company that doesn't have adequate governance, all right? Don't invest money in a company of 15-year-old kids that know nothing about what they're doing and they're promising you the world. Get the right governance, and then, yes, they will hire younger people to do the technology. but not to run the company, my friend. Out of the question. Thank you very much. Have a great time.
Thank you very much, Gustavo. I hope you guys enjoyed that. Please, if anyone has any further questions, Mr. Gustavo is here. Feel free to ask him as many questions as you like. Ladies and gentlemen, we are going to be moving on to the next session, and we are honored to have Dr. Mohammed Damak, the Managing Director and Sector Lead for Financial Institutions and Global Head of Islamic Finance at S&P Global Rating, to present recent trends in digital bond space and key challenges and future opportunities facing the market. Please join me in welcoming Dr. Mohammed Damak on stage.
All right. I don't have any gold to offer, but I'll be equally happy to take any tough question. So over the next maybe 10, 15 minutes, I'll take you through what's going on in the digital bond space, which is one of the use cases of the tokenization of real world assets. I'll talk to you also about our stablecoin stability assessment. And finally, I'll end up with shedding a little bit of light on how we look at these instruments from a rating perspective. Digital bonds, in the last 12 months, we've seen more than a couple of $1 billion issued by issuers from different spaces tapping this nascent market. We've seen sovereigns tapping the digital bond markets. We've seen financial institutions doing that, multilateral lending institution. And the end game ultimately is how to disrupt a market that is worth today more than $100 trillion. And the idea of a digital bond is really simple. Today, if you're an issuer, if you want to raise a bond, you have to go to your investment banker, you have to go through a process that takes time, that costs energy and costs money, while in reality the value proposition of a digital bonds is to displace all that crowd and to make the process of issuance of a bond as simple as logging into a digital platform, building your book, speaking directly to the investors connected to that platform. And that could help in reducing the costs related to the issuance of digital bonds. That could help in making the process simpler. That could help in enhancing security by using the blockchain technology as a single source of truth on who is holding what and on the trade and settlement and everything. And that can open the door potentially to small and medium-sized enterprises that are today excluded from the bond market because of the costs attached to the issuance of the bond. Obviously, you need to have some weaknesses. So the only weaknesses that I found here is the lack of track record, but you have to start somewhere. Two challenges that the digital bond industry face. The first challenge, because everything happens on private blockchains, for the time being, the liquidity of digital bonds are fairly limited. And we think that going forward, that could be resolved either by opening these private blockchains to a broader range of participants. Today, most of the digital bond activity happens on private blockchains that are owned by the banks themselves, who are trying to really innovate and trying to keep this business. But one way to potentially see higher liquidity in the market is through the opening of the private blockchains, so that more partner institution and more investors and issuer can use these platforms. Another possibility is the use of cross-chain communication, but obviously this comes with a certain number of challenges and a certain number of risks that, if they are dealt with, could result in a situation where you have bridges between the different chains, and where investors, for example, that are sitting on the chain of a bank A can communicate with the chain of a bank B where the bond is issued and listed. Or simply the use of public blockchains, which could be a solution for the liquidity problem of the digital bonds on the secondary market. And we've seen some of the bonds issued being listed on public blockchain. The other challenge, which my predecessor talked about briefly, is how can you bring money natively on the chain? Because for the time being, if you look at the $2 trillion of digital bonds that have been issued so far, 99% of the cases, the settlement happens off the chain, and that prevents from really unlocking the potential added value of using the blockchain as a technology for the digital bond issuance. And here we've seen few examples, like for example, we've seen the use of wholesale central bank digital currency that was used in the issuance and settlement of the digital bonds that were issued by some Swiss cantons. We've seen also the trigger solution that was offered by the Bundesbank and the ECB and a certain number of other central banks in Europe. And that has served also as a possibility to really try to leverage the all the added value offered by blockchain in order to achieve a quicker settlement and a quicker repayment and to bring money natively on the chain. And finally, we are seeing regulatory framework emerging with potentially that could potentially increase the adoption of stable coins, which could be used as a mean in order to transact on the blockchain and to for the repayment of the digital bonds. Where I agree with my predecessor is that for the stable coins, for the time being, given the lack of regulatory environment, adoption has been below potential. And people are raising legitimate question, as the questions that were raised by my predecessor on the stablecoin. And this is why we decided to launch our stablecoin stability assessment. Stablecoin stability assessment is an independent assessment by S&P Global Rating with regards to the capacity of a stablecoin to keep its peg to the fiat currency. We start with the asset assessment because in most of the cases, whether it's a centralized or a decentralized stable coins, there are some assets backing the promise to repay the $1-to-1 or $1-to-1 euro denomination. So we start by looking at the asset quality of the underlying assets, any additional risk that we should take into consideration. For the decentralized stable coins, we would look at the over-collateralization and the liquidation. DAI is an example, or USDS now. And then our asset assessment is on a scale from 1 to 5. 1 is when the assets are of the highest quality. 5, if we have doubt regarding the stability of the market value of the assets. And then we have 5 adjustment factor: governance, legal and regulatory framework, redeemability and liquidity, technology and third-party dependency, and track record, which could result either in a neutral adjustment or a negative adjustment. And we decided to calibrate the methodology this way because if the assets are of a weak quality, then obviously you can have the best governance in the world, but this would not change the balance of risk. Here you can see the stablecoin stability assessment that we published on the top stablecoins. One of them is missing here, which is USDM, for which we have a score of 3. But as you can see, for USDC, for example, we have a very strong asset assessment. We have a negative adjustment, which leads to an overall strong assessment. For Tether, we have a constrained asset assessment with no adjustment, which leads to an overall constrained assessment. Now, a final word on how do we look at bonds from a rating perspective, the digital bonds from a rating perspective. So here, the first question that we ask ourselves as analysts is whether the money is going on the chain or not. If the money is not going on the chain, and if there are backup mechanisms for the bonds to that could be triggered, if there's any failure at the technology level, then in this case, we assign our rating using the applicable criteria, for example, financial institution or sovereign ratings. if the money is going natively on the chain, then here we have a case-by-case approach whereby we try to assess the incremental risk coming from the use of, I don't know, wholesale digital, central bank digital currency or stable coin or any other denomination that could result in additional risk for the digital bond investors, and that we would assess on a case-by-case basis. Thank you very much for your attention. That's the link to our digital asset theme page, and I'm happy to take questions. All right, looks like there's no questions. All right, excellent. Then thank you for your attention.
Thank you very much, Dr. Mohammed. A round of applause, ladies and gentlemen, once again. We're now going to be moving on to fireside chats on boring businesses of Web3. With two industry leaders, ladies and gentlemen, please help me in welcoming Konstantin Molodic, co-founder and CEO of Mizen.io, and Karnika E. Shaswant, founder and CEO of Key Difference, who are going to share the insight on the often overlooked yet essential business driving the Web3 ecosystem. Let's welcome them to the stage. Are you already here?
Thank you so much.
Hello guys.
Good morning, everybody. So what do you think? I'm very bullish about everything that we've just heard for the previous several pitches. I believe that we're really very early in terms of the crypto adoption. And actually, I just want to share maybe one observation that I've been thinking about right now, that I've been to several events in 2022, just right after the Terra Luna collapse. And actually, everybody was so pessimistic, everybody was dying in terms of the market capitalization, and everything was terribly everybody was so pessimistic. But I believe right now everything has changed. We're finally here, and let's discuss. And just a quick question: I couldn't expect so many people right here today. And how many of you live here in Dubai? Oh, okay. I think I should have listened to that real estate agent Svetlana 2 years ago, and I should have bought an apartment here. Okay, but luckily I bought some Bitcoin. Okay, so we don't have a lot of time, so let's start our discussion. Could you please, Mr. Key, could you please introduce yourself just briefly?
Hello guys, I'm super happy to be here. So I've been for 11 years in the Web3 space, entered in 2013 in the early days of Bitcoin, shitcoin days. And ever since been through 4 different waves in the crypto world and all the different trends. So being on the investment side, on growing and building businesses side, on supporting businesses to go to the market. So played a lot of different hats during my 11 years in Web3, and I think right now it's time for more unicorns to be built in the upcoming years.
Okay, wonderful. So just maybe several questions or several points about me. I'm the founder and CEO of Mizen, and we are working with companies to help them, we're a consultancy, we help them to develop tokenomics and strategy, and we've been working with multiple companies. We help the companies that are worth $5 billion right now, and we did several M&As of DAOs and many other interesting things. So we have a very boring topic today, and maybe can you tell me a few words? Why is it boring? Is it because we would love to discuss today the stuff related to very deep tech companies and startups, or just because we're going to speak about the companies that everybody is bored already, like meme coins or something?
I think the perspective here is a bit different. The Web3 space over all these years have been having splashy companies, attractive designs, And they've been always trying to entertain the audience. The audience are used to the entertainment aspect of it. But the real businesses, fundamentally strong companies that can sustain, that can thrive, that can grow, those companies, by the very nature, they are boring. It's a real world business. They cannot be an highly speculative, fun instrument out there. They are building a proper business. They have a customer, they have products, they want to reach, and they want to have a bottom line. So they do have fundamentals in mind, and that can make it to a not so interesting as a Web3 company. But those boring businesses are also the ones that can actually build a reputation for what Web3 could stand for. Because so far, we always had a mixed reputation, and it has to change. We already see that with the dawn of all the real-world asset companies and even the stable coins and many more. Those are not super attractive as a business, but they're real. They have value that is inherent to what they represent, and they're not just speculative in nature. And that is what we are here to talk about. What are the real businesses that will drive the next many years? We can play memes, and memes are here to stay, but they're not going to be the ones building the future of Web3. Because when we entered the world of like blockchain early on, we came up with a promise. Hey, we are here to change all the industries out there. We are here to disrupt the world. And if we have to disrupt the world, we cannot do that only with memes. We have to disrupt the world by actually changing the existing status quo of those companies, the infrastructure and the technology, and enhancing it, making it better to, what are the benefits of blockchain? People keep asking that. And that has to be impacted in those industries in a specific way and bring that about. And that is going to be a boring process.
Okay, thank you so much. Actually, just a few words about meme coins. I think that meme coins is the pure crypto, just because Bitcoin could be some kind of the meme coin that united the community behind it, that we would love to store our value in this meme coin. This is some kind of, so I believe that meme coins is just a little bit a part of the community and crypto, and it is the pure nature of crypto. So regarding coming back to our boring companies, could you please tell me and all of us, what do you think are the red flags for these boring companies, and how can you divide and understand they are like fugazi, right, or they are doing real stuff and developing our ecosystem and providing value?
I think it all goes back to the same way you analyze any Web2 company. We are at a point where the Web2 kind of a business model and Web3 are merging. So if you had to go and analyze a Web2 company, you would analyze it starting with the quality of the team. Do they even have experience in what they're trying to sell or trying to create? Do they have an industry background? Do they know what they are talking about? To going to the point of the business model, is there a common sense factor to it? Does it even make sense? Do you see that having a reasonable fruition point where it can come to life? Because a lot of times in Web3, I see founders and projects where they have zero knowledge of that industry and sector, and they are just starting something. It's nice information on the deck. It's nice hot phrases on the deck. Just because you could raise money, you don't do that. You have to deep dive to see if you can build that business. So I ask the basic questions. Okay, how are you going to do the distribution? Distribution is a key to any business. What is your means of acquiring customers? How are you going to level the playing field with your competitors? How do you go about attracting your own market share with the way you differentiate yourself? The basic Web2 questions that any Web2 investor would be asking about. And I think that's the basics. Okay, you don't have to have everything figured out. You don't have to have your entire revenue model figured out, but you need to at least know what are you creating, who are you creating for, what are you trying to sell, and why someone should be buying it. If that basics is not clear, there is something fundamentally wrong with that business. That's not a red flag. It's a screaming red dragon that's on around the business there.
Okay, and if there are maybe protocols that from the first glance doesn't make sense and you can't see how they will provide value, there is no business model and etc., but in the end they have a market capitalization of several $billion. How could it possible?
I think there are two components here for many businesses. Like, let's use an example of multiple layer ones and layer twos. I think if you have to clean the space up, like what Dodge from Elon Musk is doing, you would go about cleaning almost all the chains except 4 or 5 chains. You don't need most chains that's living out there. They don't serve technological value. They don't serve a new customer demographic value. They don't do anything specifically. But the point is that some of them entered early on. There is a value to a legacy company who entered the space 5 years ago, 7 years ago. Just because they entered early on, there is people who have been buying it, holding it, and a community that came around it, and they continue to be so. But the question really, to me, is not to worry about how they gain that market prominence or the market capitalization, but what is going to happen to them moving forward. You could see that from 2017, businesses that were doing massively in 2017, they were doing okay in 2021, and right now their market cap is very, very low. They've gone substantially lower. So they've always been on a downward trend on a cycle by cycle basis. And that's because they couldn't sustain a value that they can prove and maintain a place for themselves in the market. And moving forward, if there's a new layer 1, layer 2 starting up right now in the same sector, they're struggling. They're not able to do that. They are, it's funny, some of the layer 1s that's launching at a 25 million, 40 million valuations compared to the 2017 space where they raised $40 million at like $1 billion valuation. So that is drastically falling, and the barrier to entry is going higher and higher. So the market demand and supply is automatically making it impossible for these layer 1s or layer 2s or protocols to start. Because if someone raises $4 million to start a layer 1, they're not going to compete with the next Solanas. They're not going to compete with the next biggies. It's not possible for them to be on the same field and trying to gain audience who they can retain, because audience loyalty is also in question. So to keep the answer short there, the market is making it harder for them to do it, and what happened in the past is being corrected by the market forces right now, and it's a matter of time. Maybe by the next cycle you would have a more cleared industry by the natural forces out there.
Okay, and so if these boring companies are so important for the community, for the future development of our ecosystem, and for the benefit of the society, so, but why are at the moment there are so many just fun companies, and how did we end up in this situation that there are only a few really incredible boring companies, but there are just a few those who provide this much value?
I think this goes back to the early adopters. Early adopters in any sector, they are courageous, they are ready to take risks, and they're ready to dive into things as soon as possible. They're happy to dive quick, and that ideally means the good part of them have the also, or they're gamblers, or they are equal or close to it. Speculative in nature. So the industry ended up with a lot of speculation, but also the demography is younger people, people who are in their 20s and so on. And that's why the gaming side of it also came up. So when you look at all the meme and the fun there is to do with how do you entertain an audience, what is the comics and all the fun stuff. So it became more on the fun-oriented and the game-related areas, but that is, that's how it started, that's how it attracted a lot of audience, that's how it attracted more eyeballs from the world. In fact, memes brought more people into the space than any other technology did. People did not come because Ethereum is great as a technology or Solana is great as a technology. They came because those platforms had memes. So games and entertainment attract people, and that's amazing. That's fine. But I think now, as you see all this BlackRock and Vanguard coming in, they're not jumping into memes. They're jumping into RWAs and stable coins. So now the serious institutions are coming in. We're entering an institution era and an era of M&As. And now there is a new demography, new people, and a new focus coming into the space. And now when we go to different events and different conversations, you could see what is that topic about. And the topic is changing. The topic is shifting. It's no longer just gaming and meme, but this new boring businesses are coming to mainstream. So the age group, the people, the nature, the time in the chart itself matters. So we are moving from super early adoption sector to more on early innovation sector of serious businesses, and that will change it into course. But hey, the world is changing. People want fun. They just don't want boring balance sheets and businesses anymore. So it's going to be a hybrid, because now even a boring business has to innovate, have a better way to engage and attract audience. Do they use gamification? Do they use memes to retain a segment of audience and build from there? So you could start thinking about how do you entertain, because marketing is entertainment, advertising is entertainment. Most part of marketing funnels is about retaining customers' attention, and anything that can grab attention has to have an element of entertainment to it. So now it's not about making it absolutely boring, it's about how do you entertain them in a business that is not so exciting. How do you strike a balance? How do you find a middle ground that makes sense?
Yeah, that was a very interesting narrative maybe a year ago when like the main point for investors was regarding the company. Is your company bringing you clients to the ecosystem, bringing you users to crypto? And so maybe my last question is, what do you think are the most important next steps for the community to grow, for the ecosystem to grow, to become better, like with higher valuations and etc.? So what are the most important steps?
I think the increased focus and the fundamentals of the businesses and a little less on the speculative nature would bring a lot of difference, a lot of change moving forward. And I don't think anybody or the community should do anything anymore. Now it is like anything open source, anything that's open as this market is, there are other forces, people doing it. When governments are starting businesses, when massive institutions are coming, like Sony came and they acquired an exchange in Japan and they started their own blockchain. And as these things are progressing, it will change automatically. People don't have to do anything. It'll attract a different set of audience. And the best part about blockchain and crypto is not the technology. I always say that philosophy is what blockchain is all about. And what does that philosophy mean? It's a philosophy of freedom and choice. So it has a space for everyone. Do you want to use something permission? Do you want to use permissionless solutions? Do you want something centralized, decentralized? Do you want things run by the governments, run by community? Do you want something boring, fun? All those options will exist. We are entering the world of coexistence. Coexistence of opposites, coexistence of probabilities, or even mixed combinations of things. They will all be simultaneously functioning in the same place, and it is left to us as users to choose what we want to associate ourselves with. What do we want to be part of? Do we want to be part of a fun chain doing fun and cool stuff? Do we want to be part of and regulated chain, being in the safe, regulated, secure, audited zone? We have to make the choice, and those communities are being formed. So it is a community-centric, a tribal approach, if I may say that. We are all forming small tribes, like how companies have been doing it lately. And in this approach, everybody has a space. Every kind of company has a space. And this creates a beautiful segment of new companies that can cater to a segment of audience that make the most sense to them. They can relate to the audience. They can communicate to the audience. It's not about big corporates, one corporate having a 90% market share. It's about so many flavors of companies trying to address the same problem in their own unique way, in a language that their audience and they can understand. A good example of that, you have an Uniswap, you have a Binance, and you also have a Degen kind of a swap. So which one would you choose? Which one would you use? If there's a Degen, they like this, the design, the style, the colors, the complexity that goes with a particular DEX, which is just meant for Degens, they will use that. But if a user wants something more simple, and they're not tech guys, they might probably go to Binance. If someone wants something regulated, they would go to a super regulated exchange. So people will find what works best for them. And that is just beautiful. You don't have to do anything. Community doesn't have to take any efforts. It's going to be an organic process that leads everybody to the right place. It's led by founders, it's led by institutions, it's led by leaders. It's a leader-driven culture that we are moving in right now.
Yeah, so we have to remember where we started, right? And we have to provide as much value as we can. So thank you so much for this fireside chat. I think that we're out of time. Are there any questions for Mr. Key? Okay, thank you so much. Thank you. It was a very interesting discussion. Thank you.
Thank you so much, guys.
Thank you very much, gentlemen. That was quite insightful. Ladies and gentlemen, we are going to be moving on to the next speaker of today. A very interesting speaking, I would say. I'm very pleased to welcome Mr. Syed Sitwat Rizvi, an expert in Islamic finance who is going to be presenting Blockchain and Islamic Finance, a match made in heaven. Please join me in welcoming him on stage. You're welcome.
Where is my presentation? If you just put it. Hello. Yes. Assalamu alaikum, everyone. This is Syed Sitwat Rizvi. Let me start with my introduction first. I've been associated with Islamic banking and finance industry from past 17 years. I worked for several banks, including Mashriq Bank, Dubai Islamic Bank, Mizan Bank, Samba Bank back in Pakistan. And my area of expertise remained Sharia compliance, product development, advisory, consultancy. And I've been associated with several government bodies as well for providing their debt structuring, sukuks, etc. So today my focus is on, I've just seen we have talked a lot about blockchain, and we all know what is blockchain right now. So how we can embed it in Islamic finance or in Islamic banking products to get the benefits out from it for better Sharia compliance, for solving some Islamic banking issues, mainly related to increased documentation and some serious Sharia requirements. So let me start with it. Can I have the, please, key? Oh, yes. Oh, thank you so much. So, I've just been allotted 10 minutes, so I would try to quickly forward some kind of knowledge which I want to share and move forward quickly. So, objective of following 10 to 15 minutes is to explain you how we can embed blockchain into Islamic banking products for some benefits. I will not spend more time on explaining what blockchain is, though I included it in my presentation. But as I have just seen, we have a lot of discussion about it. So I'll quickly move on towards the Islamic finance part of my presentation. Yes, we all know how blockchain works, so I'm not going to spend time. So I'll start from here. Similarities between Islamic finance and blockchain. As we all know, blockchain offers several characteristics, as a result of which we are now using it everywhere in all industries. So how it can be beneficial for Islamic banking products? So just look at it. Authenticity, transparency, immutability, sequencing, timestamping. All these are some basic features, characteristics of blockchain, and all these are also required in Islamic finance. All these are also required in Islamic banking products. So why not use blockchain to execute or to offer Islamic banking products so that the product itself, while staying on the blockchain, offer all these characteristics, and there would be no requirement of any further controls or monitoring. Consistent state across all participants, open to everyone, right? Only immutable, transparent data storage. All these features to blockchain align with the fundamentals, principles of Islamic finance. Some top 7 use cases of blockchain in banking finance. We are discussing it since morning. How blockchain works. This is a model which we can use for replacing the bank's products of opening LCs, LGs for international trade finance. If we use blockchain, this is a bit, you can say, a model. If you follow it, you can exclude the LC process, and there would be a sense of comfort for both the sell exporter and the importer, and as well as there would be possible options for the seller to obtain receivable finance, for importer to obtain the import finance, etc., etc. Since time is less, so I'm not diving into it to explain. Now, the core focus of today's discussion is, I've selected a few products which are being practiced globally, widely practiced, and I'll show you like how blockchain can be beneficial for them. First product, Murabaha. Like, just for the ease of audience, let me explain what Murabaha is. Murabaha is a simple sale contract. It's Islamic terminology of a sale contract. It's a simple sale contract with an additional requirement of disclosing the cost to the buyer, disclosing the actual cost to the buyer. So in a Murabaha contract, when a seller sells something, it tells the buyer that I bought it for, say, $100 and selling it to you $120. So this kind of sale is called Murabaha. And it is being used by several Islamic banks across the globe to offer various kinds of products, but mainly related to short-term financing products, working capital products. So how blockchain can help? I have listed out the Sharia compliance requirements for this Murabaha product, and then how blockchain can help and what are the benefits. So looking at the Sharia compliance requirements of the Murabaha product, you can see it's the requirement in Sharia that a seller should own the goods before selling it. Okay? A seller should have the possession of goods before selling it. So, ownership, and thirdly, the goods should exist, obviously. If the goods does not exist, you cannot sell. So these three main prerequisites can be easily authenticated through use of blockchain if these goods have been already on a platform which is supported by blockchain, and that particular platform may have these documents which are the evidences of ownership, existence and possession uploaded in that platform. Similarly, there are some contractual requirements of executing a Murabaha contract, just like Murabaha of an acceptance and the related payment schedule in case of deferred payment. So the same can also be uploaded on the blockchain platform so that we can enjoy the following benefits. Number one, proper record keeping with authenticity, obviously. Transparency with respect to timing of signing and execution of document. This is really important, where Islamic banks find it very difficult to comply with it, because in order to execute a contract, you need, as I said before, the seller needs to have the ownership position of the goods. So timing matters a lot, because whenever a bank finances a customer, the customer is involved in daily purchasing and selling of goods, consumption of goods. So we need to make sure that the proper sale contract has been executed before the consumption of goods. So there are several other Sharia controls which this blockchain use may support. Similarly, evidence of existing and timing of possession of goods, complete audit trail, minimal human involvement due to utilization of process. So ultimately, the outcome will be the augmented transparency in the Sharia compliance process, which will surely help the general public to rely on the products and services being offered by the Islamic banks. So currently, this product, blockchain is being used by banks, a few Islamic banks as well, but not for this purpose, but for some other purposes, for some other roles. What I want, like, we should at least try exploring it through application of this technology in execution of Islamic banking products. Similarly, there is another product which I took an example, Istisna Kam Wakala. This product, what is this product? This product is mainly used to purchase goods which are manufacturing in nature, or like if the real estate builders who are constructing an apartment, they can use this product, or any manufacturer can use this product. So similarly, I have just listed down some Sharia compliance requirements of this Istisna products, which are different from the Murabaha, but yes, how they can be incorporated in the blockchain platform and what benefits can we have it. Third one, since I have been left with 2 minutes only, diminishing musharaka. It is also one of the most commonly used products, mainly for long-term financing, for housing finance, in which the bank and the customer jointly owns a mortgage property, an asset, or any plant and machinery, and over the period, the customer gives rental to the bank for the portion bank owned, and with every rental there is a principal repayment as well, which is a house unit selling share to the customers. So this was a brief of the product, and in this product you can see there is a bit different Sharia compliance requirement as well, that asset details, including proof of useful life, transaction, surveyor, valuation report, possession, delivery, use of products, some different agreements. Again, when all these be integrated with any blockchain platform, surely it may be a private blockchain operated by the bank. So it would help the entire Islamic banking and mainly the Sharia governance, Sharia compliance process to get fully automated, because you will not be needing resources in Sharia compliance or Sharia audit, very much so many resources in Sharia audit to help and see and verify that whether the Sharia requirements have been met or not, because blockchain will be providing all these controls. So thank you so much. Last is this. There is also an idea in my mind how we can use smart contracts. Like there can be any international organization which may, like they are, like AUFI, IAFM, these are the international organizations which provide standardized documentation for the Islamic banking industry to execute. So what they can do, they can provide some standard smart contracts to the Islamic banking, Islamic financial institutions, which these banks can use in their respective products and transactions by tailoring to some extent. So it's all done from my side. Any questions, everyone? So I think I have explained properly. Thank you so much. Take care.
Thank you very much, Mr. Syed. Ladies and gentlemen, if you have any questions, please don't be shy. Just raise your hands and we will come over to you with a microphone. It's not a very big crowd, so you don't have to feel intimidated. We're now going to be moving on to a very insightful panel discussion on how AI is shaping the United Arab Emirates fintech landscape. And I would like to call on stage our panelists. I'd like to welcome Dr. Isha Farha Qureshi, the moderator, the CEO of IFQ Technologies. Round of applause. Thank you. I'd like to welcome Noel Hatim, partner of digital assets in Mintiply Capital. Mr. Kunal Narwani, director of Meta Advisory Partners. Mr. Mohammed Umair Saeed, the founder of IOBM. Mr. Colin Fitzpatrick, the Chief Business Development Officer of Griffin AI. Welcome, ladies and gentlemen, and I'll leave you to it.
Thank you very much. Thanks for the introduction, and happy to see the own face again and again. Well, Colin is getting ready with the mic. So, how are you all doing? I can see there's an energy-packed audience over here, but the interaction is very less. But our idea is knowledge sharing. So feel free to throw questions, ask questions. You can put the panelist in the spotlight as well. Sorry. Well, let me introduce myself. I'm Dr. Isha Farha Qureshi. I'm a CEO and founder of IFQ Evotech. So before my entrepreneurial journey, I'm coming from a cloud infrastructure background. I worked as a cloud infra practice head for Finas, and I worked as a tech strategist for GEMS Education Corporate Head Office. I worked with Hewlett-Packard, Dell EMC, and VMware on data center and virtualization technology. And then my interest moved to artificial intelligence. On the lighter note, I'm a Mrs. Universe 2019 Solidarity, the first candidate to represent UAE at an international pageant. And I'm also Mrs. UAE United Nations as well. So it's an honor for me to be the moderator for this beautiful panelist who is here going to discuss a very interesting topic. So let me first introduce my panelists to you. So we have Noel Hatem. He is a partner digital assets, Multiply Capital. He got 12 years of experience in technology-driven companies holding leadership roles and co-founding fintech ventures, including cryptocurrency exchanges, proprietary trading, asset management, and advisory. Let me also welcome my second panelist, Kunal Narwani, Director, Meta Advisory Partner, a professional with over 18 years of experience working with leading firms like EY, PwC, KPMG, and Abu Dhabi Accountability Authority. He is currently running his own advisory firm, closely working with startups to help them in understanding complex finance issues, providing fractional CFO services, and supporting their recruitment. So kindly please put our hands together to applaud our panelists.
Happy to be here.
Let me invite the next panelist, Colin. He is a Chief Business Development Officer, Griffin AI, who has over 20 years of experience in the tech industry, having worked with leading companies like Oracle, Salesforce, and HubSpot, always at the forefront of innovation. He founded Web3 company in the metaverse and NFT space. Today, Colin consults on helps bring in transformative power of AI agents to the Web3 ecosystem. Now, let me introduce our last panelist, Muhammad Umar Sayed. He is the Group Chairman and CEO of IOBM. As a technology leader, Sayed has demonstrated history of working in multiple industries: information technology, software solution, drones, robotics, Web3 ecosystem, which includes metaverse, NFT, cryptocurrency, and decentralized finance. So, ladies and gentlemen, we have wonderful thought leaders here who are very well versed and expertised in fintech and coming from a hardcore technology background. Well, welcome. All right. So we know that there's a lot of innovation which is going on in every industry, and of course, when this is an artificial intelligence era where the traditional financial services have completely disrupted, right? And it's been moved to decentralized. I just heard one of the panelists previously mention about it's about the freedom, it's about the choosing, it's about you owning your own data and you owning your own finance. You are the owner of yourself, kind of a aspect, which is amazing. So my first question go to Colin. So while we are in the disrupting era of financial services to a completely new artificial intelligence, I can say. So what's the role of AI and agents taking shape in the future landscape of, it's not just the UAE alone, but as a global? What is your thought about that?
Sure. Okay. Thank you for having me, everyone. Very nice to be here. I suppose I'd just like to ask a question to the audience, first of all, because I think everyone pretty much knows what AI is these days, but hands up if you know what agents are and what they can do. AI agents. Okay, so we had one, and that's it. And that's just, I've done 3 conferences now, and it's been exactly the same. But I'd like everyone to pay attention to what is about to happen with AI because of agents. So let me first of all define what they are. An AI agent is an autonomous piece of software that can operate independently to complete goal-oriented tasks. So they can use logic, they can use reason, and they can actually do meaningful work, as opposed to any of the chatbots you see now or typical AI, which will literally just complete one task, and it's not smart, it's not intelligent, it doesn't learn. But AI agents are about to change the game quite significantly. And next year, we are really going to see an onslaught. We've already seen a shimmer of them from the likes of Google and Microsoft, etc., and OpenAI are bringing out some now. But what it will mean is that instead of AI today being a box where you type in a question and you get an answer, and as remarkable as that is, and it is intelligent and incredible, that is where it ends. Whereas what AI agents will be able to do is actually complete meaningful work for you. So whether it's, okay, I want to book a holiday, or whether I want a business strategy created, and literally yesterday there was another one that came out that can do the job of a team of consultants. We're going to see quite a transformation in knowledge work over the next couple of years. In regards to finance, what that will mean is, well, first of all, simple stuff like calling up our bank to get something fixed and having to be on hold. That'll go away. Our AI agents will take care of any things for us, which will be remarkable for our day-to-day lives. But much more so than that, we will all have a personal financial advisor who will be able to monitor our complete transaction history or look at our investment criteria and come up with a personalized plan. Ultimately, the attention that a high net worth individual would have gotten in the past from a team of consultants, basically everyone will be able to have now. And since blockchain has been quite a topic this morning from the previous conversations, what my business does today, right now, is we deliver AI agents for the world of Web3. And we have brought a series of agents to deliver what a high net worth individual would have in an institution or a bank to your average user. So we provide you with a research assistant, we provide you with an investment assistant, and also a security manager. So you're able to use your digital wallet today, which can be very difficult and tricky, within a set of AI agents where it's just like ChatGPT. You talk to it, you can ask it about past transactions or get it to send, swap, bridge, stake, anything like that with just a conversation. And that to me is going to be completely transformational over the next couple of years for the average user, making everything more accessible to everyone.
That's so wonderful, Colin. So let me put it this way. Agents are more like a subject matter expert who specialized and trained on one specific task or activity and trained on your proprietary data. Am I right? And then, in other words, the generic AI, you can call it as a brain in the jar. It doesn't understand who you are, what context are you talking about. It's all about what input that you give, and you get the human readable format output based on the instruction that you're given, right? Right.
Yeah, exactly. I mean, the way I see it going is we will have a team of AI agents, and each agent will be a specialist in one specific thing, but they will work together to, you give it a goal, it will make a very long list of tasks that needs to be done. They will all go out, they will work together, they will use tools, they will integrate data, they will do research, they might even make purchases, and they will come back and they will complete that body of work for you. So it really will be like having your own team of digital specialists.
Amazing. All right. So let me ask to Mr. Kunal the next question. Everything comes with, it's like two sides of a coin, right? There is the challenges as well as there is an opportunity. But we corporate people always wanted to, convert the challenges into opportunities. So I want to hear from you. BFSI is one such industry always embraced any new technologies which comes into the market. From a UAE standpoint, our landscape in the entire Middle East region, how is that, challenges as well as opportunities that you foresee by integrating artificial intelligence in the entire fintech sector?
So I think, let me address the opportunities first, right? So I think from an opportunities perspective, it's a blue sky, right? So it's as, limited to what your imagination can limit you, right? So as Colin said, you have the opportunity to introduce AI agents. You have a lot of people who are currently not included in the banking sector. So getting financial inclusion. Especially amongst the blue collars, right? So that's not only in the UAE but also the GCC as well. But then the other side of the coin is, even those who are banked are not necessarily banked, completely, right? So they may not, for example, have access to a private wealth banker. They might not have access to, funding facilities and so on, right? So just achieving that financial inclusion, is something that AI can support, and on a large scale level as well. In terms of challenges, I think, the regulatory landscape is quite volatile, right? So what I mean by that is that, it keeps updating, quite frequently. And so making sure that, the firms or the companies are on top of it and making sure that, they are compliant with all the regulations. So I think that's something that they need to think about. Also, in terms of the ethical use of data, right? So whilst, AI gives us an opportunity, to customize a lot of services, but then what it needs is a lot of data, right? And how we use that data and how the firm is responsible for using that data and how that's communicated transparently to the end consumer as well, is something that, they need to think about. So that's something that, as an industry is a challenge, right? And I feel like, so underpinning all of that is also, having the right talent, right? And this is something that at Meta Advisory Partners, we help a lot of our clients, get to, right? So, in order to achieve, regulatory compliance, in order to sort of look at, how to ethically use data, you need the right talent with the right mindset, right? And they need to, also sort of have a different facet to them, that they're willing to upskill themselves, because the technology is constantly updating, right? So they need to be, agile. They need to be, nimble to all of that. So that's something that I see is as a challenge.
The early you adopt, you are the success person in the market. That's how the trend is now. So now we spoke about the challenges. So let me ask Umair. The question is, are we ready yet? Now we are talking a lot about AI and agents, and then we touched upon the challenges and opportunities as well. From the regulatory standpoint, or from adoption standpoint, and the technology hosting standpoint, putting all together, are we ready yet to adopt artificial intelligence in that larger scale in the fintech industry today?
See, like AI, when it comes to the AI and to the financial decisions, so like it enables significantly and advancing rapidly. But like, are we ready? Are we fully prepared for it? So like that's the question. So like, if we are going to fully prepared for it, it totally depends on the scope, complexity, and trust for the systems which are required. So what I can say, like what we need is like the hybrid kind of the systems, where the artificial intelligence and the real intelligence will work together, and artificial intelligence augments with the human decision making, not entirely replacing it. So like it must augment the real decision making of the human decision making.
More like a human accountability and insight needs to be there, while we are also relying on AI. So that asks to another question to you again. Are we, we are not ready yet for an AI-driven decision-making fintech landscape. But do you foresee that it will be soon be in place, and all the industry is going to change? When we talk about and fear about singularity, it's going to happen while AGI is already there preparing to win over. So do you foresee that it's going to take over in that aspect?
Yeah, I can see that, like it will be. It will be like, it is going to be happen. It is so near. So like we will, like the human intelligence and the real intelligence will work together in the hybrid kind of a system.
Okay, so being a techie, then let's speak on the positive side of it. Now, while we all were talking about the major, the population where they have banking services access to, but the majority of the population, and as per the World Bank, data, it says 1.6 billion population across the globe who do not have exposure to any kind of financial services, or they don't have loans, mortgages, insurance. So my question is to Noel. So how artificial intelligence can support the financial inclusion, and what changes it can probably bring into the future?
Well, hello. So I'm going to go back to like Colin, because I think this is one of the most powerful things about like AI that you have. Like, is you have an agent and you're moving to a new country. Like, if you look into this room, most people here are expats, right? So when you have that, when you come to a new financial framework, or like a more structured product that you don't understand, AI will be able to bridge this. It will be able to like allow people to participate more efficiently in the markets, which I feel like this is something that we are still in a very early stage. Even when we look at the stock market that has been for ages, like most people like still are not investing. It's something new. So, and we talk about crypto, it's something even like
it's like it's a freshman, right? And I feel like AI will be able to kind of like standardize the financial system and serve the population that doesn't have access, that sometimes they don't even know how to like write, and they can just talk to like a system, and the system will be able to assess their necessities and allocate their capital, help them have like better financial decisions.
Yeah, I also feel that, Noel, probably we need to put an effort for accessibility, not just on the financial services, while we talk about digital literacy as well, plays a major role, right? You want to add something? Yeah.
Yeah, so, I mean, to Noel's point, right, just to bring that to light, what that would look like, for example, right? So let's say, you have a worker here who receives a salary and then sends this money back home, to wherever they come from, right? But then they're significantly unbanked, right? Now, one aspect of it is that, AI will help reduce the cost of actually opening an account for these kind of customers, right? So because it's a mass market, so from a traditional bank perspective, it was earlier too expensive to bank these customers, right? With AI, that simplifies, right? So they can then be brought onto a banking platform. What else can also happen is, with the use of technology, one can analyze what is the inflow that this person has, and then also what are the spends like that they are doing, right? So for example, are they sending money back home? Are they spending on necessities? Is there something that, they are spending out of the ordinary, and what that would look like, right? And this analysis would then enable them to get access to credit facilities. So for example, like a mortgage, for example, like a credit card, for example, like a car loan, for example, right? Which earlier was not available to them because they were not banked, right? So this helps overall to bring them into the mainstream.
That is true. So sometimes, it's a true as well. My maid at home, her name is Jenny. She sends every month, money to her hometown. She is from Uganda, and it's through mobile platforms. Actually, I have requested her, why don't you open a bank account? I offered her, but they are not comfortable. So another interesting fact is that when we said about the inclusions, the majority of the population who are not having access to financial services, but they are using mobile phones. So that was an untapped market still, I would say, it's in billions, for the mobile platforms can be used widely for remittance, for transactions, that to blue collar as well as the small entrepreneurs are the ones who are doing the global remittance.
Some of these, people leapfrog, stages of development that, previously they wouldn't have the opportunity to address, right? So countries in Africa, are significantly using banking services through mobile phones, and penetration of mobile phones is significantly higher than, having a bank branch, for example.
That's right. So let me ask next question to Colin. Regarding the security concerns, indeed, while we are very much at the peak of our advanced technology, I think tomorrow quantum computing is going to be something beyond AI as well. So now, while we integrating AI into the most sensitive data among any other industry for that matter, I would say after health, it's always the BFSI which is dealing with very sensitive data. While we live in UAE, there is always a ground rule that we cannot host some of the proprietary data and confidential information outside the geography of our country. So on the concern on the security aspect with an AI integration on the BFSI sector, what's your thoughts, and can you put some lights around that?
Yeah, it's not the most exciting, but it's certainly one of the most important topics, because in this future that is actually really, really close, AI is going to know more about us than most people. It's going to have access to a huge amounts of our data, and that can be potentially very dangerous. So if you think about it, right now the major one is, do we really want all of the major companies like OpenAI, like Microsoft, like Meta, having all this crazy amounts of data on us? And especially when then agents come in and they're going to start transacting on our behalf and talking to other agents, we need control and we need transparency over that. And that's where the blockchain comes in. So me personally, I believe in a future where AI and agents operate in a decentralized and permissionless yet secure environment. So we have to give these AI agents an identity so that we know we can trust them, and they need to have a reputation and rating so that we know that they're safe to use and that they haven't been misappropriating in the past. But in this, I think it was like what Noel said, it's not just on the sort of the client side, it's also on the customer side. That we talked about moving to a new place. I mean, we've all moved to Dubai, and the amount of administration is absolutely insane. Why can't we have a digital identity of ourselves that is our own personal AI agent that has our data but is smart enough to know what to give out and what not to give out? We should really, by this stage, and they're doing it in Europe right now. There's 400 million people who are getting this one digital identity right across Europe. How it's going to be implemented, I'm not quite sure, but we need to be able to have control over our own so that when we're signing up for a new website, we can give it the basics, but when we need a government institution, we can give it access to everything. I do think that this will be a solved problem. Number one, we've got proof of personhood. We need to be able to prove that this agent is representing a real person, that is me, that is Colin, and not one of the millions of bots out there, which is, fraud is going to increase crazy amounts. We've got deepfakes, we've got voices. I mean, I've cloned myself as an AI. So, as just a fun thing to do to put on LinkedIn. But, maybe my mother would fall for it if I called up asking for money. I don't know. It's certainly a very significant problem that is going to be a real problem into the future. So we have to use technology to get ahead of that.
All right. So, so that's something, we need to think about and take to the next level as well, because I'm sure adoption is really in a faster pace. And not just that, the framework, the regulatory standpoint, that the question is to Noel. So from the regulatory standpoint, UAE as a nation, the approach is, very open, and it embraces. UAE always wanted to be the number one, and this is the only country in the world with a minister for AI as well. So that's where we are. So from that regulatory standpoint and the framework, how is UAE's approach looks like for you?
I see as very similar to what the UAE has done to crypto. They are always supporting innovation, which showcased that back in 2017 they had the first ministry for AI, and I feel like one of the things that is still not clear in the region is the definition of AI, which they're still looking at. So it's not maybe too broad or not too restrict. So I feel the UAE is a very special place. It supports innovation in the best way that I've seen, and I've been around for a while. So I'm very I would say I expect great results coming from the region. The investments, not only here in the UAE, but in GCC countries, KSA, they're bringing AI infrastructure here. So it becomes less dependent on the big cloud providers that are not based here. And with all these geopolitical tensions that we face recently, I feel it's the best place to be.
Amazing, yeah. I believe so. I agree with you.
I think I'd echo Noel's points. I think UAE sees itself as an early adopter.
Early adopter,
right?
Yeah.
So in many aspects, they're ahead of the curve in terms of inviting companies, giving them access to government organizations, doing POCs. So yes, there has to be regulation, but then I think they're going about it in a sensible way by actually seeing what organizations are struggling with, and then trying to solve for that, right? So it's not a government or a regulatory driven approach. It's rather an industry driven approach where you're looking at what people are trying to solve and how you can facilitate that, but at the same time protect the consumer, protect the rights of the people. So I feel they are ahead of the curve.
That's right. I totally agree with your point as well. And when companies are pumping millions in experimenting AI, what I feel is that there are many AI companies across, across the globe. Even there are many startups coming in as well. Of course, AI is a new technology, so it will be a startup indeed. However, adoption of the customers, I'm not finding it so significant, even though they wanted to have AI as a fancy layer, at least on a customer experience aspect, maybe not deep diving into the other possible value that it could bring onto the table. So if we look at from that angle, people are pumping money more on experimenting it rather than bringing an outcome. Maybe it's like a revenue generation or cost reduction of anything of that specific numbers, but that is where everybody is focusing on. So my question is to Umair. While we have all these new AI startups across, do you have any message to tell them, which line or how they have to take it ahead with innovation and growth in AI?
The startups must understand the local requirements and collaborate with the regulatory authorities like Central Bank of UAE and DFSA, ADGM, regulatory labs, and in compliance with them, like if they are doing any kind of AI innovation.
Okay, all right. So is there any other point?
I think, from a startup's perspective, so I work a lot with startups, right? And I think they have now moved on from a stage of only being a POC or a proof of concept to actually monetizing customers as well, right? So the startups that I work with and I advise, have actual use cases and are sort of generating decent amount of revenue from the market. In fact, I see, some organizations even moving from Europe because the GCC is sort of a target market, from that perspective. So there is a lot of good tech out there. I think from a startup's perspective, rather than copying and trying to emulate what other companies are in the West, it's important to understand how they can add value to the problems to the organizations locally here, right? So to Umair's points, understand what's the actual pain, and then solve for that, right? So not necessarily bring solutions that are elsewhere to the UAE or to the GCC, but actually develop solutions. And a lot of the startups that we work with, have successfully been able to deliver that.
Yeah. So as an advisory for many startups, I want to ask you this. I'm taking other industries for a time being. Other startups, whoever is not open to AI or not adopted to AI, they are still, struggling to compete with other large players. So do you have any message for them?
So I think, the way ahead is the use of technology, right? So some of the companies that we work with are SMEs as well. So as you said, they're not AI-based SMEs, but just generally SMEs. And we introduce them to technologies from other clients where they understand the value of that, right? See, at the end of the day, for any company, the core focus has to be, going out into the market and delivering business, essentially, right? So there's still a lot of technology that they can use as a start to solve a lot of the back-end stuff, right? So the admin, the expenses, the accounting, there's a lot of value to be added there, right? So they can start small, and then build in terms of like say growth marketing agents, so on and so forth, right? But the future is technology, right?
It's a time to wrap up. So let's open the forum for the audience. Audience, do you have any questions in line with? Oh, you have question? No, only over 1 minute. Okay, all right. Oh yeah, we have a question. I'm doing great, amazing. How are you? Okay. Yes. Move 37? Yeah.
So just very quickly, this is a game called Go, which is an ancient game played for thousands of years. It's very, very simple. You've got white and black sort of stones, and you've got to take over the board. It was thought for a very, very long time that humans would always outpace AI because of the fact that there is just such a vast amount of moves possible at any one time. In chess, IBM's Deep Blue was able to do the calculations and just brute force it. But it was always thought that humans have a certain intuition that a computer will never have. There is a guy called Lee Sedol who is the champion. He's been the champion for years and years and years, absolutely wiping everyone out. So these guys in DeepMind who were bought by Google came and tried to, they used a neural network to teach the game to teach itself how to play without giving it any instructions. And that's really important. Even Tesla are doing that now. And when it was move 37 in the game, where all of a sudden the AI puts a stone right up in the corner and everyone went, what is it doing? Oh God, this thing is stupid. That's the dumbest move I've ever seen. But it was thinking so far ahead that later in the game it proved that actually this was an incredibly strategic move that gave it this advantage all over the rest of the board, and it won the game and it won the rest of them. So that was a very, very pivotal moment in AI when it actually did something extremely creative that no human would ever thought of, that we thought that was absolutely stupid, and has now led us to believe that when we get these machines to think for themselves and to not tell them what to do, but to figure it out, it's very, very powerful. And we are seeing that now percolate across because it's neural networks. You throw it in, we don't really know what happens, but what comes out the other side is quite remarkable. Thank you for the question.
Thank you so much. So if you have any more questions, you can catch all of them. I will also be available for some more time. Well, so thank you. It was amazing. So let's hope for intelligently driven, AI-powered banking and financial system for the future. Thank you so much for giving us opportunity.
Thank you.
Love
Thank
the
you,
conversation.
Thank you all very much. Happy to see you again. You too. Thank you. Ladies and gentlemen, I would now like to call on stage Rikael Chung, the CEO of Gold Fund Corporation Limited, who is going to be presenting on BTC Memento Gold Coin, from traditional finance to Web3. Please join me in welcoming him on stage.
Hi, everyone. Oh, this is me. I'm from a very traditional finance company. We do gold trading, smelting, traders, and we do hedging products for everybody. So we had this concept in the early stage of this year to have a memento gold coin, which is a physical one for everybody else, move to the future of the trading era. Can we have the PowerPoint? Okay, you see here is what's a BTC, is a Bitcoin. Oh, come on. This is our company. BTC Memento Fine Gold Coin plus NFT and Web3. So the idea was actually from one of the KOL in Hong Kong. He asked us whether we can get a physical gold coin for BTC. We see a lot of this BTC token made from the copper and all of this, a different material. But then a real one and fine gold together with the Bitcoin, a new concept for us. And then people think about just why only a physical gold. What's the edge? So he said, oh, we come with some new idea. We come with an NFT. We come with the Web3. So NFT, yeah, maybe it's been a little old school at the moment. Yeah, it still is good. Maybe something good is going to happen in the future. And Web3, we are looking at something GameFi. Yeah. So we look at it, how we go it. Okay. We know we have three important milestones in year 2024. Number one, the 15th anniversary of the birth of the Bitcoin. We have the approval of spot ETF in US and the fourth halving. And then you see when we launch this product, we are actually on the same day of the fourth halving. It's on the 19th of April. Yeah. So you can see from this is the design of the Bitcoin, and we have all these important memento items put onto the back of the Bitcoin, the gold coin. At that moment of time, people are worried about whether the gold will go up or it may go down. So people buy this. We offer them an option. So we are putting the traditional finance type of skill. If anything go below 2,000, we take it back. Unfortunately, you know the gold price now, right? Now it's 2,007, almost 2,700, almost 2,008 a week ago. So the buyback option, we don't need to do it anymore. We have a buyback guarantee if the gold price rise up to 2006 or the Bitcoin go up to 80,000, and then what's the price now? So we are very successfully designed the product. Okay? By the way, unfortunately, there's still some in the Chinese. You see, you can take your phone and take an inscription, scan this, and you can find out what happened on the day we launch. So we put something of what we call the Web3 in terms of this cryptocurrency development. Yeah, the NFT, inscription. We don't know, there may be a lot more in the coming future. But then we integrate this characteristic into the launch of the Bitcoin. So people can memorize what happened in year 2024. Okay? And then for the people, the persons who bought this Bitcoin, who buy this Bitcoin in this year, we are going to stop all the production by end of this year. There will be no more this type or this design and by the end of 2024. And then we will do another final inscription. We put all the people who buy the Bitcoin or buy this memento Bitcoin into the next inscription by the end of the year. So anybody have the name on it, the contact on it, so it's like a memory of whoever participate in the project. And also, the buyer can get an NFT on the Polygon chain. So we also want to put more crypto-related or the Web3-related items or work or functions into it. Yeah. And we got the memento-rated inscription. NFT holders will enjoy the future and the bonus when participating in our upcoming Web3 projects by using the NFT. As a traditional finance guy, I think you have there are so many experts, genius in this industry. You talk a lot about AI. You talk about a lot of these startups, right? Are they really make money? A lot of them are burning money, honestly. As a traditional guy, I think I cannot, or I'm not able to have this concept. But as a businessman, we want to create a business that can make money. Yeah, we see there's a lot of good futures, but I think making money for the company is my job and responsibility. So we will take advantage of the new technology. Yes, I think those are good, and this is good for the future. But how are you going to realize the future technology from the traditional finance? We have now this RAW. Yeah, RAW. Yeah, there's how to tokenize the project or some physical item. Oh, even the gold. there's a lot of companies in worldwide, they try to tokenize the gold price with the gold together with the new technology. So we will see a lot of them in the coming future. I don't want to spend too much time, but then I will let a little bit about our future plan. We were going to do a GameFi project using the same idea. We're going to do a wallet-to-wallet trading platform. Okay? I think that will be our future, and more people like to do it because using the Web3, they can they can trade very comfortably with the security of their fundings. Yeah, it's all going to be on the Web3. We look forward to be launch it in the coming future. I hope you can visit our website or visit us, and then we will see what we can work together in the future. Thank you so much.
Thank you very much. Thank you. Ladies and gentlemen, the next subject of today is about the 10-minute talk that every trader needs to hear. And for that, I would like to welcome on stage Mr. Jin Dai Tai, the Managing Director of JinDaoTao.com. You need to switch it on.
All right. I've been here since the morning. I was listening to everyone talking about Web3 and blockchain and all that. And I sat there going, bad word, and then, is this going to be relevant? Right. So first off, how many of you are traders, trading? Bitcoin, FX, any trading at all? A couple of hands. I would have liked to see more hands, but a couple of hands is better than none. So, okay, so what I do, I trade, I teach people how to trade. I am on, not there, okay. I'm on YouTube every day streaming, telling everyone what's happening in the markets, where I think prices could go to, what could happen, right? And the common thing is that everyone trades, but you only hear the good stories. You don't hear anyone losing money. Why is that? But we all know, when you are trading, losing is part of it, and it comes down to being disciplined. So, if you think about it, everything that you do today is all down to discipline. It's all down to what you do when shit hits the fan. So, discipline in trading, ultimately, I've seen so many people do this where they trade, they study the markets, they trade, and they grow their account. They do well, they do well, they do well, and then they disappear. Because one big loss wipes out everything. Right? It happens on crypto. They buy it up, they buy it up, they buy it up. It came almost to, I can't remember what the price was, and then last week or this week we've seen it come right back down again. Right? Without a stop loss, without the right risk management, you could just be stopped out totally. So one bad mistake could undo months or years of good progress or days of good progress. Right? And it comes down to not just money. You're not just losing money. What happens when you lose? You get frustrated, you get emotional, you possibly even give up and stop trading at all. Right? So ultimately, you need that discipline. You need to have that step-by-step process of what to do so that you don't get impulsive when the market goes crazy. Don't go crazy when the market goes crazy. Okay? So what's the cost of breaking rules? Like I said, it's beyond money. It comes down to emotions. It comes down to how you feel. It comes down to accountability. All right? Skip that one. I've got 10 minutes. Let's get through this. The best thing about trading is what? Why does everyone want to trade? You have no boss. You have no manager. You have no one to keep you to check on you. But that's also the worst thing about trading. Because you're sitting there, you're trading, you're making money. If you're losing money, no one's checking on you. If you made a mistake at your job over and over and over again, what happens? you get fired. But yet, if you make a mistake over and over and over again in trading, what happens? You go broke. You either go broke or you just go like, oh, top up more money, go again. Right? So you end up going through that habit over and over again. Right? And if you think about it, what makes people, or why are, as much as we've talked about people who are losing money, why are there people who are making money? Because they have a whole clear set of rules. Very clear rules of why they're entering a trade. Trading shouldn't be emotional. There is always a little bit of emotion in trading, but it shouldn't be emotional. Every trade you get into, you want it to be a logical process, a step-by-step process of why you enter the trade. Right? So ultimately, every decision matters. If you're jumping in randomly, you're going to get random results. If you jump in with a sequence and a process, you're going to know what you're going to get. Right? Preservation of capital. We've all talked about this pretty much. Every talk just then was about how to, preserve your capital, the whole blockchain, Web3. Ultimately, as much money as you can make, you can never outmake a bad risk management. You can never outprofit bad risk management. Right? The markets are moving all the time. If you're not managing a risk, what's going to happen? The golden opportunity comes around and you got not enough capital to take advantage of it. So protect what you've earned. Avoid excessive risk taking. The good thing about trading is that it all sounds fantastic in theory. Put a stop loss. For those of you who trade, how many of you put a stop loss? No hands up, right? In theory, great, put a stop loss. Yes, I know that. In theory, don't take too much risk, right? And I've seen everyone put in trades over and over and over again. I'm like, that's too much risk. So it's not about what you know, but what you do. All right? And losses grow exponentially. The bad thing about risk management is that you say, I'll go put my stop loss there. I'm not going to put it there, but I know I'm going to close out when that candle gets to that point. And then it gets there and you go, nah, it's going to turn out. It's going to get to that point and I'll close out. And it goes lower and lower and lower and you go like, it's too low now, I can't close out. It's too low now, it's going to bounce. And does it ever bounce? When does it bounce? It bounces only when your account goes to zero. It goes to zero, oh great, and it goes back up again. Oh, I should have held on a little bit longer. I should have put in more money. Right? So, as much as trading is never going to be 100%, no one does this. No one sits there and go, and because it's too painful to realize why you have lost. Right? No one goes through their losses. They go look at their wins and go, oh yeah, I made money there, I made money there, but not why I have lost. So losses reveal weakness. Every loss is a lesson. And you have to go through this. You have to embrace it. It sounds a bit perverse to think about it. Embrace the losses, look at it for feedback. Right? And you need that patience, that balance between patience and precision. When I first started trading, this was back in 2008, I would have 10 trades a day. I would have 10 trades an hour. I would be banging in trades left, right, and center. It was the GFC, so there was a lot of market movements. Right now, I'm on average of 2 trades a day. At best, at most, right? It's not about, with trading, you don't have to be busy to be doing well. You have to be smart to be doing well. Because you're sitting there and you're hammering out trades, I can almost guarantee you it's not going to turn up well. Okay? So patience prevents unnecessary losses. Sitting on your hands, not entering a trade, not being in the market does help sometimes. If you've done it for a day, it's good. Done it sitting on your hands for a week, it's a problem. You're sitting on your hands for a month, you need to kind of figure out why you're approaching the markets that way. Importance of strategy. We all know that, right? The thing is, I've actually I read some article somewhere, and the interesting thing is that as much as we think that strategy is important, do you know that most people enter a trade and they don't immediately lose money. They enter a trade and they actually make money. But do they close? No. They enter a trade, they make money, they say, oh, I'm going to make more. And then it comes back down. When it comes back down, what do? Close out. So, you know, you've gone to every booth and everyone has a little disclaimer there that says 95, 97, 90% of traders lose money. Actually, when you look at that 90% of traders who lose money, 90-something of them actually make money when they enter a trade, just that they don't close out. Right? So it's not so much about the strategy, but it's a strategy that's being personal. I'm a firm believer that you don't want a strategy that, no, not one strategy works for everyone. Everyone has different capital, different risks, different backgrounds. You want a strategy that works for you. All right? Quantity over quality, quality over quantity, we talked about that. Learn from every outcome, we talked about that. I just had the flash of my time. Have clear exits before you enter a trade. It's not about when you enter a trade. It's before you enter a trade, you start thinking of when am I going to get out of a trade. For me, I'm not so worried about when I get into a trade because that's straightforward. I go through my steps, I go through my processes. I know why I enter a trade. But you want to know why or when you want to get out of a trade. And it shouldn't be because I've lost enough money, right? So you want to have clear, defined exits, resistance levels, indicators, news, clear reasons why you want to get out of a trade. A good reason sometimes I use is because I'm not going to be watching the trade. It's a short-term trade. I need to go do something else. I'll close it out just so that I'm neutral. Because every time you're in the market, you're exposed to risk. Okay? Detach from emotions. You're never going to get 100% detachment from emotions. Because you can't make money if you're 100% detached from emotions. Exit strategy as a risk management, we've had that. Danger of stubbornness. Who's going to admit that they're stubborn? Again, no hands. Right? I would say that. Right? You kind of have to be a little bit stubborn, but you must know when to quit out of that stubbornness. Right? Stubbornness compounds losses because you're sitting there going, oh no, it's going to go back up, and it doesn't. So risk management and stubbornness, get that out. Rules counteract emotions, we've done that. Adapt and let go. Market changes all the time. The way I traded in 2008 is very different from the way I trade right now. So market changes, your strategy should change, your approach should change. Clarity of mind, we all know that. I'm going to skip that ahead because I want to show you this last slide with the big QR code. Scan that QR code, get onto my YouTube because on a daily basis, I'm from Singapore. I flew in from Singapore to come to this event and speak here. So at 3 p.m. Singapore time is 11 a.m. Dubai time. I go live Monday to Friday, no, on Saturdays and Sundays, live Monday to Friday to share with you about the markets. I talk about gold, making millions in trading, not quite, and Trump and tariffs, and give you all the market updates. So please scan the QR code, subscribe, like the videos, join me, leave a comment, get onto the mailing list, and I hope to talk to all of you soon again. Thank you so much.
Thank you very much, Mr. Tai. Ladies and gentlemen, I hope you guys are finding all these keynotes very insightful. I want to ask a question now. How many active traders do we have sitting here? By a show of hands. Come on, there's got to be more than that. The reason I'm asking is because the next keynote is very important, especially for active traders. It is about the future of Bitcoin, part 2. And for that, ladies and gentlemen, please help me in welcoming on stage John Riggins, the partner at BTC Inc., to present Bitcoin Season 2. He's going to be sharing valuable insights into the future of Bitcoin. Round of applause, please.
Thank you. And hello, everyone. I also come bearing some good news for all the traders. You can't go wrong just holding Bitcoin through this bull market. So it's going to be in Dubai in the midst of this Bitcoin bull market that has begun. And I'll be talking about what's next for Bitcoin. So first, a bit about us. BTC Inc. is one of the oldest and most respected companies in the Bitcoin ecosystem. Started in 2012 as a print magazine called Bitcoin Magazine. We've been covering the industry for over a decade. We've also been connecting the industry in person with the Bitcoin conference, the largest finance conference now in the world, as well as investing in the Bitcoin ecosystem with our fund UTXO management. So I'm going to talk a little bit about how you can get involved in our conference, as well as what our fund is looking at as the best opportunities in the Bitcoin market moving forward. So one of the reasons I'm in Dubai is because the Bitcoin conference is coming to the Middle East for the first time this year. So December 9th and 10th we'll be in Abu Dhabi. I hope you'll join us. I also have a QR code on our last slide to help you get there. So biggest Bitcoin conference in the world, 30,000 plus people in the US, and we're excited to be bringing it to Abu Dhabi. So this is called Bitcoin Season 2. Bitcoin Season 1, what was that about? That was about kind of Bitcoin proving its robustness as a decentralized network and achieving a certain level of adoption. This prior slide is the president of El Salvador, Nayib Bukele, who at our conference in Miami in 2021 announced Bitcoin as legal tender for the country of El Salvador. That was a big milestone in Season 1. I'd also say that really the inflection point between Season 1 and Season 2 was adoption at an institutional and nation state level that we saw not just with that, but with the launch of the Bitcoin ETF in the US just this year. So really a big shift in the market when the Bitcoin ETF was launched and when we start seeing nation state adoption. So Season 2, what's next? Bitcoin has proven itself as the most important digital asset and one of the most important assets in the world with $1 trillion plus market cap, now close to $2 trillion. And we see two big opportunities with this. Number one, on-chain Bitcoin is experiencing a renaissance. We hear a lot about developments in the crypto market, things being built on top of Ethereum, Tron is here, other layer 1 networks. Well, Bitcoin Season 2 is about all of that crypto complex coming to Bitcoin. So we see a massive opportunity in what we call Bitcoin native assets. That's inscriptions, BRC20s, assets that are native to the Bitcoin chain, and we see as having massive growth potential based on kind of the corollary to other layer 1 networks where assets on top of them reach 50% or so, or 100% of the layer 1 coin's market cap. So we see a massive opportunity there. That's something that we're investing in heavily with our venture fund, the Bitcoin Ecosystem Fund. And why is this all coming to Bitcoin? Because Bitcoin has achieved a level of liquidity dominance in the marketplace that is not going to be surpassed. It is still an open ocean for innovating on top of Bitcoin because of some technical upgrades that have happened, leading us into Season 2. And it will continue to be the most reliable, decentralized, and trusted network that we have. So we're investing in a number of phases of the Bitcoin ecosystem as it grows. Layer 2s, as we look to scale transactions on Bitcoin outside of just the layer 1 blockchain. Bridges, meta protocols, number of applications you can see here. We see this as a massive opportunity investing-wise in the Bitcoin space. And number 2, another phase shift happened this summer. This is at our conference in Nashville, where we had first one of the candidates for president in the United States embracing a pro-Bitcoin policy for his potential administration coming in. This was a huge deal. The first time a presidential candidate who really had a chance to win was expressing pro-Bitcoin views. And this coincided with Senator Cynthia Lummis in the United States speaking after him and putting forth a bill for the US Congress to approve a Bitcoin strategic reserve. That's the United States, still the wealthiest country in the world, talking about having a Bitcoin strategic reserve for the long term. Now, Cynthia Lummis, the first part of that proposition is the U.S. not selling the Bitcoin that it has. Close to 300,000 Bitcoin that the U.S. has acquired various means over the last decade. Holding that and never selling would be significant on its own. But the thing that really makes this season 2 of Bitcoin incredibly bullish is that she is proposing for the United States to buy Bitcoin at a nation state level, buying Bitcoin, 1 million Bitcoin over the next 4 years. Total game changer geopolitically, total game changer for Bitcoin. And again, this was during the campaign, so it's only a promise. It's only what could possibly happen. November 5th, just this month, Donald Trump was elected and reaffirmed his commitment to the Bitcoin strategic reserve for his incoming administration. We now have a sitting president, sitting administration in the United States, talking about implementing a Bitcoin reserve in his first 100 days in office, starting in January. So that's massive for the world, massive for Bitcoin. What do we do about it? One massive opportunity that we see coming from this is what we're calling macro strategy, corporate wrapper for Bitcoin in different public markets. Of course, MicroStrategy is the first company to implement a treasury strategy for a public company as kind of the sole growth strategy for the company. Kind of moving forward, MicroStrategy has gone from a $1 billion market cap when they initiated this strategy to 75 billion plus today. So we see an opportunity for the public markets plays for Bitcoin to be investable moving forward. So all the traders here working in the public markets, this is the biggest thing we see happening. 111 trillion global equities market, less than $2 trillion of that is in Bitcoin and Bitcoin-related products, ETFs, public companies right now. We see massive growth opportunity for that. Massive open ocean for public markets plays for Bitcoin moving forward. There's some interesting kind of dynamics for this play. Unlocking TradFi flows that don't have the ability based on fund mandates to own main chain Bitcoin, commodity in those markets, that need to find a way in the public markets to get access. Some also can't hold ETFs, must hold equity or find a way to participate in the bond markets, which is something that MicroStrategy has really pioneered and which we see as a massive opportunity in other markets as well. So this kind of flywheel develops when companies do this. A zombie company, a company with strong cash flows, but really lack of growth opportunity, implements a Bitcoin treasury strategy, is able to send a signal to the market that they're latching on to the most powerful asset now in the world, and is able to create this flywheel via the debt markets, believing that they'll be able to acquire more Bitcoin per share moving forward with this strategy. And when the stock is trading above NAV for the Bitcoin it holds, issuing out the money equity to grow that Bitcoin per share balance as well. So we've invested in a couple of companies doing this. One in Japan has become the best performing public company in Japan over the last 6 months since we've implemented a Bitcoin treasury strategy there. A couple of them in Canada also doing well, and more coming. So we see this public markets play because of the nation-state adoption of Bitcoin, because of the dynamics of the Bitcoin market, moving from kind of retail trading on crypto exchanges to big institutional inflows and nation-state inflows. We see this as the best way to participate in the Bitcoin market outside of just holding Bitcoin in cold storage yourself, a way to get a little bit of leverage. So those are the two biggest opportunities we see in the Bitcoin market in this season 2. Investing in the Bitcoin ecosystem, scaling Bitcoin native assets, which we do through our ecosystem fund, and then these public markets plays, which we do at UTXO Management as well. So if you're interested in learning more, please reach out, and please come and see us in Abu Dhabi. Eric Trump will be speaking. We'll also have Paul Manafort from Trump's campaign and the incoming trade representative for the Middle East in Trump's new administration joining and really getting the conversation started about nation-state adoption of Bitcoin. So we're thrilled to be in the Middle East. We're thrilled for the prospects for Bitcoin for the rest of this year. And when Trump is inaugurated and the strategic reserve is implemented, really the sky's the limit for Bitcoin and for its place in the world. So thank you. Hope you enjoy the rest of your time here.
Thank you very much. Ladies and gentlemen, we're now going to be taking a quick break for lunch, and we're going to be resuming our afternoon sessions at 1 p.m. For those of you who already have a physical coupon for the lunch, please make sure you make your way and enjoy your nice meal. Otherwise, we're going to be back again at 1 p.m. with an afternoon session filled with much more content, and I can't wait to see you all back here.
2024 in Dubai to discuss the
are shaping the future of finance together in ways we couldn't have imagined. To mainstream.
Good afternoon, ladies and gentlemen, and welcome back. I hope you guys enjoyed your lunch. Are we ready for the second part? Yes! I love your energy. Let's all have similar energy if that's possible. Ladies and gentlemen, I hope you guys are excited the way this lovely gentleman is. We're going to be beginning the afternoon session with the first panel discussion of the afternoon on future outlook, the role of DeFi in Web 3.0. We're honored to be joined by an esteemed group of experts. Gordon Einstein, founding partner of Crypto Law Partners. Round of applause, please.
Round of applause, please. This is the high energy panel.
Yeah, I like that. Gustavo Antonio Montero, the founder and chairman of Carta Capital. Bibin Babu, co-founder of Paisio. And Geoff McAllister, the chief risk officer at M2. A round of applause, ladies and gentlemen, and enjoy the panel discussion. Yeah.
Hello. How is everyone? This panel is the equivalent of caffeine, so hi everyone. Okay, our topic is future outlook, the role of DeFi and Web3. Very happy to have our panelists here. This is going to be a very high energy panel. Are you ready? Gustavo, I know you're ready. Of course, M2, fantastic. Okay, so I always say that anyone in this space is like a superhero. And like every superhero has a backstory. So before we dive into the topic, just so the people can get to know you, say who you are, where you're from, and what you're up to. So I'll start. I'm Gordon Einstein. I'm from Los Angeles, California, but living here in Dubai. And I am a crypto and blockchain attorney and also a YouTuber. So I'm very happy to meet you all. Pleasure. Gustavo.
All right, Gustavo Montero. I'm Swiss. Ich bin Schweiz. Engineer by training. Most of my life in the financial world. I had the occasion to open and manage Standard Chartered Bank in Switzerland. Then I was in the board of directors of Kramer Bank, another wealth management bank. And prior to that, I was trained by Pricewaterhouse in Geneva. And now I've been for 10 years in the digital space, owning two companies, Carta Capital Asset Management and USDR Commodities, that's tokenizing in-ground gold in various places.
Fantastic. Please.
Hi, my name is Bibin Babu. I was born in India. I live in Dubai. I'm the co-founder of Paisio. I started my career as a developer in Google and in the United States, and moved back to India to build my own my own first startup. My first startup was into co-working spaces. It got acquired. First exit.
Wait, are you the guy who started WeWork?
No, it was not WeWork.
No, you look like him.
No, it was not WeWork. It was called as WeWork, but we had close to 1 million square feet of area around India. Then moved on building a fintech platform, which crossed around 55 million USD in terms of revenues. Got acquired by a big bank in India. Moved on to building an NFT marketplace called as Collection for celebrities. Got acquired by a gaming company. So 3 exits. One of my last companies was a unicorn. Now my focus has been to get crypto to mass adoption, and that's where we built Paisio. I'm also an avid angel investor in a few good startups. Will not want to promote and shield them right now, but we'll talk about it later on. Happy to be here. Looking forward to the conversation.
Fantastic. Geoff.
Thanks.
Jeff or Geoff?
Jeff McAllister. So background is 25 years plus in investment banking, financial markets, with Goldman Sachs, Deutsche Bank, Credit Suisse, and NBAD, FAB in the UAE as well. I moved into crypto about 4 years ago. In 2021, had the first 3 years with Hex Trust, which is a Hong Kong-based custodian, and I was running Hex Trust markets there. And I'm Chief Risk Officer at M2, and looking forward to the chat.
So what is a Chief Risk Officer and what is M2?
So M2 is the UAE's exchange. It's a Abu Dhabi invested exchange, licensed in ADGM. And we are a fully functioning exchange. and with a big focus on this region, retail, and a growing focus on institutional as well. And we're quite tightly linked to the mining sector. We're invested in by Phoenix Group, so we've got some very good connections on the Bitcoin mining sector as well.
And are you happy with the price of Bitcoin?
Price goes up and down, but adoption. I'm very happy with adoption.
Good answer.
Price is fine, but adoption is great.
Fantastic. Now let's dive into the topic of the panel, the role of DeFi and Web3. I think it's important to sort of define our terms, if you like, as first principles so we know what we're talking about. Maybe it's self-evident, but here we are heading into 2025, so maybe the definitions have moved a little bit. Can any one of you, and if you don't volunteer, I'll pick on you, provide a good definition, a working definition of decentralized finance, of DeFi? And perhaps, I think it's really applicable to all of you, how it varies from traditional finance or TradFi. Any volunteers? We'll go here and we'll go here.
Okay. Decentralized finance. Well, first of all, for everybody who's not familiar with this, it corresponds to one specific technology developed in Stanford in 1991 by Scornetta and Saber, two scientists. It is simply a ledger, a database that is shared among the different participants in the ecosystem. I'll put it to you in audit terms. I used to be an auditor. Every time we did an audit, there was a transaction put in a ledger somewhere. The only people that knew about transaction was the accounting or the finance department of the company we're working with. In the future, with distributed ledger technology, the same entry will be available immediately to any party participating in that process. That's what I can say. Please go ahead.
So I heard a really good description of blockchain there and decentralization. So as that foundation, let's go into the difference between DeFi and TradFi, specifically the financial use cases.
For me, DeFi is giving access to financial services, financial products, without an intermediary in between. I'm not against banks, but this is one revolution which is there, wherein even the unbanked.
I'm sorry. Why aren't you against banks?
Why?
Why are you not against banks?
Oh, because I believe there is a way of coexisting with them, and if you want to get to mass adoption, it has to happen in partnerships with banks. Eventually, they might lose business in the end. They might, and they will, because of DeFi and blockchain and crypto. But at this stage, we are not at that stage where we can say that the whole of the world, which is like close to 8.5 billion people, will be able to access crypto and DeFi. That is only possible when we kind of go hand in hand and work along with banking institutions, /regulators, Visa, MasterCard, so on and so forth, so that we get there.
So let me tease that out a little bit, and then we'll get to Jeff. Is any blockchain transaction, if a blockchain, let me set up the question and then you'll hear the question. So assuming that a blockchain instance is decentralized, for example, the Bitcoin blockchain, but not necessarily, assuming that's properly decentralized, is any financial transaction on that decentralized blockchain DeFi, or does it mean something in addition to that or beyond that?
Any transaction on blockchain does not just mean DeFi, right? When we talk about DeFi, it's about financial transactions. We can do any transaction on a blockchain. That's most important to understand.
Let me ask you better. Is any financial transaction on a decentralized blockchain inherently DeFi, or is it there's something more to it?
No. So every financial transaction on blockchain is not a DeFi, right? A DeFi, when I say DeFi protocols or DeFi products, these are totally decentralized and not governed by a particular body, right? For example, if we say that eventually CBDCs, are they going to be on blockchain? Answer is yes. Is it going to be decentralized? The answer is no.
Good distinction. Jeff, I know you have lots to add.
Yeah, so from the risk angle, it comes down to two words, non-custodial, right? And the upshot, so the underlying technology delivers the upshot, if you like, but the upshot is you can have non-custodial financing solutions and financial products. And what that means is you don't have balance sheet exposure or credit exposure to somebody's balance sheet. You have your assets are on a protocol, a smart contract or something, and there's some cyber risks perhaps, right? Which, you know, hopefully are well managed, but you don't have exposure, balance sheet exposure to any centralized counterparty. So non-custodial, zero balance sheet exposure. This is, for me, the sort of definition of DeFi. And
that's interesting. So there's sort of the sine qua non, if I can use that expression, of decentralized finance is self-custody of the assets in play. Is that correct? Or the one unalterable unique characteristic?
Yeah, so self-custody. So you've got self-custody, but the people you interact with, like we heard there's no intermediary as such. I mean, the intermediary is of course a protocol, but it doesn't have a balance sheet. There's no balance sheet exposure and they don't hold your assets. Although no other person or no other entity holds your assets, right?
I think you paused for a second because you were considering the idea that a smart contract may hold your assets.
Yes.
Right? So that you can have a smart contract holding your assets under a DeFi protocol.
Yes.
Would you agree?
Yes.
Gustavo, you wanted to add something?
Yeah, I was just going to suggest that we stay in the basics. Pretty much everybody in this audience, I'm certain, have no understanding what a smart contract is, which is normal. This is new technology. So I'll explain it to you in a different way. Decentralized finance corresponds to transactions of anything, by the way. We're talking about finance, but it could be other type of transactions. And it means the following. I have a blockchain here, which is nothing more than a protocol, is a computer program, all right? And everybody in this room has a computer, and you're part of the ecosystem of this blockchain. You're all connected. I'm now going to type a transaction here. I'm sending you a car, whatever, a coin.
Please
it doesn't
do.
really matter, all right? You can all see it at the same time. You understand what I mean? Every computer in this room that is connected to this ecosystem or this blockchain, call it whatever, has access to the transaction. That's the basics of decentralized finance. We can add all the layers that the gentlemen are in here. They're all important. They're all super important. But I always, because I'm a professor in 3 universities of this, I say, stay on the basics. Otherwise, we'll lose them in 2 minutes.
Fair enough. Now, let's tease out the second term, because I honestly couldn't tell you what it is. Web 3.0. Web 3. Any smart guy? Jeff.
Yeah, I mean,
and then we're going to talk about the intersection point.
It's commonly described in terms of Web 1, Web 2, Web 3, which is read, write, own. Where Web 1 was the dumb web page where people published to. Web 2 was more interactive community engagement, user-generated content, Facebook, social media, all of this. Web 3 is enabled by blockchain technologies, or more specifically decentralized ledger technologies, which enables people to own digital assets on-chain.
And does it, Web 3, also speak maybe to the resilience of the underlying network that's decentralized and multi-party, in addition to ownership of, say, data?
I mean, the resilience of the blockchain.
Sorry, let me put it this way. If Facebook let you own your data, would Facebook be Web 3.0? This is not the easy panel.
Yeah, I mean, yeah, if you had ownership on everything on Facebook, but it's ownership, the digital ownership is Web 3.
And does that inherently require blockchain? Or something like blockchain?
It requires an immutable ledger. It doesn't have to be transparent, by the way. Like you know, zero knowledge proofs, you know, and blockchains can be kind of not so public as well. I mean, look at Monero, for example, privacy-based coin. It's still a blockchain, but it's an immutable ledger.
Gustavo, you wanted to add something?
No, just following up on you guys are saying. Everything they're saying is fantastic. It's clearing a little bit the area here. But when we talk about Web3 today, we're talking about what you said, ownership of the data, all right? And I have a huge problem with that definition of Web3 because I believe that in today's day, we do not own the data we have. We just simply don't. As a matter of fact, there's nothing free in this world, no? When you get a new website that says, come in here, give me all your data, and you will be able to do all these things. It's not for free. They're owning your data that they're using. So I just want to get back to that because it's important. We don't really own our data today. Will we own it tomorrow? I don't know. But I don't think it's the case today.
See, my thing about Web3, I'm going to quote one of my favorite persons in Web3. His name is Yatsu, the chairman of Animoca. Today, all the data, anything relevant which you do online is actually not owned by you. It's because if you look at it from in a larger perspective, you're kind of a citizen in a kingdom of Facebook, a kingdom of Instagram, a kingdom of a particular bank. And that kingdom's ruler owns whatever you make or transact on that network. With Web3, what actually happens is whatever you're building, creating, receiving online is owned by you as well. And when I say it's owned by you, it also means that whatever monetization or any value which gets derived from it is also yours and not of the ruler of Facebook / Instagram or a particular bank. So that's the way I try to explain it to kids. And why do I think Web3 is critical? I mean, just to add on to it, is because we don't even know what's the kind of value which we are creating for another company when you are transacting or doing anything online. So it's, again, eventually, as I've mentioned correctly, it is ownership of data. I will just add on to it. It's ownership of anything worth value created by you, for you.
Fair enough. Now, we have three fantastic businessmen and technologists on the panel. Each one of you is involved with a very interesting enterprise and business that you're working on, you especially. I'd like you to each talk briefly in a little bit more detail about what you're doing business-wise and then bring it home to explain the connection with, say, blockchain, DeFi, or Web3. Maybe I'll start with you.
Right, but I don't know if anybody was here this morning when we spoke about this.
I was here, and it was great, but let's share the wisdom.
All right. So, in a nutshell, what we're doing with the new, we have an asset management company, crypto. I'm not going to talk about that. That's boring. But in a nutshell, what we're doing is following. Because we're asset managers, we trade with stable coins. We use them, several of them. And in the process of using stable coins, we've never able to get audits on the underlying assets. If you go to a stablecoin company today and say, you're worth that much, whatever it is, I want to see an audit of what you have, where is it? You won't get it, for the most part. Maybe some has it, I've never been able to get one. So what we did with our companies, we created a BVI company called USDR Commodities, which actually owns the concession to mining or mine gold mines in ground in Canada, Australia, and Chile. And what we're doing is taking the gold that's in ground, that's audited, and we're going to create a stable coin, which is already minted, but it will be only listed in early next year. And with that, we hope to have in the market for the first time a fully audited underlying asset stable coin. And we're just started the pre-sale last week.
Now, let me pursue that a little bit more. So you're talking about real-world asset tokenization a bit, it sounds like it, but in support of a stable coin.
It is a real-world asset tokenization project, but using gold in ground. We're not planning to get the gold off the ground, the minimum possible. We think the best vault for gold is in ground, not in a bank that can go bankrupt or it can disappear like Credit Suisse or so many banks that we know about. So yes, it's a real-world asset tokenization project by using gold in ground, but only gold that is audited. So we can show any owner of those tokens, USDR tokens, that yes, you own this, this is the audit, this is the actual real physical gold in the ground.
And what was the inspiration for this project?
The fact that we cannot get audits from any of the stable coins we use. So, every time we trade for our clients, particularly when the markets are bad, we'll go back to stable coins, huh? Try to save our money and the money of our clients. When we go back into stable coins, we have problems believing that we're buying has any backing asset at all.
Fair enough, please.
Thank you.
Should I repeat the question or you got it?
No, I got it. Yeah.
Okay.
So we at Paysio, we are a crypto payments platform. We enable crypto payments using mobile numbers in a non-custodial manner, and we function cross-chain. A beauty of our product is also that we also function without internet, which means people can make crypto transactions peer-to-peer and peer-to-business, even without internet. That's a patent that we have, especially we built it especially for the African regions and countries where there is low internet penetration. And even before you ask me, I mean, why did we do this? Is to solve majorly two problems. One is to deal with the complexity of existing cryptocurrency transactions. Today, if I ask somebody new to even go and create a crypto wallet, it's a crazy affair. I mean, if it doesn't know about wallets, if it doesn't know about what chains, it is a nightmare. You have to go identify which wallet to create, right? Eventually, keep a secure that seed phrase of yours. Probably keep it in a locker. And when it comes to even identifying which assets to use, you need to be aware about which chain to use. Am I going to use Ethereum chain? Am I going to use Polygon? Am I going to use Solana, and so on and so forth. So there's a whole lot of complexity in getting a new user, into crypto. And trust me, I mean, I was trying to explain this to my mom and dad. They are yet not convinced, and that's also one of the reasons that we had to build something. Second is people who know about it actually end up paying really high money to use it in their daily lives, and so much so that they don't end up using it in their daily lives. I'll give you an example. So today, if you have, say, X Ethereums or X Trons, if you want to use it in your daily lives, probably go and buy maybe a watch. You would end up converting it into a stable coin, then get it into a local currency, get it into your bank account, and then transact. All of this comes with a huge cost. The cost can range from 2% and goes up to even 8%. And this I'm talking about UAE alone. And then eventually, what happens is that all this cost you paid on the asset which you had made or earned in the past, wherein you already paid taxes maybe. Now that's the second problem which we try to solve here. Third, the businesses have not been able to use cryptos or accept cryptos from retail users. You might just say, be okay with it, you might be okay with it, because it is not traceable. For example, if today I go and buy a particular product from maybe a supermart, the supermart doesn't know that who paid for it because it just came from a random wallet address. There is no face to it, right? Yes, we all are fans of decentralization, we are fans of Web3, we are fans of non-custodialism, but my question is this: do we really want to compromise practicality for decentralization? Or are we going to compromise decentralization for practicality? So solving these problems is why we built Paysio. So we enable crypto transactions in a non-custodial manner, but traceable.
Non-custodial but traceable.
Yes.
Interesting. Jeff.
Okay, so M2 is a centralized exchange. So it's a custodial relationship. As I mentioned, we're Abu Dhabi invested. And we focused on this region very strongly. We're increasing our focus on institutional relationships and products and services. We service the mining sector quite a lot. And yeah, we're just really focused on building useful investment products. We have our earn products and on-ramp, off-ramp for retail or businesses. So we have a dirham on and off-ramp rails here, so you can go through a Abu Dhabi invested, Abu Dhabi regulated entity, and on-ramp from dirhams and off-ramp into dirhams with us as well.
So let me ask you, I was teasing about the banks, by the way, but there's a spectrum of views on blockchain and crypto and everything else. There's the sort of ultra-libertarian, ultra-private, everything's decentralized, burn down the town and make a new one approach. Then there's maybe another extreme, which is we're just going to take traditional financial instruments and bring them onto the blockchain so we can make them even more traditional, or maybe create some efficiencies between incumbents. And then there's sort of what I look at is sort of the bridge technologies, or the bridge entities or facilitators, which is, I think, where I would put you. So how would you, if you want to get a little bit philosophical, where would you put M2, where would you put yourself, and how do you navigate the evolving landscape of these technologies and points of view?
Yeah, so if you see sort of DeFi as the end game, if you like, I mean, centralized entities are a critical path to get there.
Say that again. They're
centralized entities, exchanges, custodians, a critical path.
Okay.
To get to the sort of DeFi endgame. I think in the end you're going to have both coexisting. Funnily enough, trust still matters a lot in business. Also in DeFi, trust matters, right? You look at Uniswap and yeah, you're like comfortable. You're going to use Uniswap. It's been around, it's tried and tested. But a newer DEX, you might like not be so confident and sure about sending so much money to straight away, right? It needs time to build up that trust. It's a trustless sort of end game, if you like, but trust still matters.
Fair enough. Gustavo.
Yeah, well, gray hair and age tells me that nothing is black and white in this world. Sage words.
Well, it can't be black. If it's gray, it's neither black nor white. So there you go.
Yeah, it could be any color. But anyway, so I sort of agree with my colleague here. In the future, we will have a hybrid from old traditional finance and new finance represented by blockchain technologies and other technologies, by the way, that are being developed as we speak that we know very little about it, like quantum computing, which is going to change accounting and finance completely because it's no binary. It's no 0110. It's something else. So wait for that. But in the meantime, yes, we're moving into this sort of hybrid world, but there is something that we don't speak about, which I think is important to address, is what I call the paradigm change that is taking place in the next 5 to 10 years because of the world population pyramid. If you look at the world ages and populations, you will understand that this is a very young world. Contrary to Europe, my continent, where it's very, very old, and the US, that is also an old continent. If you go to places like Angola, the average age is 15 years old of the country, the average age. And in Asia is similar in some other places. What I'm trying to get at this is the following. There is more than 60% of the population of the world that is below 40 years old. 40 years is the average age we have for the building of the new technologies such as blockchain, the new version of artificial intelligence, because artificial intelligence has been around for ages. I studied artificial intelligence 40 years ago at my engineering school, so this is not new. It's a new version of it. This new generation of people below 40 years old will change everything because they don't trust traditional banking. That's the main reason. They're going to be the people that will push us into what we consider new banking.
Interesting. I don't know how we're doing for time because I don't see a counter or... Time's up. There you are. Good to see you.
Thank you.
Nice to see you. How are you? Okay. In that case, time's up. So I want to give a big round of applause for our panel.
Thank you. Thank you.
Okay. Well done. Thank you.
Thank you, everyone.
Good job.
Louise. Thank you all for this incredible insights. Hello, everyone. Hope you're doing well. My name is Elias. I'm not that pretty as my colleague Dija, but I will go through it. So our next keynote session is titled Rephrasing the Global Financial Landscape. the future of stablecoins, meme coins, and liberalism. Presented by none of the other than Mr. Justin Sun, the founder of Tron and most influential figure in the cryptocurrency space. Unfortunately, due to some urgency, he won't be able to be here personally. So that's why today, my friend, he have recorded a special video message to share his latest insights and these exciting developments in the world of digital currencies. Let us listen to what he have to say. Thank you.
Distinguished guests, ladies and gentlemen, I'm Justin Sun, the founder of Tron. It's an honor for me to be here at WikiEXPO 2024 in Dubai to discuss the rapidly growing sectors of blockchain and cryptocurrency. I'm eager to share insights on the latest trends in stablecoin USDT and meme coins, as well as opportunities from my recent role as Prime Minister of Liberland. Before diving into these topics, I'd like to extend my warm greetings to you all and my gratitude to Dubai for its unique platform supporting the global blockchain and crypto sectors. The Middle East, Dubai in particular, is a global innovation and technology hub that consistently leads in technological advancements. Its strategic embrace of the crypto sector positions it as a rising star in the global landscape, facilitating the application of USDT, meme coins, and other cutting-edge concepts across diverse use cases. Let's begin with the stablecoin USDT. Stablecoins have emerged as a crucial part of the global financial system. It's even more so for the US dollar-pegged USDT. As a blockchain-based cryptocurrency, USDT offers global users a much more stable alternative to highly volatile counterparts like Bitcoin. More importantly, it is a reliable, low-cost, and efficient payment tool. The circulating supply of TRC 20 USDT on Tron has surpassed 61.8 billion, thanks to its low trading fees and high transaction speeds, making it one of the most widely used stablecoins globally. This achievement would not have been possible without our continued investment in technological innovation and understanding of market demand. USDT can be applied to an extensive range of scenarios in a market as dynamic as the Middle East, especially in a financial center like Dubai. For both businesses and individuals, USDT offers unprecedented convenience, facilitating everything from 100,000 cross-border payments to international trade. The traditional financial system has long struggled to meet the enormous demands for cross-border payment in the Middle East, often lacking in speed and cost-effectiveness. In the face of these problems, the very nature of USDT as a global digital dollar presents an ideal solution. It significantly cuts the costs of cross-border transactions and accelerates the transaction speed to near instantaneous completion, which is a giant leap forward for companies and consumers in the region. With USDT, local businesses can complete international settlements in just seconds, bypassing the complexities and high costs associated with traditional banking. This efficiency and convenience have led to a surge in the number of Middle Eastern businesses and individuals using USDT for cross-border trading and investment. The trend is particularly noticeable in cities with a fast-growing digital economy like Dubai, where USDT is becoming a key catalyst for capital flow and economic integration. But there's more. We are witnessing the rise of meme coins, a phenomenon that is impossible to ignore today. Unlike traditional cryptocurrencies, meme coins are fueled by community consensus and a unique blend of humor and culture. With the boost from social media, meme coins have quickly swept across the globe, becoming a go-to choice among young investors. Now, let me introduce Sunpump, Tron's first dedicated platform for the fair launch and trading of meme coins. What makes Sunpump unique is its accessibility. It empowers anyone to create their own meme coin, and backed by a global community, rapidly build up its market value. But Sunpump is more than just a technological innovation. It's decentralization in practice. It gives users from all backgrounds the chance to participate in and even spearhead financial innovation. We've seen meme coin projects launched on Sunpump skyrocket to hundreds of millions of dollars in market cap. This rapid growth reflects not only investors' enthusiasm for meme coins, but also the inclusivity and diversity of the blockchain market. The increasing popularity of meme coins shows that cryptocurrency is more than just an investment tool. It's a cultural phenomenon deeply rooted in the community culture of the younger generation. In the Middle East, meme coins also hold enormous potential for growth. Dubai, with its vibrant young population and rapidly expanding digital economy, has shown a keen interest in emerging technologies and financial instruments. The rise of meme coins offers these young investors a chance to participate in the global cryptocurrency market. It's not just about investment and trading, it's about identity. By holding or issuing meme coins, they become integral parts of the worldwide cryptocurrency community. Next, I'd like to share some thoughts about my recent appointment as the Prime Minister of Liberland. Liberland is a unique country, one of the world's youngest, embodying a distinctive political philosophy of minimal government intervention and maximum individual autonomy. This philosophy aligns perfectly with my aspirations for liberty and innovation. As the Prime Minister of Liberland, I aim to promote this liberalism globally. Liberland is not just a physical country, but a virtual home for liberals worldwide. We believe that reducing excessive government intervention fosters a more liberal and fair environment where people can thrive. Liberland is unique as the world's first country to base its relationship with citizens on voluntarism and mutual respect, with no mandatory obligations or tax burdens. This liberal philosophy is relevant to both Europe and the Middle East, as many Middle Eastern countries explore new governance models. Liberland's ethos of minimal government intervention serves as a valuable example. By promoting liberal markets and individual autonomy, we can create greater opportunities for social and economic development. We are confident that Liberland's success will inspire more countries to experiment with this innovative liberal governance model. In a dynamic region like the Middle East, the concept of less government more autonomy will help countries tackle challenges and drive innovation and prosperity. In conclusion, I am acutely aware of the immense responsibilities as the founder of Tron and the Prime Minister of Liberland. I am committed to providing safer and faster cross-border payment solutions with stablecoins like USDT and creating new financial opportunities for the younger generation through innovations in meme coins. And with Liberland's libertarian practices paving the way, we are poised to drive innovations in global governance. The Middle East, especially Dubai, as a global center for finance and technological innovation, will play a crucial role in this cryptocurrency revolution. I eagerly anticipate the remarkable progress we can make together in advancing blockchain technology, both in the Middle East and around the globe, to offer fairer and more inclusive financial services to users worldwide. I look forward to joining hands with you and witnessing the brilliant chapters of the cryptocurrency era. Thank you all.
Amazing. Big thanks to Justin. And now, next up, my friends, we have a presentation on advanced tools simplify trading. Why VT Markets is your top choice by Ms. Katia Basyuni, Senior Relationship Manager at VT Markets. Please join me in welcoming Ms. Katia on stage.
Good afternoon, everyone. We're absolutely delighted to participate in the WikiFinance Expo 2024. In this presentation, we're going to introduce you to VT Markets and our advanced tools simplify trading and why VT Markets is your top choice. So to introduce you briefly about VT Markets is a multi-asset financial brokerage firm. We offer trading on multiple assets for clients. We have been started since 2015 and with a simple core mission, which is making trading easy and accessible for everyone, no matter where you are in the world. Throughout its tenure, VT Markets obtained multiple sponsorships, some of which are our recent sponsorship with Maserati MSG Formula E Racing, and the recent one signed in 2024 with Newcastle United Football Club. To ensure our longevity and in order to make our services accessible for everyone, no matter where you are in the world, VT Markets has ensured to place global employees and offices all over the world, such as Singapore, Dubai, Cyprus, and Australia. In order to ensure trust and to maintain the highest regulatory standards for our clients, VT Markets is licensed and regulated by multiple parties such as the Australian Securities and Investment Commission, the ASIC, the license, and we also have the FSCA license from South Africa and the FSC license from Mauritius. Why should you choose VT Markets as your trading partner? VT Markets currently has over 400,000 active clients from over 160 countries, trading on over 1,000 tradable products and assets, generating a monthly trading volume exceeding $300 billion. In addition to that, our clients generate over 30 million trades per month. In addition to that as well, VT Markets is known for our deep liquidity pool from our best liquidity providers, lightning speed execution, tech-oriented platforms, ultra-low spreads, and most importantly, fast and easy deposits and withdrawals. I want to introduce you to our company timeline. So VT Markets was founded and registered, and we set up our offices in Australia in 2015. In 2016, we obtained our ASIC license in Australia, and we set up our data centers in New York and London. From the period of from 2019 up until 2020-24, VT Markets has obtained multiple awards, and we have set up data centers and regional offices, expanded our presence globally. In addition to that, in the years 2023 and 2024, we have signed our partnerships, as mentioned, with Maserati MSG Racing and Newcastle United Football Club. These are some of the awards VT Markets has obtained. Some of the recent ones include the worldwide leading broker in Qatar Money Expo 2024, most user-friendly Forex platform Forex Expo Dubai 2024, and the best multi-asset broker in the MENA region 2024 as well. No matter which product you prefer to trade on, it's always going to be available with VT Markets, such as Forex, indices, CFD bonds. You can find cryptocurrencies, energies, basically any product you wish, you can find it at VT Markets. And whether you are a beginner or experienced trader or whatever your needs may be, you can find the account that is most suitable for you. We currently offer two types of accounts, the standard STP account and the raw ECN account. The difference between the accounts is the standard STP account, our starting spread is 1.2 pips with 0 commission charge on your trades. The raw ECN account, the starting spread is 0.0 pips with a $6 fixed commission charge per lot. Both accounts are also available as swap-free with 0 additional markup or hidden spread and 0 additional commission charges. This is to show you the example on the spreads and commissions, for example, on both accounts. The standard STP account, for example, the spread on gold would start from 17 cents, 1.7 pips with 0 commission charge. And the raw ECN account, our spread on gold is 7 cents with a $6 per lot commission charge. The Euro USD, as well as you can see, 12 cents starting spread on the standard STP account. And the spread starts from 0 on the raw ECN account with a $6 fixed per lot commission charge. And these are also the rest of the products. You can see the USD Yen and USD CAD as well. So whichever platform you are most used to, you can find it with VT Markets. You can trade on MetaTrader. MetaTrader 4 and 5 are available. And you can also access your accounts through TradingView, and you can also access your accounts through our VT Markets mobile app. The VT Markets mobile app is a basically all-in-one application. You can verify your account through it. You can do fast and easy deposits and withdrawals. You can trade on the VT Markets application directly. You can see the latest newsletters. You can get push notifications, for example, when you hit your take profit, when you hit your stop loss, for example. Basically, an all-in-one app for all your needs. And of course, you get the access for TradingView, as most of you are, of course, familiar with it. It's a user-friendly interface, whether you're a beginner or an experienced trader. You can get access to real-time data and news. You can do your technical analysis and trade on TradingView directly. And if you are a trader with a community, you have a chance to benefit from our Introducing Broker program with VT Markets. Our Introducing Brokers benefit from our flexible rebate tiered system. We also have expandable multi-level structures, and we offer advanced trading tools for you and the marketing support you may need, in addition to the support you need as a partner from our client support. And on top of that, we have a user-friendly interface, for example, for your IB portal, where you can get the latest analytics and reports for your IB. And if you are a beginner trader, for an instance, or you do not have the time to manage your portfolio and assets, you can enroll with the copy trading platform that is offered by VT Markets on our VTrade platform. You can choose from a diverse range of different experienced traders. You can check their strategy, their risk profiles, and the results that they obtain on the copy trading platform. And with a simple click, you can just join their offer and save yourself the time and the energy. And also, if you are a trader with a community or you are an experienced trader yourself, you can definitely also enroll as a provider of this offer and have your own community of traders or the users who are already signed up with VT Markets to join your offer, and you will be able to boost your potential earnings as well with our unique payout system that we offer with copy trading. Of course, as customer relationships are the core of our business, we offer 24/7 support in over 20 languages, and every one of our clients has a one-to-one dedicated account manager to address all your inquiries and needs and questions that you may have throughout your trading journey with us. We also always offer like different rewards and competitions for our clients to make your trading journey more interesting. Currently, we're having the Trade and Win campaign where you can trade smart and earn rewards along the way. You can participate by obtaining a live account with VT Markets, and you register to join the program. Then you start to deposit and trade in your account. We have certain conditions that you need to meet. And then you can redeem the bonuses based on the level that you have reached. Thank you so much for listening. And I was very glad to introduce you to VT Markets. You can meet us at booth D2 if you have any questions. You can reach out to any of our dedicated account managers. Thank you so much for listening again, and hope everyone's having a good afternoon and day. Thank you.
Big thank you to Ms. Katya. Thank you so much. Ladies and gentlemen, we are excited to present our next panel discussion on the UAE's positioning and cooperation opportunities in the global CBDC competitions as central bank digital currencies continue to reshape the global financial landscape. This panel will explore the UAE's strategic role and opportunities in this emerging space. We are thrilled to welcome our esteemed panelists, Ms. Amira Soliman, co-founder and CEO of Time Guardian, who will be moderating today's discussion. Mr. Adam Boujema, co-founder of SoliChain. Alejandro Pellegrino, CEO and founder of Treyanos Partners. Mr. Muhammad Salman Anjoum, CEO of InvoiceMate. Please join me in welcoming our panelists as they share their valuable insight in this critical topic.
Good afternoon, how are you? I'm very excited to be part of this panel, and really would like to dive deep into the CBDC and how is the UAE compared to the globe is adapting to it, and what is the opportunities and the partnership. But to keep everyone engaged, we'd like to define first what is the CBDC and so to create awareness about it. So we start with you, Mohammed, to tell us what is the CBDC exactly and how is the UAE adapting to it?
Right. My name is Mohammed Salman Anjum. I'm the Chief Executive Officer for fintech named InvoiceMate, and we are coming up with the protocol named DeFi, Decentralized Factoring. So I'm also a consultant and trainer for UAE Central Bank and PwC. So this topic of CBDC have been recently been covering it with the different gigs in both PwC and the UAE Central Bank. About the adoption of CBDC in UAE or globally?
In the UAE. And pushing it compared
right.
to
So
global.
I'll take it from the journey year by year. It's almost a 5-year journey for UAE for the CBDCs. So in 2019, one of the first to adopt the CBDC, UAE Central Bank. Then 2020, they started Project ABER, ABER, and that is with the SAMA, Saudi Arabia's monetary authority, and that was kicked off, and they kicked off in 2020, this first or the second year of their adoption. 2022 was a major year when they also got into as a founding member of M-Bridge, which is a project of CBDC cross-border settlements, partnering with BIS, which is the Banking Institute of Settlements, and with other 3 like central banks, like Thailand Central Bank, China, Hong Kong, and now also this year they got Saudi Arabia also in that M-Bridge initiative. Within 2022, they did the first transaction by November. By 2023, UAE was one of the most progressive. It was ranked as one of the most progressive geography for the adoption of CBDCs. And at the same time, they launched their first strategy around CBDC, which is a part of their transformation journey. And this is a FIT program, Financial Infrastructure Transformation Program, which they launched on 23rd March 2023. And now, fast forward 2024, they did their first transaction in January on the M-Bridge, and it was a transaction of $13.6 million transferring to China. And recently they reached to the MVP stage, and we'll touch later with more details about the recent regulations around stablecoins, which are very closely connected to the CBDCs. So a lot happened in last 5 years. It is one of the most progressive countries to adopt CBDCs, and of course in coming follow-up questions I'll be able to reveal more in-depth strategies and thinkings.
Thank you, Mohammed. Alessandro, did you see challenges actually in applying the CBDC here in the UAE, or they are adapting and it's going smoothly?
Yeah. Thanks for the questions. I'm Alessandro Pellegrino. I'm the co-founder and CEO of Traianos Partners, and we basically are as a market maker for a lot of centralized exchange and both DeFi exchange. So we provide the liquidity to have a smooth transaction for the user. Then because basically we buy and sell up to 300 tokens per pairs per daily, and we're doing million of transactions for to avoid pump and dump schemes on the exchange. And now to return the questions. Basically, the UAE is positioning itself as a main crypto hub in the world, also very close to the Switzerland. So they are the 2 crypto hub, and I think that also the cooperation, then the competition is the main strategy for the long-term success. I think also then the cooperation with the unbanked population, as emerging markets, basically will be the main strategy for the UAE to compete into this road to establish the CBDC policy. Because for example, if we're looking as the Europe, because I come from Italy, we are a lot of country under the Central European banks. It is very difficult to have a clear policy about how the CBDC can work, and every country have a different financial law that can be a very stops about the CBDC implementation. But for example, in UAE, there is a small country with a very future vision and is with a central government that can be fast on like deploy regulatory frameworks, can be like as the basis for the future implement like of CBDC. And the main issue is like also about for the CBDC is like to have like a very common ground for the population to using it. And the main strategy is to use like for cross-border payments, because right now like the SWIFT payment is I think is a whole technology, because like it's not fast, it's very expensive. So basically with the CBDC we can have like cross-border payments in very fast, in very secure way, and in very like with a low fee, with zero fee, because it was like under the blockchain system. So
do you think it's really will happen despite the banks is having a lot of revenue and EMIs and schemes, all of this as well as creating a lot of revenues from this, and then they might ask about the source of fund and the AML procedures. So do you see that really the CBDC will, for the UAE will overcome all of these challenges and will be adopted?
yes, of course, I think that must be a pilot test, pilot project from the governments to using like before for like business, for company, to using like, for example, for the population, let's say, like is in Lugano in Switzerland, the people can pay the bills, the people can pay like the tax with cryptocurrency, with like the local currency. And of course, I think that the people just using the CBDC or anything like about the technology of blockchain, because right now is the cash money is useless, because everyone using like to pay with the tap, with the phone, with like card. So basically, the technology I think is the background is in everyday use. So basically, we need the government to say, okay, you have like your virtual wallet is like, right now the bank account is virtual, everything is virtual, but it's only the main issue is about to think for the population that say crypto is freedom and CBDC is like no, is like as a big brother that can control everything. But I think it's not this the case, because of course I say that everything and every transaction is right on the blockchain. So basically is the same. For the government is to say, okay, you have like your you can have your payslip paid in crypto in the CBDC of like can be dirham, digital dirhams, and it's the same if you have like on your bank account. I think it's only about how the people thinks about the CBDC, and we have like to be a smooth transaction with this and to improve, like I say, that everyday using. And the main also strategy is to have like a partnership with some financial institution like the payment, like can be, I don't know, PayPal, Stripes. They also have like a lot of project about the CBDC implementation. So the people can using and to start to think about the CBDC, the digital currency as secure and safe, and not like as a privation of the freedom.
Absolutely. Once it's actually adopted actually by the central bank, or there is a clear regulation, I think all the banks and all the payments will be using it. Coming to you, Adam, how are you?
I'm very good, thank you.
Good. So I want to hear your opinion about how the adoption can happen for the CBDC here, and how the UAE can ensure that everyone is using it. Is it rules only, or it's education for the payments in the bank, or it's a full campaign need to happen in order to educate everyone about it?
Thank you very much for the introduction. So my name is Adam Boujama. I'm the CTO of SolidChain, and also the co-author of the ERC 3643 and ERC 6960 in the Ethereum ecosystem. So when it comes to CBDC, the way I see it is that is the logical next step for the DeFi. So right now, I don't see any institutional using DeFi because it's too risky. I don't see someone coming with billions of dollars of assets using a DeFi protocol. So it needs to add, we need to add a layer of security. And through the CBDC, which I agree, it's kind of reducing our privacy, but on the other part, it adds a layer of security. I'm explaining why. It's like right now on the on the cryptocurrency when you use your stable coin. So you can do whatever you want with your crypto, but let's say you deposit your money on a DeFi protocol. Tomorrow, if someone hacks the DeFi protocol, you lose your money, which is not possible with the CBDC because the CBDC will be tied to an identity. So it means that everyone who wants to hold a CBDC needs to do a KYC beforehand. So meaning that with the KYC, it makes it, it makes it impossible for a hacker to get the money because it has to disclose his own identity. So I don't see someone hacking a platform and say, yeah, my name is Adam, yeah, but the fund is here. No, it's impossible. By adding this layer of security and reducing the privacy, it allows anyone to use in a secure manner any DeFi protocol. And also, it will change a lot of things. So right now, the bank are more custodial services. So this is something that will evolve also when CBDC comes, because CBDC doesn't need any custodial. You have your smartphone. I guess here everyone has a smartphone. So as long as you have a smartphone, you can be your own custodial. But on the other hand, the banks will evolve more on the aspect of a service provider. So they will be providing smart contract, DeFi protocol, lending protocol, any service that they are currently doing, but without the custodian. So it will be up to the user itself to use its own CBDC on any protocol, any bank, or anyone where he wants to put his money. And also,
so you mean that the banks will be accepting all the crypto going forward?
Yeah. So CBDC, it's not really a crypto. It's a digital asset. Mm-hmm. So it's the government still have access and can control the CBDC. So if tomorrow I steal $100 from your wallet, you can complain and you can get it back from my wallet. Even if it's decentralized, they will use it in a centralized way. So they will use the decentralized.
Centralized is contradicting to blockchain when you say centralized,
exactly.
Right? So how it will be centralized?
Exactly. So it will be using a decentralized platform, but in a centralized way.
Okay, so it loses the value of it, right?
It doesn't lose the value. For me, it adds a value because,
really?
Okay, I understand your point because I'm a fully decentralized maxi. So
yeah.
For me, there is no blockchain without decentralization.
Absolutely.
But somehow, sometimes you have to do some. So you need to reduce a little bit the decentralization to allow adoption. Right now, if I tell you, okay, you put your money here on this platform, you will get 10% APY per year, but you don't have any security, and someone hack it, so you have only your eyes to cry, nothing else.
Yeah.
So, but if you know that someone can revert the transaction, can get your money back, you will be, confident to put your money there.
So you mean that we are keeping it centralized in order to ensure that your money will be safe and nobody can hack it.
Exactly.
This is why.
Exactly.
So it doesn't lose the blockchain value.
It loses a little bit of privacy, of course.
Of course, because the aim of blockchain is decentralization, encryption of data. So
yeah, but you know, like me, it's impossible. Like nobody will let you, any government will not let you
do this.
To do this because there is so many risks. There is fraud, regulatory compliance, and many other things.
We cannot use any kind of blockchain with layer 2 or 3 which can prevent all of this.
So you can use privacy solution like zero knowledge proof.
Mm-hmm.
So you can prove that you did something without disclosing the proof. So you can say that you have more than $20,000, for example, on your bank account, but without showing how much you have on your bank account.
Okay. Thank you, Adam.
Welcome.
Going back to you, Muhammad, just if you can give me example of partnership which they can initiate in order to really adapt to the CBDC and be a global one.
So for the partnerships, look, the central banks are the regulators. So they are not the tech companies. When we talk about CBDC, of course, you have to collaborate with the extremely high valued partner for who can deliver that CBDC on a tech side. So the economic side they can cover, but the tech side needs to be covered by a very high-end technology partner. So in UAE, they have partnered with G42 Cloud, and R3 also, which is a centralized blockchain protocol coming up as a CODA. So these are the current two partnerships. But having said that, they have not wrapped up the partnerships with only these two tech partners. So they are exploring decentralized ledgers as well, different altcoins as well, so that they can be supportive. At the same time, they have partnered with the legal firms, not just based in UAE, globally as well. They have also partnered with other central banks, their regulatory bodies, their legal consultants around the CBDC rollout. Also, they have partnered with the digital euro to experience how in future they will be doing the cross-border settlements with these two independent CBDCs. So, having said that, you have to have an ecosystem around you, and when you talk about the ecosystem of CBDC, it is primarily coming from the tech and the new age economic side as well. So yes, there are partnerships here, and they will be continue growing further. This is the result. The result of these partnerships came up with the regulations around stable coins here, AED-backed stable coins. So this is a very unique strategy they have started to go for the CBDC launch. With the stable coins backed by AED, they will have a good testing ground to see operational hiccups, risks around the liquidity shortages, and other implications on the banking system. So before they go for a retail-based or wholesale-based launch of CBDC, this initiative of backing the AED stable coins gave them a very good run. And now already two have launched, one by a bank, another by an independent tech company. There are two more in pipeline. So next year we are seeing a lot of adoption in the AED-backed stablecoins, and that will provide a good thrust to the launch of CBDCs. Because CBDCs launch, again, we can talk in a separate question about the challenges around CBDC. There are plenty, and it's an uncharted territory. No central bank wants to start first. We've been hearing about China for the last 2-3 years. They are ready. They are ready.
Right.
11 other countries say they are ready, but no one is launching at a beyond a POC
so
stage.
UAE will be the first?
No, I don't think so. UAE will be the first, but it will be among the first. So it is always a country which is the fast adoption in terms of emerging technologies. Just yesterday, they got into the top 5 in AI adoption in the world. So similarly, we have already seen there are not many countries came up with the strategy and procedure to launch CBDC. UAE is one of them. They started the journey 2019. By 2024, there's a clear path moving forward as well for the up till 2026.
So 2025 we will be always using the POS
Stable
machines
coins,
and for the Bitcoin.
2025 throughout the year there will be tests. What is the outcome of the stable coins backed by dirhams? So this will provide them the launch, our pilot launch, which is planned in the Q4 of 2026 about the CBDC.
Yes, because in the UAE is still running I think two pivot project. Is one is the M Bridge and the is the FIT program. So basically, I think the UAE is at the forefront for the CBDC regulation and to have a beta frameworks to establish this instead of other countries, because I say that in European Union we have some program about the digital euro, but it still very lax because I say that from regulatory. And now we have the MiCA is a new legal framework. So I think the UAE can take some influence from MiCA from the regulation that comes from European Union, about, for example, AML, KYC, about all the legal frameworks, because it's also a very good point for the UAE to have much more trustability from the other financial institutions. So I think the main issue it will be firstly to have a very good legal frameworks for the CBDC.
Absolutely, I feel they are leading the way. This is what I feel, they are leading the way.
Yes, because for example, before I was speaking about the DeFi, about we as a financial institution, we are stopped like from the regulators and the financial commission to provide liquidity to the DeFi protocols because like for the lack of AML, like for the lack of KYC. So I think that for the CBDC that there are like a central like banks that can be like can do all the things about like the regulatory is a very good green flag. Also because like for example our investor, if they say that we provide liquidity to DeFi protocols, they are afraid because like for hacking, for like the risk related of course to lose the funds.
Yes, absolutely.
Instead, like for example, that if we're using like a custodial, of course also the custodial can be hacked. There is a lot of risk in itself also, but it's at least a safe way also to say, okay, I put my money into the custodial, so if I will get like theft or I will be hacked, I can be like of course be repaid for these things. Instead, like of course, like if you have like your DeFi wallet and you lose the case or you lose the phone or you will be hacked, you have lose all the funds. So for like the common using like for the people, for the user to use the CBDC, one thing is that say, okay, I'm sure that my tokens are in a safe place and nobody like of course can steal my tokens.
So it will give much more comfort, of course.
Yeah,
Absolutely, absolutely. Adam, last questions for you is what about the strategies which we can implement to immediately go for the CBDC and found that everyone is using the tokens or using the digital currencies in order to do their payments?
So right now, like implementing CBDC is not very challenging in terms of technology. Mm-hmm. It's more in terms of adoption. Right now, there is some resistance from the bank because they will have to adapt for sure. So that's the first part, like how to work conjointly with the banks to make sure that we can adopt CBDC in the right way. So also, except the bank, like, so it doesn't mean that the banks will disappear because this is what I hear every time, like CBDC or crypto will make the bank useless. It's not really.
They will lose revenue, absolutely.
Sorry?
The CBDC they will lose revenue, so it's a matter that they need to cover it from other things, but the revenue which they make through certain lines, of course, it will go once the CBDC will come.
But I think like
this is how they think. I'm a banker, Ricardo.
Sorry, repeat again.
So this is how the banks is thinking. So
for me, the way I see it is their role will evolve. So it will not be the bank as we know them today. So it will be more kind of a decentralized protocol, but in a centralized way. So their role will evolve. There is no need for them to be custodial because if you have CBDC, you don't need any custodian.
Absolutely.
You need only your smartphone.
Absolutely.
So that's also one of the best use case for the CBDC is that it will allow unbanked to be on board. So as long as you have an iPhone or Samsung also, like you can
any
have
phone. We don't want to.
You can be your own bank. You can be your own bank, and that's one of the best use case for the CBDC. So as long as you have a smartphone, you are your own custody. So this role from the bank is not necessary. So if I can be my own custody, why should I put my money in a bank?
Still, we require the banks for multiple other things. So yes, absolutely. I think that they adapt to it, they collaborate together in order to launch it, and it will be enforced by the government institution in order to go ahead and use it.
But it will be different. Like now with the evolution of RWA, for example, you can buy, using your CBDC, a fraction of real estate, and then use this fraction of real estate as a collateral in a bank smart contract to get a loan or to generate some yield.
Mortgages.
Yeah, so it's kind of decentralized, but as I said before, with a layer of centralization. Because, like there is the trilemma in every crypto, every decentralized protocol. So you have the decentralization, you have the privacy, and you have the scalability. Mm-hmm. So you need to sacrifice one of the three.
One of these three.
Yeah, to make sure that to to make the protocol evolve. So here, with the CBDC, we have to compromise with the decentralization to make it scalable and to increase the privacy somehow.
Absolutely, absolutely. I'd like to thank you. It was really great having you. And
thank you.
Thank you very much.
Thank you.
Amazing. Thank you all. Thank you. And now we move on to an exciting panel discussion on financial market in the UAE, futures, foreign exchange, and risk hedging strategies. We will share these insights on the evolving landscapes of financial strategies, driving market growth, and the risk management in the UAE. Please welcome our panelists, Mr. Jindo Tai, Managing Director, jindotai.com. Demetrios Samboglu, CEO, UAE Blockfills. Mr. Parsa Abbasi, Founder, Black Hole Investment Holdings. Let's welcome them all on stage. How are you? Good.
So, are we going to start? Or? Yeah. Okay.
All good, all good.
All right. Hi, everyone. So, again, we're on stage. Well, I'm on stage again. We're here with the panelists. Just a quick introduction first. You want to self-introduce?
Yes, my name is Dimitrios Zamboglu. I am the CEO of UAE of Blockfills. Blockfills is one of the largest liquidity providers in the digital asset space. My background is in quantitative finance. I have a PhD in behavioral finance, and I have been in the board of directors of two of the largest online brokers in the world.
Okay, that was impressive. So this is Parsa. I'm the founder of Black Wolf Investment Holding. Actually, it's an investment consultancy firm here based in Dubai. We rep offices in Switzerland, UK, Sweden, and hopefully in East soon, right?
Singapore, Hong Kong, maybe?
Yeah, Singapore and Hong Kong soon. And what we do, we actually provide tailor-made solutions for our investors and for our clients, from wealth management to structured products. And also, I have a background in finance, and from 2018 in crypto, having the first decentralized VC name and a token. And yeah, that's who I am.
So a whole wealth of experience and knowledge here. And I'm from Singapore. I flew all the way in yesterday, red-eye, really tired. Welcome. Thank you.
Yep.
Thank you. I come here quite often. I do my own trading. I do FX. I do real estate. Nothing compared, but I'm really hawkish and really looking into the topics that we have here, right? The UAE, futures, foreign exchange, and risk hedging strategies. I see the potential here. I'm really keen on the potential here. Let's get started. The first question on trends, right? Derivative markets is in the UAE grown significantly in the recent years. From your experience and perspective, what key trends do you see driving this growth, firstly? And how do these sectors complement or challenge with each other in the UAE? Don't rush to answer.
I believe in the recent years we have seen very large organizations relocating or opening representative offices, especially in Abu Dhabi. Big organizations like Brewan Howard, big organizations like Citadel, they are looking in becoming integrated in the UAE environment here. There is many reasons why organizations want to move here. The frameworks are extremely established and they allow them to do clearing, especially on products like derivatives, which is not plain vanilla products. Apart from that, a lot of people have relocated in Dubai, Abu Dhabi, in the UAE area, and nowadays also in the GCC. We've seen much investment in technology and infrastructure, and the most important thing, you have a regulator here in this region that is very progressive. So if I will summarize it into some short points, this will be it.
Interesting. Thanks for that.
Yeah, so as Dimitri was mentioning, one of the things that separate UAE, actually, according to their plans, than the other countries, specifically in GCC region that we're talking about right now, is they are becoming a hub, and they're planning to become a financial hub according to their visions and their plans. So you want to become a financial hub, first of all, you need to have good regulatory frameworks. And after that, you need to be able to attract investors, which are doing a very good job, attracting investors from all around the world by having no tax on them, by just providing different features for them, and specifically talking about the IFC free zone, which is providing the FSA regulator framework, and ADGM. They're doing a very, very good job. Specifically, let's talk about crypto assets. They are also involving crypto assets into derivatives, which gives a very, very good which provides a very good opportunity for other financial institutions to build new derivatives, to build new structure products, to build new financial tools. So this can actually differentiate UAE specifically from the other GCC region countries that we're talking about. So yeah, they're doing a very good job. But the key trends that we need to keep looking at, first is digital assets, and the second is absorbing more foreign investments.
But what do you think would be one of the major challenges that would be a hurdle to these developments?
It's a very, very interesting question. I mean, it can be answered in two different parts. The first main challenge will be to understand what kind of regulation you need as a company. So where you will set up, and this depends also on your offering and on your clientele. Because you have so many options, you need to make sure you're choosing the right option. So this is the first thing. The second thing, it will have to do with structuring your entity in the right way that it will allow you to trade those instruments and clear with counterparties, let's say either in Europe or in America. I'm just giving two examples here. And putting the rules and the technology in place in order to be able to do the right settlements at the right times and make sure that everything is reported to the regulator, and also make sure that on the other side, the entities that you are reporting to, they also have the right kind of data so they can also do the right reconciliations.
Okay.
Very good points. Very good points, actually. Thank you. But in my opinion, the most important thing is you should know the regulatory frameworks very, very well. Because if you don't choose right at the beginning, as Dimitri mentioned, then you're going to face problems in the future for expansion. So this is actually a very big challenge. The other thing is that, okay, so let's say I want to have a financial institution. Let's say, not a financial institution, but I want to start something in the world of finance, which is costly in its own essence, in its nature. But if you go, for example, if you want to set up your company in ADGM, it's actually costly. It's really costly. If you want to move to, for example, the IFC, then the IFC is not as as complete as ADGM. The other thing is that, okay, so some big institutions are based in ADGM and some others are in the IFC. We don't have one jurisdiction to, all can be fit into. So this is one of the other challenges, at the regulator.
Do you think there should be one?
I don't think it should be one, but I think that, one should be here and one should be there at least. This is something that we need to think about.
I think the other problem that it sounds very simple, companies are not asking the questions. So if you do not ask a question, you will not get the right answer. So companies should ask more. So if they are willing to apply to any of these licenses, they can start with an introductory email, and the people in these bodies are actually ready to help. They're ready to reply. It's not a regulator who doesn't have a face and a body. It's a regulator who is there for you. You just need to tell him that you need his help. So it's very approachable.
Okay, really good points. I don't know about you guys, but it's really good points for me because I'm in Singapore and I'm having a lot of clients and network reaching out to expand into the UAE. So thanks for that. Thanks for sharing. Now the next question, let's think about asset management, right? Especially in the futures, what do we think of the derivative instruments that could be utilized to manage risk and create investment opportunities in the UAE?
Again, this is not an investment advice.
This is disclaimer applies.
I need to put this disclaimer because we also have an asset manager in the group. There is many strategies you can use. It can be a market neutral strategy. Again, it depends on what kind of assets you are willing to offer to your clientele. But whoever your client is, he needs to understand also what kind of returns he's seeking, what is the level of risk he can take, and what is the time horizon he's taking. From my side of view, I am dealing a lot on digital assets because, as I said before, we are already an established player in this domain. But we are seeing a lot of trends. All the assets slowly will be digitized. And even crazy assets like meme coins, maybe they will also take a shape and form in the future. But a very nice example of what has arrived is the MicroStrategy actually. What is happening, how you can leverage outside of trading and using this kind of borrowing, leveraging outside the margins, and also creating portfolios with specific kind of risk. When it comes to trends, I see a lot of this old commodity trading also being digitized. And it's going to be easily digitized now because it can be settled to fiat money on the blockchain. And again, when the CBDCs will be arriving, it will be immediate settlements. It will not take time. So you will be able to trade oil and you will be able to settle immediately. And we see some few examples now on the Tether, with using Tether. So this is what I will say.
Yep. Okay, so speaking of derivatives, and their effects, and their effects in financial markets. Let's say, in total, when we're talking on a worldwide level, actually most of the things that are being traded are derivatives. Securities are kind of derivatives. The thing is that here in UAE, what makes it much more beautiful than other places is that they accept digital assets much better, in a more friendly way, this jurisdiction, than the other jurisdictions. If you go to Europe, we have MiCA, DLT pilot regime. In the United States, we don't have any. But the thing is that here, at least, there is something that you can build. You can build products that can have exposure to crypto assets as well. What we do at Black Wolf is basically we have more risk-averse clients. They're mostly from institutions, very high net worth individuals, banks, investment banks, but they want to have that crypto exposure as well. The thing is that they don't know how. Even if they know how, they're still afraid. They're still waiting for everything to be settled and set. and they jump on the wave. But in that case, they're gonna fall behind the market. So they're kind of like, testing the water. What we offer them, again, as a disclaimer, is that we mostly offer them as structured financial products that have some crypto exposure, but go for crypto assets like Bitcoin or ETH, which are more stable. Again, in nature they're volatile, but they're more stable. But when it comes to this market, future trading is also a big part of the game, because of too many geopolitical problems or risks that can happen in this region, and still oil dependency that these markets have a bit. So when we come to those clients, what we offer them is some kind of structured commodity-backed bonds, and have some a bit of crypto exposure through ETFs or a bit of DeFi protocols. So this is what we do, and we are trying to break this wall, or let's say not break it, but at least make something. Okay, take some bricks from this wall so that these people can see the other side of the wall, and then the wall is going to be broken after a while.
So just get them involved at some
Yes.
level.
Yes.
Maybe in a unbalanced weight portfolio kind of thing.
Options also are resurfacing in the retail world. My company is purely institutional, but because of my background, I have now seen a lot of brokers trying to reintroduce options trading to their retail clients. Because now you have technology, now you have connectivity, now you have faster financial engines that can actually price options. And it's resurfacing in a way that the retail clients will understand how to trade it. And I've seen this happening. And from our side, traditionally, we are, I would say, the biggest options market maker in the space. But some of our clients, which are large online brokers, are asking for such products for their retail traders.
The options that you mentioned is the future of DeFi and let's say crypto world, because as we're seeing in the world right now in traditional finance world, options are playing the biggest role, and other financial instruments deriving from options, also swaps, credit default swaps, and all these things. So one of the things that we should move to, if we want to talk about the future, is options and more credit-based financial products, which is the biggest market when it comes to the United States, if you see it right now.
So just so you guys know, we're starting to talk about options. It's not anywhere on my list of questions here, but I'm going to go with that. Up until now, up to right this moment, I've always held the belief that retail traders shouldn't trade options. If they don't understand spot, if they don't understand how the market works, basically, options should be one of the last things they touch. Would you still think that, or?
I think a retail client, first of all, touching any margin-related product, he should first understand it. I'm just going to do an introduction before even going into derivative products, which are more complex, like options. But in the last 10 years, we have seen retail clients trading with ease margin-related products. And also, this training had allowed them actually to trade also future products. And now they're moving slowly in the options trading space. Option trading products are complex for sure. But again, I believe there should be some kind of UI, UX that allows them to understand the risks. And of course, they should read the terms and conditions. But retail traders are becoming more and more sophisticated. So this is the thing I would like to say. And of course, before trading anything, you should understand the risks. I believe in this 100%.
Get educated.
Yeah, anyways, trading with leverage is riskier, but on the other side, it has higher returns. And as also Dimitri was mentioning, also retailers are becoming more attracted to sophisticated financial products. If we're talking about options 10 years ago, I can assure that not too many people even heard about options, or even if they heard, they didn't know what they are. But right now, if we talk, at least we can say like 4 out of 10 people, they know about options, even if they don't know about the details. But again, in their essence, they are considered as sophisticated and complicated financial products. Okay. So they need to learn. But if they learn how to trade options, then the world would change. I don't know if you trade options or not, but if they learn how to trade it, their vision about finance, it changed drastically, totally. And it's actually a very good opportunity, but they should learn, and it's a try and error procedure, because the easiest functions and the easiest maybe formulas that are used for option trading, like Black-Scholes, are still so complicated than any other formula that you see in any other parts of finance. But right now, by adding AI to it, adding too much brownie emotion, just anticipating the market like hedge funds do, it's just becoming very hot, but still needs education.
Yeah, options are considered to be cool nowadays.
Well, it's always been, hasn't it?
I think that there was a lack of education and a lack of technology, and now we have both technology and education, because before, even to price the option, you should press the button, you should wait for a minute, and then the option price is Nowadays, you see prices on real time, fixed APIs, you don't need to do RFQs, everything is there, everything is charting, and then you have very nice interactive gamified courses that teach you and allow you to understand what you're doing.
Awesome. I had a time limit thing go up just then. Quick question here is, we talk about cryptocurrencies, we talk about traditional derivatives. It's all about volatility. Obviously, crypto a little bit more volatile. How would you best advise, well, not advise, but best suggest a way to manage a balance and also the risk between these two?
I will say the simple answer to this, it depends on what kind of returns you are expecting, and then understanding what kind of risk you're willing to take to make this kind of returns. Because if you're trading a product that in the last 10, 20 years, like 2 or 4 market cycles, haven't developed those returns, most probably is not going to develop the returns. But with the ups, the downs are also coming, so you need to be careful. So you need to understand the return, you need to understand the risk, and then you need to understand how this product works before you start trading. So you need to educate and then also do your analysis.
Yeah, so regarding risk, as Warren Buffett said, we only have 2 rules. Rule number 1, not to lose money. Rule number 2, never forget rule number 1. And when we're talking about risk, we mean, first of all, risk is a part of game, but you should be able to manage your risk. It's not like that, I want to be exposed to a crypto asset which just jumped up in the past 24 hours 700% or 7,000% or whatever crazy numbers that you have in your mind. And then, I say, why did I lose it? Anyways, that's a part of the game. But you should be able to manage the risk. And right now, specifically in this economy and in the next few years, which we are seeing we still see the chance for a recession, for bad recession or whatever in the future. We need to be able to manage the risk, and we need to learn how to do it, and we need to learn how to make a crisis-proof business model or investment model. This is really important. So what can stay up when things are going down, or what can stay steady when things are going down? Again, risk mitigation, risk management is a part of the thing that we do, but not too many people are doing it, and diversifying is just an old way of doing it. There are much more complicated things right now which we should consider for risk management. But just with all ups comes downs, right?
Thanks for that. We started, no, not we, but this whole thing started at 9 a.m. It's almost 3 p.m. now, and I think that's the first time I heard the word recession at the talks. To end that on that note, thank you guys for joining me.
Thank you. Thank you.
Thank you everyone for being on the session.
Thank you.
Absolutely. Thank you, guys. Ladies and gentlemen, our next panel discussion is titled From Virtual to Reality: The Value of RWA in the Web3 Ecosystem. This section will explore the integration of real-world access, RWA, into the Web3 space and the opportunities it presents to reshape traditional financial system. We have an exceptional group of experts with us today. Ladies and gentlemen, let's welcome Mr. Hakim Wusba, co-founder of Step in Lab, will be moderating the discussion. Also, Asal Alizad, co-founder and CEO of Block Logica Labs. Ashish Kumar Singh, CEO of Loyal. And also Adnan Boujamas, co-founder of Solid Chain. Merci beaucoup, monsieur. Ladies and gentlemen, let's give them a big round of applause.
Okay, so hello everybody. And as you might understand, we had like some participants that are missing. So we had to change some of them. We have here also Adam. I believe that the photo is not the same, but definitely he's an expert in RWA. So it's gonna be fun. Okay, so welcome everybody. So today we have like such an amazing topic. We're about to talk about the conversion between the real world and the digital one. So it is, we are talking about the RWA. So definitely, I believe that in this crypto market, the RWA is taken at the moment one of the big parts of this market. So my name is Hakim. I'm the co-founder of Step in Labs, also head of business development at Step in Web3. Over a decade of experience in crypto, I've been like collaborating with many projects in RWA, DeFi, and eventually many other innovations. And I believe that it's more than a technology, it's also a philosophy. So I would love to introduce you guys, but I believe that who's better than you to introduce yourself? So if you could give us like a small introduction about who you are and what you're doing, please.
Hi everyone, I'm Asal, CEO and co-founder of Block Logica Labs. We are a Web3 accelerator here in Dubai, and we help a number of foundations and projects to grow. And yeah, that's almost it.
Hi everyone. My name is Sarwa Benba. I'm head of partnership for XDC Network. We are layer 1 blockchain, EVM compatible, developing a ecosystem around trade finance and tokenization of real world assets.
Hi everyone, my name is Ashish Kumar Singh. I'm the CEO of Loyal. Loyal is the first company in the world which has tokenized loyalty. We hold more than 5 patents, working with the likes of Emirates Airlines in this region, Enoch, which is like one of the success stories as well, and doing a lot of cool stuff. So we'll be talking about RWA very soon among the lot, but I just want to initiate one point here that still people think RWA as real world asset very limited to real estate, but I think it has gone beyond real estate now. So we'll speak soon. Yeah.
Hi everyone, I'm Adam Bujama, so I'm not this guy. So I'm the CTO of Solid Chain, and I'm also the co-author of the ERC 3643 and ERC 6960. Both are widely used standard in the Ethereum ecosystem. At Solid Chain, we provide technical services. We have a strong specialization in RWA, so we can help any project to build their stack from the full stack dev, smart contract,
DevOps, anything like tokenomics, like anything that touch Web3, we can do it. And I'm really glad to be here.
Such an amazing lineup of panelists. So let's dive into it directly. So let's start by talking about the current situation of the market. At the moment, we see like a surge of like projects rushing the market. Like the market is like on such an all-time high. And definitely we are here to talk about the RWA and what's like the position of the real world assets in the small market and what's going to be like next. So I will be definitely asking a question to Asal and Salwa. So how do RWA reshape the Web3 ecosystem and what role they will play in decentralized finance, especially in this current bull market?
I think that has a wide answer because RWAs have a really wide range. It really depends which type of RWAs we're talking about. In the current situation, I think fantasizing about what our RWAs can bring to the market are a bit far from reality because of some regulation issues that we are still facing when it comes to some sorts of real-world assets like, for example, real estate or more traditional forms of it. But when it comes to other types of longer tokenized, like security tokens that are currently, they have frameworks already established in places like Singapore or Hong Kong. Obviously, we will see more use cases of them. I think it can bring more, institutional or less risk-taking investors to the market. So I think it needs time and it needs some improvements in the technical side and the regulation side, but it can bring more liquidity to the market and more use cases and more options to the investors in the market.
Asal, so you're like in the investment part of the market. So what do you think about the current situation when it comes to investment regarding the RWAs?
I think still, as I mentioned, the regulation is a big issue. Especially when it comes to, still the physical ownership needs to be transferred through the traditional procedures in most of the cases. But for specific types of real-world assets, which are now more regulated, there is a framework for it. I think the investors are more obviously likely to hedge their risks and, have a part of their on-chain assets in real-world assets. Why not? Obviously, it is a really good way of hedging your investments. But I think there are lots of challenges and different angles to it that I think we will discuss in next questions.
As for me, with the recent elections in the US, we can see that there's some green lights. A lot of people who were actually a bit concerned about regulatory, the CFTC, the SEC, and so on, actually now are looking at more positive prospects. Just looking at here, the local market in the UAE, with the recent adoption of, the digital asset law in the IFC and VARA and so on, we have more regulatory clarity. And we've seen more and more interest, more and more people wanting to tokenize, real-world assets. Now the big question is everything worth being tokenized? I think it needs to have an economical model that makes sense. And one of the things Asal was mentioning is liquidity. The main interest we are seeing from our side as a layer 1 blockchain is bringing liquidity and getting illiquid assets more liquid. Which means if you have something that is not practically, you cannot mobilize in terms of finance, by tokenizing it, if you can extract whatever you need for investment or even, getting an API and so on, these are the types of things we're seeing. From our side, we've been looking at tokenization in an investment side. So we've done a few partnerships with companies like Plug and Play to bring more of these projects on chain and investing in them. And what we're seeing is some really creative project coming on board, and in different sections. On our side, in the trade finance side, we've been tokenizing, for instance, EBLs, trade documents, to be able to use them as collateral to get finance. So I think we are only at the beginning of it, and we've seen a green light also with institutions such as BlackRock with the Build tokenized money fund, and we are seeing more and more requests of that type.
So I wanted to ask you, Salwa, since you are like tokenizing a lot of assets, what is the most common like assets that people want to tokenize at the moment?
We're seeing obviously a big interest in properties, but the property market in terms of regulation has been a bit unclear and lagging, but now it's getting clearer, and we can see more projects moving into that direction based on the legislation and the country where you are. The other thing, the easiest is commodities. We're seeing we're doing, for instance, with Comtech Gold, we tokenize gold, tokenize diamonds with one of the projects, FRAC, that we've done. So these are more easily, tokenized. But also in trade, like a shipment, we've had a copper shipment that needed to go from Malaysia to Singapore, and tokenizing the EBL made it possible to raise liquidity for that shipment to get on the other side. So we can be as creative as we want, as long as it makes sense financially to tokenize it. Yeah.
Amazing. So I wanted to ask you the same question, Ashi, since you are like working closely with the government and you have like such an experience on building different applications on the blockchain for especially Dubai governments and stuff. So how do you see like the place of the RWA in the government, and what's like the use case directly? What's the most in demand when it comes to the government?
So I would like to answer this question in a different perspective. Let's understand why this topic is of prime importance today. So I started my journey on the blockchain a while back when people just knew Bitcoin. I came here because Smart Dubai was formed, and while I was involved with Dubai's first blockchain project, I also realized that in this country, government does something and then people follow. And that happened with the virtual asset as well. And that is actually the essence of making any utility, accessible to the end user. Most of us typically think the challenges from our perspective. I mean, if I have to build a company, I'll think that, okay, whether regulators are accessing, my demands, whether I'll make money or not. But that will eventually only happen when the demand comes. So in this case, what happened, if you look at the UAE government, especially tokenizing the documents. So before Expo, I did an initiative here with 5 government entities, inclusive of Dubai Police, Public Prosecution, Dubai Court, GDRFA, where we tokenized the entire NOC piece. And the purpose of that was to, make the lost passport as a use case, go away. I mean, if you lose a passport and if you're a traveler here, it's a big mess. But if you can get that passport in like 5 minutes, just because, you are getting NOCs from all the entities in like couple of seconds, that's a magic. And that will only happen when you are able to build a network around that. And this is one of the use cases which this government is up and running, and it's already, if somebody loses a passport, you pay a fee for that. And this is where I would like to highlight that the stepping stone in this country is when government is taking an initiative, first do the homework of learning that, how they made it happen. And if you're able to learn it well, then I think then building a use case or building a company on that is not a big deal. I was also involved in Dubai's first real estate, or rather the RWA initiative, which actually saw light of the day. Now that also was not happened overnight. I mean, we had to spend days and nights with Dubai Land Department to understand how you can actually legalize the title deed process. So, like I said, it's beyond the tech, it's beyond the challenges as a company we may face. We need to actually turn the table and look from the other perspective. And that's what I think has worked quite well in this part of the world.
So, Ashish, do you think that the government, especially here in Dubai that you're working with, they are mostly open to RWAs, or they are still like facing the problems when it comes to regulation?
See, if any initiative here is not going to impact the prime, see, again, if you look at the risk appetite of any regulator or risk appetite of any organization, the fundamentals will not change. How you tokenize is the lingo of Web3. But end of the day, it's all about how you are defining your security asset. So if you're not, breaching the fundamentals of risk management of any asset, I mean, you can do that. Like I said, they have already tokenized digital finance. UAE Trade Connect is a consortium where I was involved. It has more than 11 banks, and they are already, doing invoice discounting fraud detection. So there are use cases which are up and running. That is championed by Etisalat.
Interesting. Thank you. So, Adam, wanted to ask you like a little bit more technical questions since like you are a CTO in it. And eventually, when we were talking about RWA, we were talking about tokenizing like real world assets and stuff. So it's one of the most used application in blockchain, right? So what do you see? What are like the opportunities in tokenizing physical assets like real estate and commodities?
So first of all, I think the election of Trump is a very good thing for the DeFi space and for the blockchain in general. So it will increase the adoption. And right now, I'm really happy that RWA become one of the hottest topic here in UAE, because right now, people knows blockchain only through crypto, and unfortunately, crypto is only a small part of the blockchain. There are many, many use cases, and I think that through the RWA, we will be, it will showcase one of these use cases and the power of the blockchain. And when it comes to RWA, of course, what talks to people, mostly it's real estate. So real estate is one of the most widely, common use case. So, because it talks to everyone. And blockchain right now, it's kind of shady. People doesn't understand really what is possible to do. And by showing through an example that talks to everyone, it will increase the adoption. And I think step by step, we will be seeing like more use cases. We will see more adoption. And so we start seeing like we have some of our customers that want to tokenize funds. Some other, they want to tokenize horses. We've seen like many different type of tokenization. But right now, like we are still in the experimental phase. So after a while, I think like we will see the thing being standardized, and we will see more adoption, and we will see more people using the blockchain in the day-to-day life, but probably like without knowing that they are using the blockchain.
Interesting. So what do you see, or what thought do you have about like the opportunities of tokenizing like real world assets and commodities, real estate, and commodities?
Sorry, repeat again.
That was a question to Selwa.
Okay,
then, like, you are like in the front line of real world assets and tokenization. So what do you see? What are like the opportunities on tokenizing real estate and commodities?
I think the main advantage is going to be, first of all, financial, because you can get the liquidity where it's been difficult. The other thing we're seeing is time saving, if I'm answering your question. In the processes, you kind of reduce the processes, you make things faster, more seamless as well. And I'll just give you, for instance, an example. When you take gold, physical gold, you have, if you want to carry gold around, it's very complicated, it's very heavy, and the logistics around it is very complicated. So by tokenizing it and having it as a token in your wallet, you can go and redeem against those tokens in a shop directly and buy something or gift it to someone else directly by transferring the tokens. So what's the opportunity here is to make something in terms of the liquidity side and the practical side, storage and things like that. It's more convenient. Now, as a business, I think, if I'm not mistaken, the forecast for 2035, the market is set to grow to something like 30 trillion from the last figures from Standard Chartered. So even if we grasp just 1% of that, or 0.5% of that, as a business, this is a great opportunity in terms of investment, return on investment, and also a way to be part of the future economy. Because I do believe that maybe not everything will be tokenized, but many, many things will be tokenized.
Definitely. So that's really interesting. Since like you are likely dealing with those kinds of RWA scams, especially to gold, like what you told me previously. So that's interesting. So Asal, since we are talking about investment, I believe that tokenizing real-world assets can attract like more people, more investor to the landscape. Do you see this as an opportunity to grow the market, the global market, crypto market?
I think if you are talking about the crypto market, I see it as a different asset class. I don't see RWAs and cryptocurrencies as same assets because both are using blockchain but are not same assets. I mean, yes, indirectly, I think it can bring more liquidity to the market of cryptocurrencies and basically crypto market. But when it comes to RWA, we are talking about a completely different type of audience that which usually want to take less risk. They want to invest in assets that are, real world assets, but they just want an easier tool and an easier access to it. So yes, through the onboarding of those type of users and those type of investors, I think usually a part of that liquidity always shifts to the crypto market. So why do we say that crypto market is liquid, is volatile and is risky? Is that because the market depth is small, the liquidity is small compared to other asset classes. Therefore, the volatility is high, the risk is high, but with the injection of more liquidity, definitely the market will be safer. And indirectly, with it's like when the stable coins didn't exist. So many people were not feeling safe to enter the crypto market because they just wanted to have something safer. So the same thing can happen, and a percentage can flow to the crypto market, and yes, definitely more investors will join the market and help the crypto market in long term as well.
Definitely, that's interesting.
If I may add something,
yes,
it's
please.
also, like she was saying, is using it as a collateral. By having something more stable, even if it can increase or decrease, but not as much as, like she was saying, the crypto market, which is very volatile. Let's say if you are in a borrowing pool on a DeFi platform, having those type of assets as collateral will give you more stability. Yeah.
Definitely. Thank you so much for that. So, talking about the adoption, I believe that in crypto, in order to get the mass adoption, we'll need to be scalable, secure, and interoperable. So, question to Ashish and Adam, since you are like most on the technical side. So, what are the most critical advancements that we need to focus on so we can have the success of tokenized RWAs?
Sorry, can you repeat the question?
Okay, I said since you have we need multiple improvements in the in the blockchain to have the mass adoption. Which blockchain advancements are critical? Which one should we focus on so we can have the success of tokenizing RWA?
Got it. So one thing, by the way, on this aspect, one thing Loyal has been doing is, so we do have one patent which is bringing a commerce to the tokens. I mean, we have a tokenized commerce patent, and that is like embedding default universal reward to whatever transaction you're doing, agnostic to whether it is a crypto transaction or a RWA transaction or even a TradeFi transaction or even a gamified transaction. And this also eventually impacts the end user's interest. End of the day, we need to understand that who is the end user of RWA. These are the people who are micro investors. These are the individuals who are not very mainstream investors who understand the landscape. If they really do, they would be going into the capital market. They eventually will be going to the traditional market. If they're coming in here, first thing we need to make things very attractive. Attractive via new technology advancements or really bringing them a new source of assured revenue. So while crypto is very volatile, I mean, you invest, you can be going down to zero, but there should be some sustainable reward which should be associated, which at least hedges their risk of investment. So this is one thing what even we are doing. Over and above, as a tech advancements, if we talk about, definitely now people are coming with different L2s on focusing on making either smart contract more AI driven so that they understand the persona of the consumer. They're able to even give recommendation on the investment they are doing and then manage the entire workflow. And moreover, bring the regulations embedded in the RWA infrastructure they are building. So these are the things which people are eventually talking about. Thank you.
Thank you. Adam, maybe?
Yeah. So right now, I think one of the biggest concern is the adoption and the user experience. So, I mean, like if you're not into tech, it's really complicated right now to use any Web3 protocol. So people knows blockchain through crypto only, but there are like so many use cases behind the scene. And I think, so the first thing to solve is how to enhance the user experience. So there are some initiatives through account abstraction where you can use Web2 solution into Web3. So you can use your Face ID, you can use your Google account to authenticate with your wallet, which are like the first step, I guess. Secondly, it's the privacy. So privacy is really a major concern. So imagine having a fraction of real estate, an apartment or anything, but everybody knows about that. So it means that you're telling your friend that you are poor, but in fact, they see your wallet and they see you have like thousands of different assets. So it's like privacy is really important here. And also CBDC, I'm kind of against CBDC, but I have to admit that it will also increase the adoption because it will add a layer of security. Right now, if you put your money in any DeFi protocol, I mean, it's risky because you can lose your money if a hack happens or anything. But with CBDC, you have the capability and the possibility to revert the transaction. So the government can track the wallet, can force the transfer from the hacker wallet to your own wallet. So they are like, it's kind of centralized, but at least it will increase the adoption because I don't see any institutional putting billions of dollars of assets in Aave or Compound because like it's risky. So they need some security and some kind of centralization on top of that to make sure that even if the worst happens, they will be able to recover their fund.
Do you think that, let's say, for example, DeFi are most dangerous when it comes to investments than RWAs?
Sorry?
According to what you just said, I'm thinking about, do you think that DeFi is most dangerous when it comes to investments than RWAs? Because maybe RWA is like a physical aspects. They have the other physical aspects and the digital.
Yeah, but like on RWA, like you still have a relation with the real world. While in crypto, you have only your eyes to cry if anything happens. Like if you lose your private key, you lose your funds. But if you lose your private key, which contains RWA, you can still have some, process that can make you to recovering your asset and the like.
Definitely, thank you. So,
and just to add to that, I think they can work together actually. If you use tokenized RWA in DeFi,
you will bring more security to the DeFi side. That's how I see it myself. But that's personal opinion.
Definitely. Thank you so much for it. And definitely when we are talking about like the adoption and how we are bringing like the mass adoption to RWAs and stuff, we're talking now about the regulation, which is one of the major problems in the whole crypto industry. So we've seen that there's like many countries that start diving into the regulation of RWAs, starting like from Dubai here to Europe, but also Australia, and it's becoming like a worldwide phenomenon. So one question about like the regulation. So I want to ask you, what are the main regulatory hurdles for RWA, and how do you see the regulation evolving to address those challenges?
Can you just repeat the end, because with the noise I can't
Okay,
hear
I've seen like
the end.
what are the main regulatory hurdles for RWAs, and how do you see regulations evolving to address these challenges?
What I'm seeing from my personal opinion and the discussions I had is you just need one big player or one big nation to go ahead, like we're seeing now, for instance, with the US, to get everyone following. We've seen it with BlackRock. In December, I was having a conversation with market makers who were telling me, oh, we can't talk about tokenization now, it's too early, it's literally even just a fad or whatever. 2 months later, the same guys were writing a paper about it after BlackRock made the announcement. So you just need some key players, market movers to literally step in. And we're seeing that even countries like China, Russia, or more recently Morocco, they're like, okay, let's go back into it. Why? Because they don't want to miss out. They see some central banks looking at having, for instance, BTC in their reserves, which is not RWA. But what about the goals they have? They could actually tokenize it and use it in a different way. So I think when it comes to regulation, the fact that some places like here, the UAE and small countries, like you said, are moving ahead and they're having a positive experience, which is not always the simplest. But I think that's the way we will have more adoption. The other thing is we should remember that tokenization is fractionalizing also the possibility of ownership of this asset. So let's say I cannot afford a big house, but I still can have a stake in that house in form of token and get maybe a percentage of the rent. That still makes that accessible to me. Let's say if I'm just having, middle or lower income, which before would have been just an utopic kind of idea. So I think that also making assets more accessible to retail is going to be a motivation. But like Adam was saying, is you need a product that is user-friendly. You need something that they feel safe using, where the QIC, everything is easy to do, where you can retrieve your asset if anything goes wrong. Let's say you get your phone stolen or anything like that. So I think there's still a little bit of work to be done there, but I see more and more, companies going there.
So do you think that the account abstraction is important for RWAs?
Yes, completely.
Okay, thank you. So, Asal, I was about to ask you the same. We already discussed about regulation, but well, let's go ahead, please.
Actually, I wanted to add something on this point because I feel like when all of us are talking about RWA, we are mainly talking about tokenizing real-world assets. But I mean, in my experience, RWA is broader than just the tokenizing. So apart from what RWA brings to Web3, we can say that what Web3 brings to RWA, so many new tools, so many new financial instruments, so many tools like financing or even different angles that we have in DeFi can really facilitate the RWA market. That's why now we see that more developers, real estate developers, are interested to use this new angle. You don't see more degen Web3 people asking you, how can I invest in a property through crypto? But you see all the developers coming and asking for it. So I think Web3 is adding more value to those markets rather than those markets adding value to Web3. And the good thing is that when it comes to that side, you just need the regulation on the crypto itself. And so many countries like UAE already have the regulations. And apart from the tokenizing side, I think there are so many parts that are currently regulated and can be utilized.
Thank you so much. So, also, do you think that tokenizing like real estate and other commodities will bring like liquidity to the market? Like we're talking about some like super hard markets where it's difficult to make something illiquid. You are going to bring it like on the liquid side.
It does. That's why you see most of the VCs, even investors like us, we prefer to invest in tokens rather than getting equity because we have accepted that tokens are more liquid. But again, it needs the regulation side because as of now in RWA, I feel like you usually have to trust a third party unless something is wrong. As Adam mentioned earlier, you usually need to either the bank to back it or a middleman like ECHO or different RWA protocols that are working now that take the custody and take the responsibility of those investments because the blockchain, the oracles are not still that interoperable with the real world, with the real world offline data. So I feel like, yes, liquidity can be brought to those markets and those markets can be more liquid. But as of now, it's dependent on a third party. As soon as we can remove those third parties, we can actually say that we have a more Web3 focused liquid market for RWAs.
Thank you. Interesting. So Adam and Ashish, just to have like a word from you regarding like the regulation. So since like you are dealing directly with the government and the different like applications when it comes to this, I want to know like what do you think? What's your experience when it comes to regulation? What are the hurdles? What are the problems? And is it like easier, especially here in the UAE, to maybe like the exchanges they are getting like vast, super easy? What do you think about the RWA projects?
The point which regulators usually focus on is minimal dispute management. End of the day, you can easily sell an asset, you can fractionalize it, you can sell it. But if you look at the statistics, 60 to 70% disputes happens in real estate. For example, if that is the case, how would you build a trust of really buying a property at a fractional scale? How do you manage a title deed at a primary level? So there comes suddenly while there is a good tech, eventually at the back end it becomes a typical real estate facility management company, and this is where still somehow the trust is not coming to the end user. Somebody who is going to really invest big time in RWA first needs to get that trust. That trust will only come when there's a democracy on the entire process, which means I have full authority to buy a property in Dubai and then fractionalize it myself. I don't need the likes of a middleman or a company who is going to manage on my behalf. And this is what I think the regulators are trying to hint, even the middlemen companies, that guys make money on maybe doing a good marriage between the consumers and the property landscape, but don't intervene. The more you intervene, the more chances of disputes. The more chances of disputes, the more trust will break. The more trust will break, the market will go down. So this is where I think eventually somebody who's really thinking mainstream about this, take example of in India, Zerodha, for example. They have not tokenized, use any blockchain technology, but they have made investments of 1 dirham or $1 possible. So tech is the last thing to abstract. I think if we are still pushing tech on this new application or new instrument, I think something is not right. Thank you.
Thank you. Adam?
Yeah, so when it comes to regulation and compliance, I think it should be straightforward. So the way the ERC 3643, for example, the T-Rex standard works, is that the compliance and the regulation is already on chain. So you have just to plug the compliance, which is representing your type of asset and the country, and then automatically it will be checking like if you are compliant or not. So I think it should be as simple as that. Like there should not be very complex stuff. And also the blockchain is here to simplify the process. If we make it complex, if we make it the same way that it was like before, why adding blockchain on top of that? Even if it's tokenization, I mean, like at the end, if it's just to redo the same thing, there is no sense, right?
Definitely. So we're running out of time, but I'd love to have a last question because it's so important to know, okay, this market is growing, everything is growing, but we want to know if we have if the RWAs have a place in this global market, but also what is the future of the RWAs, for example, in 3 to 4 to 5 years. So I would love to hear what's your experience and what's your thoughts. Assad, maybe.
In my opinion, definitely more regulation is on the way. More improvements on the oracles and the technical side of blockchains to be more user-friendly, as we mentioned earlier, for these type of use cases is on the way. So I think definitely in 3 to 5 years, I feel like fractional ownership and also, apart from that, using DeFi tools in the real-world industries will be a really big part of those industries.
As for me, I think the kind of crowdfunding idea of getting many players to invest in one asset by fractionalizing it definitely is going to solve some problems. For instance, we're looking at trade finance. We have a trade gap that is estimated between 2.5 trillion to 5 trillion depending on the bank. And so if we can capture some of that and provide more access to MSMEs, but also to, like what we were saying earlier, retail that would usually not, get easily into this market. We will actually democratize ownership of real-world assets. But for me, we need frictionless applications. We need transparency, and we need a regulated environment, which is not too regulated to the extent of making things difficult, but regulated just enough to give the ease and confidence to the different players that they can do it.
From my perspective, I would say that, already said and repeated many a times from all of us that we need to simplify the adoption, and that will only happen when we bring right education to the end users. And the education should not be about blockchain. It should about a new booming financial instrument, which is very user-friendly, very easy to invest, and it's trustworthy. End of the day, government is there to support you. Law is there to support you. It is cross-border. It is something you can do sitting in at your home. So accessibility, trust, and transparency is what I think make this initiative much more successful.
Thank you. Adam?
Yeah, so I agree with what Asal and Salwad said, that there is the need of someone who pave the way and show how to do it, and then the adoption will come automatically. It's exactly, so I see ourselves like the same way that when internet began back in 2000, it was unclear the direction that internet was going, but nobody was expecting that we will be able to watch movies, play online, share video, photos, and all this stuff. So I think right now, we are at the very beginning of what is possible with the blockchain and RWA, and someone needs to show us. I hope it's me, but someone needs to show us how to do it and where to go, and then hopefully the standardization will come and more projects will follow this path.
Thank you so much. So maybe a question from the audience? You can even ask for financial advice. No? So thank you so much for assisting to the panel, and we'll see you soon.
Thank you, guys. And now we have an exciting presentation on trading revolution. WTT, game-changing vision for the market. Ladies and gentlemen, let's welcome Mr. Arthur House in Veld. The CEO and president of the World Training Tournament. Everybody, let's give him a big round of applause. Thank you.
1, 2, 1, 2. So I've got my speaker's notes here, and wonderful afternoon to you all, but I'll just put them down here. Okay. So this is forward, and that's back. Okay. These are my instructions. Who says time is money? All right. First of all, I would like to thank you for attending the finance or the expo, the Wiki Finance Expo here today. Incidentally, I want to thank WikiFX as well as being a partner of the World Trading Tournament. So today, we've got the opportunity to share the World Trading Tournament, why we're here, what we're going to be delivering, and how you could potentially join us along our journey. The trading, maybe your hands. Who's a trader here? Who trades the markets? If I may ask your hands, who trades the markets here today? Right, there's one gentleman trader over there, there's another gentleman over there. Who would like to trade the markets? Who would like to know when the markets go up and down? I mean, if we all knew how the markets went up and down, we wouldn't be needed sitting here. All right? Okay. The current challenges of the global trading industry. The 9.5 million traders. 6% of those traders are retail traders. It's probably the majority of you. I've met many of you as well, I understand. But only 1.8% of the retail traders trade a profitable year. So what does that mean? They don't make the money they aspire. And that may be for different and various reasons, but it's often the wrong reasons. So we believe there's change needed in the industry. Traders today still love to come together and be part of a community. I mean, you are here today, or being part of the Wiki Finance Expo, or being fellowshipping or connecting with like-minded, where you're looking for a business proposition or relationships. We love building communities. One of the essence that we believe in the foundational successes of the next generation of traders is building a community that gather and play together in the FIFA-style game. So what's the solution? We are designing a platform that is gamified. The trading platform is gamified. That's competitive and enhance your trading experiences. Ultimately, it's our mission for people to treat this like a sport. The sport starts with the right mindset. But the right mindset, you need to create the right environment. The right environment, we need to have the right partnerships in the industry. Our partnerships, again, like I mentioned, are with Wiki Finance or WikiFX and a handful of other partners throughout Southeast Asia. So what are some of the key features that we're establishing? So because we had a lot of people inquire to us and ask us, what is the World Trading Tournament all about? I mean, who's familiar here with FIFA football? Or international cricket? And the lady here, now she's loving it. Oh, yes. So what we actually here establishing here is the FIFA of trading. Competitions. Our soft launch competitions that will start in March and will end in September, which will unpack a little bit more in the coming slides. We'll have live leaderboards. Live leaderboards where you can see your fellow traders compete. In the future, we may have fellow brokers. You might be a broker or introducing broker. We've got a big vision and a big ambition to enrich the experience and to gamify the experience at the same time. So this is a little bit our roadmap. What intrigued a lot of people is our rewards pool. We saw a lot of people taking photos, some shots, okay? And we're going to be sharing $2.75 million with our trading community. So how are we going to do that? We said we're going to gamify experience. Again, WikiTrade, some people may know WikiTrade. WikiTrade here as well is our technology partner. And we're developing gamified solutions on that platform to give you an entry point to be gamified and trade with us and enjoy the experience. Part of our humanization or socializing the experience is taking people on a journey of live events. Last month we were in Singapore. We had a private yacht in Singapore. We invited our business partners and some selected traders. Secondly, we're here today. We've got another big event coming up in Thailand where we host 600 VIPs, including our business partners. Because again, we love socializing, engaging valuable relationships to make this journey, the business of trading, the lifestyle of trading, through gamified experiences. That's the end of February. On the 1st of March, what we're launching is a play-to-learn competition. It's not on the slide here, but a play-to-learn competition that allows you as a trader and a new generation of trader to experience firsthand the psychology of trading through gamified, time-driven experiences. That will last for 3 months, and then 3 months thereafter, in June, we start a first official trading competition, a preliminary round, where we'll have thousands of people trade against one another on a live board. Now, live leadership boards, they'll be streamed live as well through our social media channels, and they all compete together to trade and become top of 100 traders. What we'll do with our top 100 traders, they get the opportunity to trade in Dubai on a private yacht. My apologies. You can see it here, pictured at the finale, in September 17th. There'll be the trading matrix. There'll be a private room of 100 traders, live with 400 VIP guests here in Dubai, on the yacht we viewed yesterday, who can win part of the $2.7 million of trade rewards. The winner takes $1 million home, and the one who've learned a lot during the game may take $5,000 home. So it's an opportunity for many traders to participate with us. So in essence, what we're offering here, and remember, I said time is money. So I'm restricting myself to the 10 minutes, 600 seconds of talk time. But we all have a choice. To change in the industry, you've got to be willing to make the change, or take the chance to change. You either take the blue pill or the red pill. So for the people who are willing to play with us, take the red pill and enjoy the experience and enjoy the movement with us. It's an online movement, it's an offline experience, it's an international experience, and we're working together with major partner brands as the weeks and months come by. So today, I've got 3 minutes left. Thank you very much. Watch my time. Today, I invite brokers, business owners, innovators who wish to expose more market presence through our trading community, through our business community, to come on a journey with us. But I also invite people, male or female, who aspire to experience trading in a new environment, a new structured environment where you can participate in a competition and get to know your fellow traders. So again, I want to thank you for spending 600 seconds with me today, and I invite you all to come and meet us at the World Trading Tournament and explore potential trading and partnership opportunities. Ladies and gentlemen, thank you very much. That was my 10 minutes. Blessings. Thank you. Well, it looks like it's a bit slow. I can take another 5 minutes if you like.
Good timing, right? Like exactly 10 minutes. Thank you so much for this.
A good time. You got to know how to enter a business and exit the business.
Exactly. Thank you. Appreciate it. This one, I'll take it also. Thank you very much. Everybody, let's give him a warm applause. Thank you so much. Next, we have an exciting chat. And this one with the title of The Future of the Dollar. Can stablecoins strengthen U.S. monetary power? My friends, let's welcome Ms. Mary Pedler, founder of Input Communication, and also Mr. Reeve Collins, co-founder of board member of Wi-Fi and co-founder of Texter. Everybody, let's give them a warm welcome.
Hey everyone. Oh, nice. Okay. Hey everyone, my name is Mary Pedler. I'm the founder of Input. We're Metrics First Communication agency based in Dubai, providing services for emerging tech companies. And here with me, Riff Collins, I think crypto OG and co-founder of Tether, and now he's the co-founder of Wi-Fi and board member. And today we're going to discuss a very insightful topic about how can stable coins strengthen the monetary power of the United States. So first of all, Riff, could you please give a short introduction about yourself? What is your background? What are your recent achievements? And what have you been doing so far?
Sure. First of all, it's great to be here. Hello, hello. It's great to be here, and I appreciate everyone coming out. It's been an interesting show. It's great to see all the booths and kind of the excitement. Everyone's trading right now, so I think there's a lot of frothiness in the market, so can't be more exciting than that. And I'm happy to be here and chat a little bit about stablecoins and their impact both over the last 10 years and their impact on the future. My background, as we've shared, was really the first person out there to really start thinking about stablecoins, and this was long, long before there was a term stablecoins. But the concept was straightforward at the time. You got to rewind back to 2013 when Bitcoin just came out. And so there's a handful of tokens, maybe 4 or 5, Bitcoin, Litecoin, Dogecoin. But no one really understood it nor appreciated it back then. And no one really wanted to move around Bitcoin. But the two things that happened was there was Bitcoin, the Bitcoin blockchain, a new way to move money. And so that was the concept. Format the dollar, euros, yen, put them on a blockchain, make them move globally, instantly and for free. It's taken a decade for the entire market to evolve and to mature and to become as massive as it is. And, you know, thinking back 10 years ago, ever envisioning that it would be this large, on one hand, we did, because when you start a company, the most important thing to have is passion and belief and optimism that what you're doing is going to have a massive impact. And so there was always that thought, oh, this truly could change the world. But, you know, it's amazing to see it come true and to see how big of an impact both Tether and stablecoins, but more importantly, cryptocurrency and blockchain technology have had on the world.
So that's really amazing that like 10 years ago you have created the most popular crypto technology nowadays. But what were your expectations back in the days? Do you remember this feeling? Like, could you even imagine that after 10 years you will be sitting here in Dubai, okay, maybe not in Dubai, but discussing how your technology that you created will influence the monetary policy of the United States? Like, what were your expectations?
Well, kind of, you know, as I shared it a bit, yeah, we had that optimism that it really could have a massive impact, but no one can foretell the future. I'm just very proud to see how big of an impact it's had. The team at Tether has done just an absolutely extraordinary job over these years, and to see where it's at today is mind-blowing. But one of the most interesting things, I just saw a news article the other day that says Tether is in talks with Donald Trump, you know, and so to have to have the president of the United States like lean into a company that you built is really impressive. And I know that him embracing the crypto, kind of the leadership in the crypto ecosystem to help put input and form and shape policy moving forward, this is the catalyst that we've been waiting for in the cryptocurrency space. Because the uncertainty of regulation over time, what that really does is it obviously slows innovation, it slows adoption. Because companies, there's a lot of companies that operate in the gray area, and so they'll dive in, and that's what brings innovation. But the larger companies that have regulations or are going to be regulated or concerned about it, they're very hesitant. But now the fact that the regulatory landscape, the feeling is shifting to be very pro-crypto, more and more people will dive in, and those that were on the sidelines before are actually going to lean in and launch companies, because while the regulation isn't quite there yet, they know now and have a feeling that it's going to go in their favor versus being negative. And so it just really increases global adoption and more people building and more innovation.
Yeah, that's. I completely agree with what you just said, and it's really exciting that the regulators all over the world are shifting towards like a very positive, very positive agenda in terms of stable coins as well. But let's go to the basics. Let's talk more about stable coins nature. So as I said before, it is like the most popular product, crypto product that we have now on the market, and it is, I think, most widely discussed in terms of regulation. And now dollar is losing its status as the global reserve currency. And at the same time, we see that 99% of stable coins are dollar stable coins. And this is like a significant dominance. So the first question is, why is this happening? Like, why are everybody creating dollar patched stable coins right now?
Sure. It's a great question. And the answer is fairly straightforward. If you stack rank all of the currencies in the world, there's about 180 of them. The dollar has always pretty much been number one. And why is it number one? Two main things. Trust. People believe that it's going to hold its value. And then demand and acceptability and usability. People want it. They'll accept it. So those are the two real fundamental things to make a currency important and people to want it. So what happens with blockchain technology and cryptocurrencies? Blockchain comes about, and what blockchain really was, it's a new way to move money. So which money are you going to move on this new way to move money? You're going to pick the best currency in the world, which has been the dollar historically. This dollar is the global reserve currency, meaning everyone in most all countries will like to accept it. Therefore, that's why that has been the dominant backing for stablecoins in this space. So it's that, and then number two is, look at the use cases right now. The main use case is, for a lack of better word, when you bundle all the things that happen in crypto, it's gambling. Most people call it trading, but it's truly just speculation and hoping things go up and down in value. And so Tether, being very first to market, became the trading pair for every single exchange out there and for every cryptocurrency that came to market. And so if the big use case is people trading and some people moving money, but mainly over the years it was trading, they need something that's stable, obviously, and so it's the dollar, and that's why it has dominated. And then when you look at the new use cases that have driven more and more people into the blockchain ecosystem, they have also been around gambling and speculation. So the next big innovation was the ICO. And we all know that that was just the ICO mania was all gambling because people are making tons of money on nothing, just on speculating that this token was going to go up because there was a lot of enthusiasm, excitement. And then DeFi. DeFi brought a little more sophistication than just the ICOs because DeFi actually brings traditional financial services on chain. And the way they did it enabled people to make tons of money by these new innovative ways of trading coins and farming yield, etc. But people were diving in because of the speculative nature. But it's good because it attracts lots and lots of innovation in the space and people coming to the space. And then after that came NFTs. Again, NFTs was speculation. People are buying images and trading images to make more money. And stable coins are the fuel or the foundation for all this, so you can do it in something non-speculative itself. You don't need to use Bitcoin to speculate on ICOs, DeFi, and NFTs. And one thing as an aside on NFTs, I always like to say this in my talks because a lot of people feel that NFTs are dead. I also had a very big role in the rollout of NFTs. We were the first ever platform to contemplate what an NFT was and to deliver it to the world with BlockV back in 2017. But anyway, NFTs are not dead. I can't stress the importance enough of NFTs because these non-fungible tokens are very important parts of our digital lives. Web3, what Web3 really means is you have a wallet and tokens. A lot of people equate tokens to just currencies. However, tokens are also going to be NFTs, so now everyone has a wallet. They will have currencies, but all of your digital transactions that are just non-financial in nature, but all of the interactions that you do online will revolve around NFTs. So while the speculation in artwork and images and collectibles and trading, that has died out because there's no real value. That was just speculation hype. But the utility of NFTs is just coming onto the scene. That's just an important thing to convey. But back to the stablecoin and what you asked, which is why is the dollar dominance the main thing backing stablecoins? It's because as I said, it's the #1 currency out there, and it has the most acceptance. But that is evolving. It's evolving because of regulation with MiCA, and so the euro-based stablecoin, to a point where financial institutions are realizing stablecoins are a much more efficient way to transact both amongst the other financial institutions as well as in between them and their customers.
So thank you for the brief history of crypto. that was great. And so you're saying that like the biggest use case of using the stable coins in crypto is actually like speculation and trading, right?
Well, the use case for the stable coin is the fact that it enables you to do whatever type of transaction you want to do in crypto, because cryptocurrencies are not meant for transactions. It's just like your equities that you have in your stock portfolio are not meant to buy a Starbucks coffee. So a stablecoin had to be invented and delivered in order to utilize the technology for what it's for.
Yeah, that's really interesting. And what about the Tether has recently announced that it is going to launch the Dirham Page stablecoin. What do you think will be the strongest, the biggest use case here?
Well, #1, I think it's great. And what's more great about that is the fact that the UAE is leaning in and is encouraging that type of innovation and wants the biggest player in the space to deliver a dirham-backed stablecoin, which is great. Now, what are the use cases? The use cases are identical to dollar-backed stablecoins. It just depends. They need to now get widespread adoption and people within the UAE and outside its borders to utilize it. Because what this panel was initially about is does the usage of stablecoin increase monetary policy, or I'm sorry, monetary power? Is it increasing the dollar dominance? Does it give power to the US government? And would it do it the same for the UAE? In a sense, it does, but not really. And I'll tell you why, because there's dollar-backed stablecoins and then dollar-pegged stablecoins. And today, because of how the market has grown, it was all dollar-backed stablecoins because people did not have the trust. They want to know that there's a dollar in the bank for the token that's issued. And that's the same with the dirham. There'll be a dirham in the bank for the tokens that's issued. And so yes, it has made stablecoins have made the US dollar the reserve currency of crypto, and crypto is growing bigger and bigger, so it will have an impact. But when you look at the size of the US dollar, does it have a big enough impact yet? Not quite. And by the time it does have a big enough impact, where the crypto market is $10 trillion, I believe that stablecoins will be dollar pegged and not backed. And what the dollar peg means, it just simply is a unit of account. It says that these stable coins are measured in dollars. They're not backed in dollars. And if they're not backed in dollars, then that does not provide more power or acceptance of or distribution of US dollars. It just means we use that as a unit of account. And the reason why, because I also firmly believe today there's about 200 stable coins. Give us 2 more years, there'll be 1,000 stable coins. Because stable coins are going to be that easy to create. Like you push a button, you can all create your own brand of stable coin. But they won't be fiat backed. They won't be backed by the dollar. They'll be backed by other forms of value. And they'll be pegged to the dollar. So it doesn't give the dollar much more power, but it gives us as individuals and users power to trade value that's pegged to the dollar. And this is a really important thing to understand of why stable coins are going to be so important in the future. And why they'll be, like, right, there's $170 billion worth of stable coins. In 2 years, I'm betting there'll be $1 trillion worth of value. But that's not $1 trillion of fiat in a bank account. It's just value that is pegged to a stable coin that's measured in dollars. And at that point, it's easy to measure it in whatever denomination you want. Because it's about the movement of value. It's not about the movement of dollars. You need trust and you need acceptability. And that's what makes a currency great today. The gal that was up here last time was talking about how Web3 innovates things and creates new products that weren't available before. And that's the most important takeaway here, is in the future, what cryptocurrency and blockchain technology is going to create is a new type of money. And what I mean about that is we're going to add another characteristic other than just trust and accessibility and acceptability. The new characteristic is yield. So the users are going to get yield for creating money. And what I mean by that is today, let's say you have money. Yes, you can get yield on it, but what do you sacrifice to get yield on your money? You sacrifice utility. To get yield on your money, you have to lend it to someone, meaning you no longer can utilize it. With blockchain technology, you are now going to be able to get the yield and spend the money, because you are going to be paid. You are going to earn money for the creation of the currency. You will be able to create a stable coin. You will get the yield for it, and then you'll be able to spend that stable coin by collecting the yield. Here's a high-level example. Think about what Tether does. They get $1 from you. They buy a treasury. They keep the yield in their pocket. They give you $1 that you spend. They give you a currency that you spend. They keep the yield. The whole promise of technology is to decentralize this, is to disintermediate these centralized organizations. So we have the technology now that will do the exact same thing that Tether does, meaning instead of giving a centralized company $1, you can buy that same treasury, you can keep the yield and use that treasury to back the stablecoin. And treasury is just one example. We're also talking about RWAs in the last panel. Once the RWAs are tokenized and come on-chain, people will be able to utilize all forms of RWAs to back stablecoins. The people, the companies, we will get the yield. And then you will push out the stablecoin. So now you ask, what's the best flavor of stablecoin? Because there'll be thousands of them. Well, the one you mint is the best because you get the yield for minting it, and then you can distribute the stablecoin. And then you add in AI. So how does AI come into play with all of this? AI is going to hit us faster than any of us can imagine, and its use cases and implications are very difficult for us to understand. But my guess and my bet is that the way AI is going to impact the stablecoin ecosystem is that now that users are the ones that can mint stablecoins, and we trust the technology to ensure the backing is there, and the users are getting the yield. So now they have a new form of money. So this is how they're going to transmit value, not government-backed fiat currencies. They're going to do it through this. But there'll be thousands of stable coins, but you're just going to tell your AI, hey, I have this coin and I want that coin, or I want that service. And it is going to do all of the exchanges, all of the transactions, and it's not going to matter what chain it's on, what kind of token it is. It's going to do it all for you, and you're just going to get the end result that you want. And it will find the best path to make sure you profit the most, and there's nothing lost in those exchanges.
When do you think they're going to happen?
Look, that'll happen within 24 months, in my opinion. I think it's happening really. The speed that AI agents are coming onto scene and being built is crazy, and the thing it's going to do is going to blow all of our minds away.
Okay, guys, I think you need to remember all of this that were said, because Riff is a great, let's say, forecaster, and I think you feel the future of technology. And that's really great. I think we have just a few minutes left. I would like to ask the question about CBDC. I think this is very popular and hot topic on the market. So my main question here is, why do you think the end user will choose CBDC over stable coins, and what is the necessity of the government to create its own stable coin than just to use, for example, the regulated stable coin circle?
Yeah, no, it's a great question, and CBDCs is a hot topic, but they're very distinctly different. Think about the public sector and the private sector. They're distinctly different for a lot of reasons. So stable coins is the private sector. The public sector will be CBDCs. So yes, every government in the world will roll out a stable coin. Is it a good thing or a bad thing? It's great for the government, not so great for the people, because it gives ultimate control and a level of control never seen before. It gives that to the government. Now, when you ask, do people choose a stable coin or the CBDC? It depends on how they're regulated. Governments, when they roll out the CBDC, will do their best to ensure people use the CBDC. So you're going to be forced to use it for a lot of things. But by that time, there'll be thousands of stable coins, and they'll be so niche that the things that you can do that are not required to do with the CBDC, you'll do them with other stable coins, and you'll get more value, more independence, more privacy, and more control. And so CBDCs will never eliminate stable coins. It'll just increase the need and demand for them, because a lot of times you don't want 100% of the things go through in a government that has ultimate visibility and control and can freeze your money. So yes, it's happening, but it will not eliminate the demand for stablecoins.
Okay, nice. And the last question is about the last project that you're working on right now, the Wi-Fi. It's, as far as I know, it's first non-custodial neobank that is banking unbanked people. And how are you planning to leverage the power stablecoin within this project?
Absolutely. So one thing I've been passionate about, right? We rolled out a new currency, Tether, and so that really laid the foundation for what cryptocurrencies can do. However, we have still yet to realize the promise of what blockchain can do for financial inclusion around the world. Like, how do we service the underbanked and the unbanked? Because we know all of us in developed nations have pretty decent financial services, but the underbanked don't, and this is where the cryptocurrencies, but these neobanks, a bank on your phone that has blockchain technology, so it can service you at very, very, very low costs, because that's why the underbanked aren't serviced. It's too expensive. And so providing this type of infrastructure, developing a really user-friendly brand and pushing it out there, it's finally time. The regulation's there, the education's there, the adoption is there. And so now you'll see these services come on where now millions of people now can have financial inclusion and banks in their pocket. And so I'm really excited to see the promise of blockchain technology being delivered in this way.
Nice. Sounds amazing. Do we have any questions from the audience? Yep.
Well, this is the most interesting discussion of the day. Really, thank you very much. You've given us a fantastic picture of what's going on. I just wanted to go back to one specific thing on CBDCs. Correct me if I'm wrong in what I'm saying, but I'm understanding from Donald Trump that he has said that there will never be a CBDC for as long as he is in government. That's my understanding of what he's saying. If the US, which, as you correctly said, has the most powerful currency in the world, the US dollar, and it will continue to be for many years, I think so, does not rule out, come up with a CBDC, what do you think that will do to other countries trying to put a CBDC out?
Yeah, it's a great question, but as there's a lot of countries in this world, and the US would be the last country I would assume to roll out a CBDC because the people won't stand for it, and plus it's a collection of all the states, and the states' governments have already passed, some of them, that they'll never do it, and it's good to hear Donald Trump state that he won't, because the US government isn't set up to have that level of control, whereas some other countries, it's a little more accepted and understood and taken for granted that the governments have that control over the people. So I do feel that every government that can will roll one out, and it's great that Donald Trump isn't leaning into it. And the reason being, mainly in my opinion, is because he is talking to a lot of people in the crypto space, and they're all dead set against it because of how much of the rights it takes away. However, the US government also has a lot of control and insight just into the movement of its own currency, so it'll be just fine. Yeah.
Hi.
All right.
Hi, hello.
Hi.
Arif?
Hello.
You invented the first trading platform for stablecoins and for NFT. Now the main invention is AI. Do you think about inventing some trading platform for AI assets?
It would be a great space to be involved in, and I'm more involved from the investment side, but no, I'm not really actively building anything in the AI space. I'm doing my best to utilize it in the best as much as possible. But no, that one is over my head. Yeah.
Okay. Okay. It's endless. It's never gonna end. Yes, guys, please.
Sorry, very good. And I have a question, because in Europe there's the stablecoin USDC is regulated. How are you dealing with the regulations there in Europe?
So is that a question for Tether? Is it Tether dealing with the...
Yes.
Right now they've taken the stance that they're not going to roll out. That obviously may change, but they opted I read when the regulations first came out, Tether opted not to participate, and so they pulled out of Europe. So we'll see if that changes. But my guess is they would probably at some point enter back into Europe, but we'll see what happens.
Okay, thank you.
Yeah. All right, I think our time is up. I really appreciate it. Thank you, guys.
Thank you.
Thank you, guys. Welcome to our panel discussion towards 2050, integrating sustainable finance with the global climate goals in the UAE. This session will explore how the UAE is the aligning sustainable finance with the climate objective for 2050. We are pleased to have the following co-founder of Engine Start, John Riggs, partner at BTC Inc., Julia Conley, founder and CEO of Volans, partner at Nebulae, and digital transformation and sustainable lead at EP Phantom. Everybody, let's give them a big round of applause.
Hello. Hi, good afternoon, everyone. My name is Prakash, CEO and co-founder of Engine Starter. We also recently launched a launchpad here in the UAE. It's called Aya, which is primarily focused on climate finance. So I just got to find out that I was going to moderate this panel about 10 minutes back. So bear with me. Let me start with a quick round of introductions, and then we'll fire away with some questions, and I will make this panel as exciting as we can.
I'm sure you're going to do well. My name is Dr. Mazak Rafati. I'm a specialist on sustainable foreign direct investment, but also active in the tech area. I co-founded Wismas.io, an AI-based auto trader for digital assets in 2021, and now basically acting as a mentor and basically angel investor in different tech companies.
Thank you very much.
Good afternoon, everyone. My name is Julia Conley. I'm a founder and CEO of Valuance, a platform that helps amplify human potential so we can actually tackle all the challenges that we're speaking about at this conference today. I also lead sustainability efforts at EY Parthenon here in Dubai and come from Environmental Change Institute at Oxford back in the day.
Yeah, John Riggins. I'm a partner at BTC Inc., where we kind of educate the world about Bitcoin via Bitcoin Magazine and the Bitcoin Conference, and invest in the Bitcoin ecosystem at UTXO Management.
So I'll start the first question with Dr. Mazdak. I think, the main topic today is kind of looking into the future to see what we expect to see in 25 years to come. We're sitting here in Dubai where the regulatory framework is very, very positive. That's primarily the reason why we chose to headquarter Aya here and get a license with VARA. So what kind of innovations do you see happening in this climate space in the next 25 years? And what do you think will be required to actually help us achieve these net zero targets?
I think foreseeing 25 years when somebody like the speaker before us who co-founded Tether says that AI is above his head I think is a very, very long way. I wouldn't dare to actually foresee the next 5 years if we see what happened in the past 5 years in our lives, right? But I think what UAE is doing is trying to spearhead any technology development that is necessary to stay at the edge of the development that there is globally. And if anything taught us in the last 25 years is that they've actually succeeded very well. 25 years ago, Sheikh Mohammed actually initiated Dubai Internet City, and today it is one of the core areas and most successful free zones when it comes to e-commerce, as he predicted. So we are blessed with basically a government
that is doing all it can to stay at the edge and enable ecosystems, talents from all around the world, and invites them to participate in that development in order to develop the socioeconomic situation of the country itself.
Yulia, would you like to add on?
Yeah, absolutely. I would love to add to that. Obviously, achieving net zero targets by 2050 is quite an undertaking. I think ever since I left ECI at Oxford, it's been 8 years, and things are only exacerbating, which is not promising. But I do think that this region can be a cornerstone for growth and really opportunity to scale. I think DeFi specifically has a role to play, hence this conference with tokenized carbon credits, for example. I think it can be an excellent way of introducing the public to this space, to the carbon credit understanding even, because companies are doing it to fulfill a certain regulation at the moment. We want people to be incentivized to do it. We want it to become, a common sense to invest in carbon positive assets. But what I wanted to highlight as well is that this government is very conducive to aligning people and matching them with the right technology. So I really see great potential for us to converge here and create positive change.
So I guess to summarize what the both of you guys shared, I think regulatory frameworks here are very, very positive. The ability for the government to see into the future and to encourage innovation is clearly here. I think what we're really excited to also see is the potential of Sharia compliant to actually come in to solve some of these gaps that we actually see in the climate space. And more importantly, kind of being able to tokenize carbon, introduce carbon as a new asset class that's going to be part of this energy transformation that we're in. And fractionalization will kind of bring in a lot more participation with retail, and everyone now kind of plays a part with achieving some of these net zero targets, right? John, I'll spare you that question. And the biggest topic at this point in time in any social conversation is Bitcoin and what is going to be the price of Bitcoin, by Christmas. But staying in topic with what we're talking about with impact and sustainability, Bitcoin has always had a very challenge. When people think that it's harmful for the environment. What are some of your thoughts in that, and where do you see Bitcoin playing a key role when supporting governments with their race towards net zero? I think with Trump being inaugurated, we're going to start seeing the Bitcoin reserve being implemented, and we're definitely going to start seeing a lot of that in other countries. How do you kind of see that being part of the topic today around climate and climate change?
Certainly. Well, you really framed the question well with a lot of context for where we are now. And Trump's election really was kind of a sea change in how governments around the world will be looking at Bitcoin moving forward. And I know that climate is still on the radar of the incoming administration. And how I look at climate is through that Bitcoin lens myself and as a company, BTC Inc. So one thing that we've seen in the U.S. For combating that narrative that Bitcoin is bad for the environment is the development of real business models around one thing in particular that I think is great for the future of Bitcoin helping climate goals. And that's the ability to place Bitcoin mining infrastructure at these stranded natural gas sites, these methane, these sites that emit methane, and to use that to mine Bitcoin anywhere in the world. So I know that at COP28, UAE made a large commitment about methane emissions around the world, developing nations, and here also. And I think this is the one thing that Bitcoin can really target specifically right away and in a very, very productive way to help with those climate goals long term. We can set up Bitcoin mining infrastructure at all these sites, generate revenue, public-private partnerships, aligning different parts of the infrastructure here, as you mentioned. So I think that's the one thing I'm excited about moving forward with Bitcoin and climate.
So this can be used as carbon capture.
Essentially, yes. The gas is used to power Bitcoin mining equipment. generate revenue for the people who set up that infrastructure.
I think it'll be an interesting way also for emerging markets to now enter into the Bitcoin ecosystem, right, and use the value of Bitcoin to actually help their GDP. I think we've seen that in Mongolia, we've seen that with El Salvador. And do you think that this is going to be something that more emerging markets will see? Because when it comes to climate, we always look to the global south. We're always looking at innovation that can support the global south, right? Where this is where a lot of impact is going to be. So do you see a lot of emerging markets now coming in to participate? Some of them may have excess energy that they can convert into Bitcoin mining. I think we've seen that in Kenya, right, with Marathon Digital.
Yeah, hey, more great context here, setting me up well. So it was a big deal when El Salvador announced they would be embracing Bitcoin as legal tender. They did that at our conference in Miami a few years ago, and have since set up mining infrastructure around even their volcano, some of their large volcano natural resources there. Kenya is a place where publicly traded companies in the U.S. have invested. And then really one of the bigger stories this year that is a little bit underreported is the country of Bhutan, which has set up mining infrastructure around its natural energy resources and now holds a Bitcoin balance of over $1 billion. Actually, Bhutan is now the biggest holder of Bitcoin per capita in the world at a nation state level. So I think that's something that we're going to see increased competition around. And these, this global south that has its own energy infrastructure ready to go is set to benefit.
Go ahead, Dr. Mazat.
Yeah, ESG is not only environment, it is also social and governance. Now, the social part plays a very, very big role when it comes to using of digital currencies in a global south. Now, while, as you can see, most of the people in a global north are using Bitcoin and cryptocurrencies as an investment in a very volatile and risky asset, in a global south, it is actually a mean to transact and do cross-border transactions, and that's already maybe since a decade already. So enabling predominantly SMEs to transact with relatively the unbankable to do transactions in global south is an achievement that you can't even actually put, and nobody's really researching on that, right? But that is the S in ESG that basically evaluates anything that Bitcoin can use in energy in any time. That social component, and then I think we're going to talk about governance in the next questions, is for me already a game changer altogether.
Awesome. So, we talk a lot about climate. We talk a lot about how Bitcoin, provides provenance, a lot more transparency. Yet we're still struggling to actually get, climate projects onto the chain. Open question, what do you guys feel needs to be done so that we start seeing greater adoption in using Bitcoin to solve some of these climate solutions that we're looking for?
Well, these are all. I love the direction of this panel. So, well, I guess I'd point to back to that kind of sea change that we saw with Trump's election. So, at our conference in Nashville this past summer, Trump came out in support of a global Bitcoin strategic reserve, a U.S. strategic reserve for Bitcoin, and kind of underreported also were another kind of set of policy proposals around things that he can do by executive order in his first 100 days in office. And I think one thing that's exciting on that front is a focus on public-private partnerships to set up Bitcoin mining operations around the U.S.'s energy infrastructure. And I think once that happens, once the U.S. Provably starts to acquire Bitcoin for strategic reserve once Trump takes office, that, to your point, Bitcoin is totally de-risked for the rest of the world. For the global south, for other countries that want to be able to utilize their natural resources in the same way. And as a part of our Abu Dhabi conference coming up here in a couple weeks. We have Trump's incoming trade minister for the Middle East joining us specifically to talk to other countries in the region about Bitcoin and their plans for Bitcoin moving forward. So cannot really say enough about how Trump's election is a total game changer for Bitcoin as not just an asset, but as an asset to promote energy independence using countries' energy resources in a productive way, now that Bitcoin is going to be seen as a productive and lasting asset.
Thank you, John. Go ahead, Dr. Mazaj. You sure? Yeah, so I guess next is, in this race that we're entering into with this new cycle, AI is going to be a key role, right? We saw how the co-founder of Tether talking about AI. We're really excited about what's happening in the AI agent space. We've seen some AI agents being able to be trading companions, to be able to execute on-chain transactions. How do you guys see AI playing a key role in this energy transformation cycle that we're in as countries head towards being net zero? Where do you see AI playing a key role in helping countries to actually achieve their net zero targets?
Well, I can take this question. I can start. I think what we're facing right now as a global commons in general is that we're monitoring lots of data. Obviously, AI can be a great asset in that, but we do not know we're siloed. Lots of nations are siloed. Even regionally here, we're siloed. So it's very important, I think, in my opinion, to start using AI, leveraging AI to actually map out the system, to have a systems outlook on what's going on in this industry, whether it's financial services or whether it's environmental impact investing. It's very important to actually see the actors, and some of the initiatives are actually being built right now here in the region as we speak. There is an initiative called Impact Olympics that ought to take place at ADMAC next year. That is requiring all the stakeholders to be put on a map, essentially. And obviously, we do need lots of monitoring of big data to do so. So I see that as a very underutilized resource right now.
So that's going to create this healthy competition between corporates. They're going to race themselves towards being net zero, right?
Absolutely, not just competition. It's going to allow people to collaborate as well. It's not the imperfect competition that everybody's stifling each other's growth. It's also about seeing how we can come together in solving these challenges.
And that's really the beauty of the Web3 community here. We all love collaboration. We love kind of working together. Dr. Mazak, I'd love to hear your opinions on this.
Well, I hear like AI is going to change everything. Well, I, for one, think AI is a tool at the end of the day. It will start making decisions on its own, and then we're all going to die. That's the negative part of it. But until then, it's a tool. So in control are still somehow we as humans. And if we want to use that really extreme, powerful engine to achieve net zero, ESGs, something that's good for all of us and good for the planet, I think we need to change the idea of what actually let's say, the sustainable activity is about. It's about impact instead of profit. I think if you put that as a narrative into an AI, right, we might get one or two steps. Let's say we might change direction into what actually matters. But I don't see that, unfortunately, happening yet, right? All the AI tools is about how you can minimize costs and maximize money. So where is the impact? Where is that what in every COP is supposed to happen? The impact dominance of investment. And that's what I don't see. That needs to be changed. Then tools, and we have enough of them, can be effective.
John, do you want to add on to it?
I think I'll leave it there. That was good.
Awesome. So I guess let's kind of move forward a bit. I think one of the key things is, the impact that, climate and climate change solutions are going to have on the economy here in the UAE. And I think what's very remarkable is the UAE is now a leading place for digital assets with very favorable regulations. They've also moved very, very quickly in the private wealth space, in philanthropic. Abu Dhabi is now one of the top places in the world where family offices are being set up. And this is where now they're also leading from an AI perspective. With all these forces coming together with smart money, smart technology, as well as very, very proactive regulations, where do you see this impacting the economy? Do you see new form of companies being formed? Do you see new forms of capital being formed here in the UAE?
Okay, if I may again. Yeah, I mean, living here since 20 years and being active in a foreign investment field, that's obviously exactly what I'm doing. And the answer is obviously. What I didn't hear many people talk about here is that the key advantage of Dubai and UAE is that we are run like a lab. Since I live here, we are a lab. Anything that somehow is at the really top-notch technology edge is being implemented here immediately. Immediately, a zone, an authority, money, investment is there for you to start. Some succeed, some don't. The same, like when biotech was a big thing, biotech started here, you don't see it anymore, right? So some things don't really work, but on the AI level, on digital technologies and blockchain, this country has always been the first to react, the first to set the infrastructure, the first to attract talent and put the needful money. What Abu Dhabi has put into the digital world in the last 2 to 3 years is remarkable, right? And that, yes, they have the means and they're running it. And why are they running it? Is simply because UAE is going a path that all oil-dependent countries have to go at some point. Just that we are spearheading it. And that, I think, is the right way, and it's eventually going to be successful.
Yulia and John, maybe is this something that you guys have seen in other markets that perhaps the UAE could also explore to accelerate some of this innovation? I know, Yulia, you're involved with a lot of digital transformation. Dr. Mazdak just said, the UAE is like a startup, right? Always innovating, moving very quickly. Where do you see things can actually accelerate a lot quicker and faster?
I wanted to kind of make a point of how we need to, because I'm also local in UAE as of recent, and I also want to see this country move forward without repeating certain mistakes of different other regions in the world. And in kind of our typology of the world, there are certain nations that are more innovative, and there are certain nations that are much more conservative when it comes to innovation because they're overly regulated. I'm not going to point fingers, but I think we all know that. What UAE has a chance to do is to merge the two and to marry the two and to be ultimately successful. Because in order to enable this, we do need governance. It's not just going to be laissez-faire, DAO, completely decentralized world. We do need governance. What I like to say, we don't know what we don't know. So we need to vocalize this to the people, to the government. We do need public-private partnerships to enable this change. But we also do not want to stifle innovation with over-regulation. So UAE does have good foundation to become that nation that marries the two to become ultimately successful in this endeavor. It is not framed yet, so it's not here yet. I'm yet to see green finance initiatives and regulatory bodies popping up. But I do think if we merge them and we place them ultimately maybe even in the same space, so they're not removed. Again, what I'm trying to emphasize here is that also as a young person, as a mother, just so frustrated by the fact that we are moving forward so tenaciously, so zealously in achieving net zero, and we're not getting there. And it seems like every year we're just getting more and more behind. What I think is happening is a lot of wonderful people doing incredible things, but they're not talking to each other. So what this nation needs to do, because of the scale, I think Dubai is small enough, Abu Dhabi is small enough to do so, to have people converge at conferences like this. We just need to bridge that gap between effective governance, between knowledge sharing, and between innovation. So obviously investing in green tech startups and green finance initiatives can be achieved and scaled.
And I think it's everyone's responsibility, right? Us as consumers, us as corporates, and everyone has a part to play in that. John, over to you.
I would say, as an outsider and someone who hasn't really done business in this part of the world in the past, that the perception of the government here is that it is one of the most efficient in the world. And we've been invited and welcomed to bring our conference series here, which has been great. It's really fun to learn more about the market. I'll also add that I came here from Hong Kong, where I met with a number of kind of the biggest family offices in southern China and in Hong Kong. And of the 6 or 7 that I met with, about half of the CEOs running these family offices had been to Abu Dhabi, had been to Dubai this year, and were setting up second residencies there because they saw such an opportunity to invest with partners here and to really just kind of see where the ball is going from kind of a second home base in the UAE. And so I think that's bullish. I think it's bullish for collaboration with Asia, and we're trying to contribute our small bit to collaboration with the US and the Bitcoin community with that event. So I felt very welcomed, but it's good to hear kind of the longer term perspective from y'all too.
Awesome. So I'd like to bring this conversation to an end. I'd like to first give each one of you maybe a couple of minutes to say a few words. Maybe there's something that you guys wanted to speak about that we didn't get a chance to speak. And if you could end with some form of a rallying cry, like how is it that we all can support some of the things that you're working on? I think this panel will become very, very productive. So Dr. Mazdak, I'd like to start with you, and maybe you could cover some points maybe we didn't cover during the panel, and maybe have a cry out to get support from the audience.
That's a complicated one. Well, we're talking about ESGs, and I think we skipped a question about the SMEs and what can actually needs to be done for them, which have a lot of struggle, as we all know, to be participating a little bit more effectively into the digital path that the world is taking. Now, SMEs need a lot of education and inclusion when it comes to digitalization. The further south you go, the more that's the case. And as everybody knows, they are the pillars to every economy. One of the biggest troubles I have is that through AI and through this fast development, the SMEs might be left out. And I don't see enough startups focusing on the troubles that SMEs daily have in order to pick them up or utilize all these tools that are still so complicated to understand. This is what I hear in every conference, that setting up a wallet is complicated, understanding blockchain transaction is blockchain as technology, blockchain as the development of all these tokens, tokenization as a tool. All of this is so far away in the minds of SMEs, which makes it a huge threat, but also a huge opportunity. So if anyone is here who is in the field of startup or is an entrepreneur and thinking about engaging in something new, please focus on that. Digitalization of SMEs is the next best thing you can do, from the social, but also from profitable component.
That's great, Alpha. I think that's $1 billion idea there, sitting, waiting for anyone to pick it up. Yulia, over to you.
Yes, well, I just wanted to, obviously it's a very specialized conference and we have a very unique talk within the realm of this conference. I just wanted to sprinkle a little bit of ethos of what we're talking about for the future. So the objective and the mission of my company is to amplify the unlimited potential of humans. Because we are the enablers of change. We are the ones who, you know, in the age of the Anthropocene has brought our planet to where it is right now, and we are solving tenaciously all these issues as well. So it's the human that I'm taking care of, and the reason why I'm doing so is because, as I've already mentioned, it's been years since I've been an advocate for climate. I've been an advocate for, you know, ethical tech, ethics in AI. You know, I've been collaborating with the Future of Life Institute about AI governance, and things are not, we do not live in an ideal world. And so what I'm trying to emphasize is that we really do need to think of our own ethics as well. This is what Valuance is doing. It's essentially leveraging 40 years of empirical research on social science to help people align their values. So when that happens, a few things emerge. One, for companies, it's unrestricted productivity of human capital within companies, and people as well. People become much more alert to the problems around them. It's something, when you do have this ethical standard, when you do have this alignment, you are much more attuned not just to the planet, but to the other. I mean, we have lots of, not just environmental, but socio-political challenges, obviously. This region is not void of them. So we need to start with ourselves. So my motto is the sustainable change comes from you. So you should be the enabler. And I think everybody, every once in a while, should be reminded of this.
Thank you, Yulia.
That's great. Love a pro-human approach. Love a pro-small business approach. I guess I would just leave you with the Bitcoin kind of vision for a better climate moving forward. Really targets just this one area of the stranded gas and methane emissions. And so Bitcoin can play a role in that initiative. And I hope you just join us in Abu Dhabi if you're curious to learn more about the Bitcoin ecosystem and what's happening. This nation-state adoption idea really is transformational, not just for Bitcoin, but for how each country can become more sovereign in its money and more sovereign in how it handles its own energy resources. So just very bullish for the future of humanity, and Bitcoin's going to play a small role in that moving forward, is my opinion.
Great. So you heard the importance of SMEs playing a key role in this from a national perspective. We heard from Yulia on the importance of people. I think it's a very, very critical phase that each one of us understands how AI can support us. How is it that we can be a better citizen by buying brands that are more sustainable, by investing into ideas that may bring things to a very, very sustainable place. We've heard from John on how Bitcoin is the mother chain when it comes to the industry that we're operating in, moving towards being a very, very sustainable space. So I'd like to bring this panel to an end. I'd like to thank everyone for their time and for being patient with us. And if you have ideas that need support, if you're looking to crowdfund any ideas, feel free to reach out to us. We're all here as a community. This is where we will come together to support you guys in taking these ideas to life and hopefully making the world a better place. Thank you very much.
Moderation. Great moderation.
Thanks, Prakash.
Thank you, guys. And now, my dear friends, we have a presentation titled The Ripple Effects: How the Federal Reserve Interest Rate Discussions Shape Global Currency Markets by Danny Octavi, Asian Pacific Market Analysis Consultant at PGM. Everybody,
hello.
Let's welcome Mr. Octav.
Merci beaucoup. Ladies and gentlemen, honored and distinguished guests, good afternoon, Dubai, and a very warm welcome to each of you. It is truly a privilege to stand before such an esteemed group today. I am Denny Octav, and on behalf of Primetime Global Markets, we wish to express our heartfelt gratitude for your presence here today at WikiEXPO 2024. Your time and attention are invaluable. We deeply appreciate your commitment to being part of this vibrant event. As we embark on today's journey of insight, innovation, and opportunities, I'm so excited to share with you the perspective on how the Federal Reserve interest rate decisions shape global currency markets. We hope that that resonates with you, not just as professionals, but as visionaries shaping the future of global markets. Thank you for being here. Let's make this an inspiring and rewarding experience together. Thank you. Let us begin. The ripple effects. How the Federal Reserve interest rate decisions shape global currency markets. As we all know, the Federal Reserve, as the central bank of the United States, plays a pivotal role in the global economic landscape. Its decisions regarding interest rates not only affect the American economy, but also send ripples across international borders. And this impacts currencies around the world. So when the Federal Reserve raises or lowers interest rates, it sends signals to investors, affecting their expectations concerning economic growth, inflation, and overall market stability. So what are the impact of interest rate changes? Well, firstly, rate hikes strengthen the US dollar by attracting foreign capital, while rate cuts weaken the dollar. That means the depreciating currencies tied to the US economy. So, as investors and policymakers, we must be vigilant about the Federal Reserve's announcements. Why? Because higher rates offer better returns on investment, denominated in the US dollars, so attracting foreign capital inflows. Consequently, currencies of emerging markets can experience depreciation as capital moves toward what is perceived as a safer investment in the US. Now, let's dive deep into the current dynamics of the foreign exchange market. This really warrants our attention. As we navigate through this landscape, there are several key factors to consider. Geopolitical developments. These are key. Trade negotiation, political instability, and conflicts impact currencies. As we know, tensions in the Middle East, US-China relations can trigger volatility. It's essential for us to stay informed about these global events as they are intertwined with monetary policy decisions. Now, what is the role of the other central banks? The actions of other central banks, such as European Central Bank, Bank of Japan, others, they also shape Forex through their decisions. Their reactions create a domino effect, and this domino effect basically influences currency flow. Understanding how these institutions react to economic stimuli can provide us the insight into potential market movements. Market sentiment and speculation. Traders are human. We react to both fundamentals and speculation. So sentiment toward the Federal Reserve's action or geopolitical events can also drive volatility. Now, what are key economic indicators? Indicators such as employment rates, unemployment rates, GDP growth, and inflation figures are crucial in shaping market sentiments. When the Federal Reserve analyzes these indicators, it adjusts its monetary policies accordingly. Investors should closely monitor those indicators as they can lead to shifts in currency strength. When we talk about important economic indicators within the market, several key economic indicators and indices are essential for assessing potential currency movement and market trends. Here are some, not all, but some of the most critical ones. Now, what are your key economic indicators? Number one, GDP, gross domestic product, which measures economic performance. CPI, your consumer price index, which is the key measure of inflation. Producer price index, PPI, reflects inflation expectations. Unemployment rate indicates economic health, and NFP, which are non-farm payrolls, which reflects job growth and currency influence. Now, interest rates and trade balance. Higher interest rates attract foreign capital. That strengthens currency. Trade balance. Surpluses strengthen currencies and deficits weaken them. The CCI, Consumer Confidence Index. This is what measures optimism about the economy's future. Higher confidence leads to more spending, boosting economic growth. Housing market indicators, very key. Housing starts, sales, permits, these all provide insight into economic trends. And these metrics not only reflect consumer confidence, also their activity. Central bank reports and statements. This provides us the insight into the future monetary policy. Statements from officials, as you know, can significantly influence currency valuation. Before we conclude, I'd like to spend a few more minutes discussing the broader implication of the Federal Reserve's interest rate decisions, particularly for emerging markets and global trade flows. Emerging markets, the vulnerabilities and the opportunities. EMs, emerging markets, are often vulnerable to changes in US interest rate policy. When interest rates are raised, capital tends to flow out of riskier emerging markets and into the US, where investors perceive a safer and more attractive ROI. This capital outflow can lead to a significant currency depreciation in emerging economies, putting immense pressure on their financial systems. However, while emerging markets are vulnerable to such outflows, there are also opportunities as well. Countries that manage to maintain prudent fiscal policies and develop robust foreign exchange reserves promote political stability that actually can attract investment even during the periods of tightening by the Federal Reserve. So, the role of commodity prices. When the US dollar strengthens due to higher interest rates, commodities such as oil, gold, agricultural products typically become more expensive for countries with weaker currencies. Now, this can lead to inflationary pressures in commodity importing nations, and this gives them even more economic woes and challenges. So, managing risk in an uncertain landscape. Given these complex dynamics, how should then businesses, investors, and governments, how should they manage risk in the face of Fed interest rate decisions. Well, as usual, diversification is key. Both investors and businesses can mitigate the risk of currency volatility by spreading their assets across multiple regions and asset classes. Second, hedging strategies, including the use of currency derivatives, allow businesses to protect themselves from the unexpected swings in exchange rates. Lastly, the collaboration between the global central banks is critical. During times of market turbulence, coordinated actions such as swap lines between the Fed and other central banks can provide the essential liquidity to ensure stability in the global financial system. In summary, while the Federal Reserve interest rate changes are paramount, the foreign exchange market is influenced by a multitude of factors. To navigate this complex landscape successfully, it's crucial to not only be observant, but also proactive in analyzing how these elements interact. So, the recommendation today, stay informed and adaptable to succeed in the dynamic Forex landscape. No single factor dictates the future of currency markets. Rather, it is the intricate dance between these dynamics that chart the course for tomorrow's financial landscape. Merci beaucoup. Thank you very much. I just want to say one thing in closing. I really want to thank the Millennium staff, the organizers of the event, and particularly the international community that is here and present to host us. I can only say that I can feel Dubai today. And I want to thank you for making me feel so welcome and having been so helpful. And I look forward to coming back again soonest. Merci beaucoup. Bonjour.
Thank you. My friends, before we continue, I have a request. I think there is a credit card which was lost. Everybody goes like, oh. All right, so it's Washa Bank, it's Chinese bank, and it's color yellow color. There is no name on it, and it's debit. So if you lost it or something, you can check with the reception. If you can't find it, hopefully I can use it later on, yeah, if you don't mind. Now, my friends, let's continue with our discussions. And for the next, we are pleased to present a talk on the global problem, the intersection of financial inclusion and digital literacy in the AI era. Everybody, let's welcome Dr. Isha Farha Quraishi, the CEO of IFQ Technologies. Everybody, let's give her a warm welcome.
All right. A very good afternoon, ladies and gentlemen. I know we are towards, almost closing the entire session. After one or two sessions is going to be over. And we have already reached the saturation point, our attention span. And so I need to put more effort to get your attention. Well, no problem. All right. So happy to see you again. Let me introduce once again. My name is Dr. Isha Farha Quraishi. I'm CEO and founder of IFQ Evo Tech. And before my entrepreneur journey, I was working with cloud and infrastructure, platform and data center management with Hewlett-Packard, Dell EMC, VMware, and then I took a turn to artificial intelligence like all of you, where you are more interested towards more innovative technology, right? But today, I'm not going to talk anything about the technology, but I'm going to talk about the global problem. And something very interesting as well about me. I'm Mrs. Universe 2019 Solidarity, the first candidate to represent UAE at an international pageant. I'm also Mrs. UAE United Nation, and I love to talk and talk and talk. Well, there you go. So I'm going to talk today about the global problem, where I say it's a social and financial inclusion of vulnerable segments during AI era. When you know that The traditional financial services disrupted completely with the new technology, new innovation, AI in place, decentralized financial services, blockchain, cryptos, and whatnot. But however, we forget sometimes about a category or segment of people who are in the vulnerable society. Let's talk about them. According to the World Bank strategy, 1.6 billion adults don't have access to any of the financial services. They are not exposed to banking. They don't know what is loan. They don't know mortgages. They are not covered for their insurance, for their health, if they undergo any kind of disaster, loss, or theft. And the funny fact is that if you look at the global unbanked adults population, the majority half is coming under richest segment, which is 60%. Can you believe this fact? And the other half, which is 40%, is coming under richer, poor categories. Let me introduce you to a beautiful word called Jeevitam. It's an Indian word originated from Sanskrit. It means life, sustainability, living, or it's also called livelihood. Let's watch a video.
Money. It connects complete strangers. Through money, we build and we break. Money helps us fulfill our wishes. Some of us have a lot of money. Some of us have less. But money is a universal need for both individuals and businesses. Our interaction with money has transformed over the years. We build financial institutions that help us manage it. We can save it in a bank. We can take loans to invest in a business or to buy things we like. Technology has made money simpler for us. Money is now digital, and our lives have never been so convenient. But is it the same for everyone? For millions of people across the world, money is not simple at all. There are people we see every day, in our homes, our cities, and our villages, in a low-paid job for an industry often called the lifeline of our economy, living in a foreign land, sending remittances back home, the farmers who grow the food we eat, the fishermen who spend months away from home, and the millions of small businesses that we call the engine of our economic growth. Their interaction with money is very limited for many reasons. Irregular income, social status, limited education, distance, and many other factors all restrict their ability to save, borrow, and spend money with convenience. They cannot save for their children's future, invest in businesses, and step up the economic ladder. This basic necessity is even more crucial for people who are vulnerable to shocks, such as natural disasters, medical emergencies, and economic crises. Access to financial services would help to solve some of the world's most persistent problems, such as poverty and inequality. Around 1.7 billion people in this world do not have access to financial services. In Bangladesh, half of all working-age adults remain unbanked. More than 50% of them are women. Financial inclusion means that individuals and businesses have access to useful, affordable financial products and services that meet their needs. Transactions, payments, savings, credit, and insurance, delivered in a responsible and sustainable way. And in order to build an equitable world, we must focus our efforts to reach those who are left out. We must.
So, without me telling anything, you understood what I'm trying to say. So, instead of me talking from the emotional angle, let me now talk from a business aspect. Now, we all are number guys. We may drive more with the numbers and the dollars. Look at the market opportunity. So, we have taken samples from countries of Africa, India, Pakistan, Bhutan, Bangladesh, Sri Lanka. And specifically, I have real numbers of the real living families from India I was closely working with a friend of mine called Munish, who had dedicated his life day in and day out for helping the blue-collar and underprivileged. So look at this market opportunity which I'm talking here. 2 billion plus. We have bottom of pyramid population. BOPs are 2 billion plus. And India alone is 800 million. And 800 billion plus is a global remittance market. When I say that, the global remittance, the cross-border transactions are heavily coming from the blue-collar workers as well as small micro entrepreneurs. 4.4 billion global unbanked population, and that was 2022, and now it's 2 billion plus again. 250 million plus blue-collared job demand is being expected. And this is an untapped market for all of us. When I talk about livelihood, there is a synergy between livelihood and the financial inclusion. And I'm not just talking about the jobs, I'm talking about regular and reliable income generation. I'm talking about opportunities for growth and advancement. I'm talking about economic shock resilience and then sustainability of the environmental disasters, dignity and security, and long-term financial stability. This is called Garib. When I say this is vulnerable segment, this data is a sample from Indian population where you can see 200 million plus is a market size of vulnerable community. And you can see 100 million plus is a micro entrepreneurs, 50 million plus gig workers, migrant workers 40 million, and blue collar 80 million, and construction workers 60 million plus. And youth, the dropped out students, 3 minutes left. Okay, thank you. So we have 40 million plus dropped out as well as Tier 1 and Tier 2 and Tier 3 students, 60 million plus. Farmers, 120 million plus market size. Naris, which is women, which is 150 million plus market size. And now why this is so very important? Because the underprivileged population or vulnerable segment act as our economic engine for the local economy, which in turn contributes to the national economy and contributes to the global economy. And this is a screenshot which also says it's not just the poverty, it's not just the income that factors from exclusion from the financial services, but also the trust factor. This is exactly where I need your help, the stakeholder ecosystem. And we together work for financial inclusion is what I'm trying to say over here. So there are two things that I wanted to talk about, social inclusion and financial inclusion, where social inclusion is more about empowering them and listening to their voice and giving them the rights to take a decision, whereas financial inclusion is more about getting access to the financial services, mortgages, loan, and affordable tools and facilities for them to be actively participate in the global economy. And if you look at it, livelihood and inclusion, it's a synergy of earning and saving. When they have a livelihood, they make earning. However, financial participation to save is very important. Many businesses which is happening in the urban areas are not accountable. I can say my own maid who is there at home, she sends money to Uganda through another channel. And right now, she uses mobile pay as one of the platform. So that is the kind of potential market that we are talking about. If you're looking at the minimum income that requires $300 for a vulnerable society to transition into a lower middle class family. Financial and digital literacy, of course, these are very important. We as educated population to bring them into digital aspects and to use the financial inclusion. This is my Sophie. You remember we did discuss about agents. This is more about personalized insurance agent, personalized financial advisor who can take them to, facial recognition capacity. We can take through the scorecard prediction, the default of loan predictions, and many more. In the interest of time, I just have to skip few things. Now we know there is a problem here. Now we know there is a technology here. Now we know we have stakeholders. Now next is the approach. There are platforms like M-Pesa in Kenya, which is very useful. Similar platforms require for the population to go to transition mode. Understanding economic impact, AI-powered microloans, risk assessment for underserved population, digital literacy campaigns, and rural initiative using AI for education. Now, what needs to be changed? The stakeholder ecosystem. The government initiatives, developing low-cost, scalable solution, blockchain potential in financial access, public-private partnership, global collaborations, gender empowerment, subsidizing the digital tools for underserved groups, which is very, very important because many of them, it feels that it is not accessible, affordable, or available for the vulnerable segment yet. And then, of course, the engagement of the youth is the next big thing. Ladies and gentlemen, if we can solve one problem of financial inclusion, we are solving 7 different problems of Sustainable Development Goal of United Nations 2030. I'm sure that you agree with me. And now, just wanted to conclude by saying one message to everybody that let's work together to create a world where sustainable livelihood and inclusive growth are not just an idea, but the reality for billions of people worldwide. Thank you very much.
Thank you so much. And now, as we come to our final presentation for today, we are pleased to welcome Mr. Arash Asroush, Head of Product at 4+ Ventures. Ladies and gentlemen, let's give him a warm welcome.
Test. Okay. Hello, everyone, ladies and gentlemen. I'm so happy to have the chance to talk as the last keynote in WikiEXPO, and I hope that you all have learned and gained a lot in this gathering as a big event in Dubai. My name is Arash. I'm the head of products at 4+ Ventures, a venture building and VC company based in Sweden, North Europe, and we mostly focus on Web3 investments and building from the perspective of games and anything that is involved with blockchain ecosystem and so on. Today, I am going to discuss over the power shift that is happening in the finance. And then definitely you all are familiar with the term DeFi, but I want to take 10 minutes to go a little bit deeper to see that how DeFi is actually bringing power back to individuals from all around the globe. So we can see that the decentralized investments are actually replacing with traditional power structures that we are existing. We are all benefiting definitely from lots of loans and the opportunities that banks and legislators are providing for us. But are they really giving a hand to help us, or this is only a subsidiary for themselves? This is the question that we are going to go deeper together. The reason that we are going to focus a little bit on decentralized finance is that you can see that this innovative science is going to provide a peer-to-peer interaction rather than having intermediaries for providing opportunities for builders and those minds who are creative from all around the globe. In the traditional scope of investment, you can see that you are limited into the rules and those facts that the banks and some institutions are providing for you. Just like limitations that the banks provide for your taxes and the government's issues that we have for receiving any sort of help from any capital or a person who is interested in investments. But in decentralized way, there is actually no limitation, and it is a pure peer-to-peer communication between the investor and the person who comes up with an idea. Another perspective that decentralized finance is providing for us is the transparency. So when you are a part of an investment in a big capitalized, company method or something like that, you are always limited into censorship with the ideas that are being shared with you as a stakeholder. But in a decentralized finance, you are directly in touch much at the mercy of blockchain and smart contracts, that who is taking which part of the project and how the project is being developed and how it is going to bring revenue for you in the later scope or something like that. I have provided a diagram here, the pie chart, that represents that how centralized has been the global investments. So we can see that America, United States have had the biggest role in the previous decades. However, there are many big investors all around the globe that are interested to take a part, but their governments and actually some legislatory issues, banking system, and many other limitations are not providing the opportunity for them to take a part. And today, at the mercy of decentralized finance, we can see that there are even teenagers from those countries whose banking systems are not supporting them, but they are businessmen and actually investing on some successful projects. Consider even NFTs or any sort of things that have been really upbeat these days. But everybody is open to take a part and actually benefit from the revenue it brings. Also, we have had lots of fraud issues in a centralized traditional way of investments. You know that definitely there are some dangers like being hacked or whatever in the blockchain and decentralized senses. But the point is that the fraud percentage that we have had recently is incompatible with the opportunities of transparency that the DeFi is providing for us. And then imagine that you are one of those people who come up with an idea in, I don't know, Nigeria or somewhere in the world that the banking system are not allowing to receive external investments, and you are limited into their local laws and legislators. However, if you were allowed to be in touch directly with investors from other side of the world, and at the mercy of a smart contracts, your peer-to-peer communication in the the revenue generation could have had a more crystal clear effect on the results of the product you're building. Also, we have now the rise of decentralized finances that are providing all these capabilities that I mentioned, and on top of that, it is giving the opportunity for everyone from all around the globe to have and be capable of building its brilliant idea rather than being limited to some banking system of their own country. There are some examples that this powership is providing for us. In the blockchain, we have some concepts like decentralized autonomous organizations, or recently, if you have heard about it or not, we have node sales that are providing a very, very crystal interaction between investors and the producers of the products. And then a user who comes up with an idea can launch the products easily themselves, regardless of being limited by some other companies. Then accessibility, transparency, and security are the key features of DeFi and the new innovation of power shifting that is literally bringing the power back for the individuals and the communities. Now I want to take a minute to focus on the role of VCs and BCs in this matter. The point is that in a traditional way, again, even venture builders or venture capitals were limited into the limitations that the governors and the banks were providing. For example, they find out and come up with a brilliant idea from other side of the world, but the banking system is not supporting them to invest in them or bring some pool for them to build it. However, decentralized finance is actually breaking all these limitations, and it makes it even more powerful for venture builders and VCs to find out new ideas all around the globe and help them to build and actually bring revenue directly to the pocket of who are investing on them. And we have here the future that we are going toward. We cannot ignore the technology that is stepping in every perspective of our daily lives, even in the fintech, and actually all those parts that we are all maneuvering a lot on it. And I really am appreciative for the time that you spent for listening to my notes. Let's build it together to stay forever, the thing that we are building. Thank you. It was my pleasure.
Thank you. Thank you, everybody, for being here and being part of this amazing expo. And now it's true honor to be here with all of you today. We'd like to extend our deepest thanks to all our attendees. guest speaker and the experts who have shared their valuable knowledge with us. Truly, this is an incredible event. Now we come to the most awaited and exciting part of today's event, the Wiki Finance Award presentation, Dubai 2024. This is the final event of our Wiki Finance Expo 2024, and it holds a great significance. Dubai, as well known, is not the only heart of innovation, but it's also the global financial hub of the MEMA. This makes the location of our award ceremony even more meaningful as Dubai continues to lead and shape the future of finance and international scale. These awards represent excellence, leadership, and vision, and they honor those who dedicated themselves to ensure the growth and the integrity of the global financial community. So without further ado, let's begin the moment we've all been waiting for. We would like to continue from here by inviting the Vice President at Sales at WikiGlobal, Mr. Kyle, on stage to present the awards. So now, ladies and gentlemen, let's start with the first award presentation. Best Forex Partners Program, Dubai, goes to Lurenex. Congratulations. Everybody, let's give them a big round of applause. markets. Everybody, let's give them a big round of applause. Congratulations. Friend, we go back again for most trusted forex broker Asia. It's Assets FX. Service provider, it's Premium. NX. Gold Fund Corporation, Ltd. And now for best high-frequency trading technology, global Bitstone Technology Co. Ltd. Thank you. And now for best forex trading platform Dubai, it's Power Trading. Congratulations once again to all our awardees. Our outstanding achievements are truly inspiring. As we conclude the award presentation ceremony, we also mark the end of the Wiki Finance Expo 2024. We extend our heartfelt gratitude to all of you, the attendees, guest speakers, panelists, and experts, for your unwavering support through this event. This event wouldn't be possible without your involvement. And we are incredibly proud to have hosted such an enlightening experience. The knowledge shared today will be undoubtedly play a pivotal role in shaping the future of finance. And now, my friends, before we wrap up, I would like to remind our guest about the after party tonight at Al Nujum Ballroom at Shangri-La, Dubai. If you want to join us at 6:15, there will be a shuttle bus from the hotel at the backstage of the hotel, not the main entrance. It will be at the back entrance. Please use it. The shuttle will be there at 6:30 in Shangri-La, so be down at 6:15. Once you reach the Al Nujum Ballroom, please show your invitation card. My friends, I would say one more thank you to all of you, and this will be the end of our expo. Thank you all for joining us, and hope we will see you next year. Thank you so much. Enjoy your evening and have a good night.